Okay, hi guys, let's start off. In today's session, we'll be focusing on few more standards and one chapter. Now I'll start off with few quick standards: AS24, AS7, AS11 and AS20. This will be the agenda for the first session at least. Of course, little spill over to next. First we'll do AS24 and then move on to the next standard, guys. What is AS24 talking about? I'll just give you a quick background and tell you what we have to remember for exam. AS24 talks about discontinuing operation. Let me give you a background of a story of a company which had a revenue of close to 700 and they had purchase of whatever and net profit for the whole business was about 500. This came from two businesses. One business was into main construction. One business was manufacturing and selling of cement. Now if you look at their revenue, from construction they got roughly about 450, cement they got roughly about 250 in revenue. Net profit also, if you see, let's say it's around 350 from construction and just a second. Yeah. Fine. Let's proceed, guys. Sorry about that. So revenue, they had 450 from construction and 250 from cement, and net profit was roughly 350 and 150 from construction and cement business. Now this company wanted to sell the cement business. It is profitable, but they still wanted to sell because they wanted to focus on other things. So in this case, if they wanted to sell it, two options. One, I decide to sell this year, let's say 2024. But in reality, I might sell it, let's say only in 2028. Now, do I surprise my shareholders and tell them, hey, of 2028 only business is sold, this is the thing, or tell them now itself that future we might sell. Now itself I will inform that I might sell this business, correct? So, AS24 talks about discontinuing operation. This example is example of L&T, where L&T was in the business of construction and cement many years back, and they sold the cement business to Ultratech Cement, which is currently with Aditya Birla Group. So, until they sell, this 4 years gap, once they decide to sell and until they actually, or gap varum pathingala, in that gap I need to split and show my revenue or mainly my net profit as continuing and discontinuing operation. That is what this standard talks about. Quickly getting to our definition, what is important for exam over here. Okay, so if you look at discontinuing operation, the definition is the most biggest in this, biggest definition among all the standards, and the standard gets over if you understand the definition. The standard is all about telling you, identify, is it a discontinuing operation or no? Yes sir. Step 1, identify discontinuing operation. How to identify? Meet the definition. Definition met na, it's a discontinuing operation. Second, if it's a discontinuing operation, I have to disclose. Yes, what to disclose I have to decide. Are you following, guys? Then if it's a discontinuing operation, when do I start my disclosures? When do I end my disclosures? Simple. First we will come to that starting and ending. Let's take a simple example which I always give in class. Let's say for example, we'll take Ambrish is going to get married. Okay. If Ambrish is going to get married, now when will everybody know about that? When you get invitation, but invitation is when you know. But when will the world actually know? Marriage. But when will a small group of people, when they will know? When will the family know about that? When they put his profile on matrimony. Correct? See, marriage, they have not found the bride yet, but they are looking for a bride. So here also discontinuing operation, I have not found a buyer yet. I am looking to sell my business. So Ambrish, the moment he and his family decide and they put on the matrimony site, that's when it is a disclosure of Disclosure to the close family, forward to the family group, says Ambrish is available. Are you following? So same way, or second cases, if you don't put on the matrimony website, Ambrish himself one day comes and tells her, sir, I am married, or I already married, sir. Suddenly he tells. So it is basically whichever is happening first. Family decides and they find someone, or he decides and finds by himself. So same way here, when do I tell my shareholders, whichever happens first, MCQ question, we call it as initial disclosure event. So again to explain, we'll finish the standard in exactly 15-20 minutes from now. When is AS24 applicable? When AS24 application ends, what to remember for exam guys, exam oriented. So that's called IDE, initial disclosure event. When is the standard applicable? When should I start the disclosure? Breakup from continuing, discontinuing. Board approval of formal plan of discontinuance and public announcement. Matrimony profile. Are you following guys? So board is deciding, family is deciding and putting a public announcement, or enterprise entering into a binding sale agreement. Ambrish himself entered into an agreement by himself. So enterprise entering into an agreement even before board decide, enterprise entered into agreement. The deal was made already. They just have to do some formalities. So whichever happens first, board approval and public announcement, or enterprise entering into binding sale agreement, whichever happens first. Are you following guys? Clear? Earlier of these two. What is binding sale agreement? Or sale agreement. The confirmation of the sale. Are you following guys? This they'll ask in MCQ. When is the initial disclosure event? Next, when you will end, like imagine Ambrish, matrimony profile. When they will close the profile? Once marriage is over, or he decides not to marry. He tried for 5-6 years, then he decided to change his mind, decides not to marry, and he removes his account, deletes the account. Same way, this standard application will end if the sale took place or company decides not to sell anymore, no need. So, withdrawal of plan of discontinuance, when this standard application ends, applicability, whenever a sale takes place or you withdraw, disclose reason for withdrawal of discontinuance and stop disclosure as per. Sale now automatically we understand, numbers will drop. Otherwise, I will go and disclose. Are you following guys? So in this particular period alone, I have to disclose my core elements like net profit, cash flow statement. Cash flow statement has investing, operating and financing, operating, investing, financing. All these, the revenue of the company, all these should be disclosed, broken down into two parts. The income tax broken down into two parts. How much from continuing, how much from discontinuing operations. Are you guys following? Okay. That is what we will disclose during this period. Are you understanding guys? That only I have given here. Key disclosures. Nothing to memorize over here. Basically all items below PBT, profit before taxes there are. From there till the ending, till EPS. EPS and diluted EPS from continuing and discontinuing operation, I will give that disclosures. Are you following? Now let's say I decided to sell in the year 2024. I was actually able to sell in the year 2028 only. What to do in the 4 years? Ambrish put his profile in 2024. For 4 years, will the profile be as it is? He will update his increase in salary, latest photo. He will keep changing bio to see if something happens. Okay, sometimes you'll ask ChatGPT what bio to keep. Okay, so he will keep changing these bio. Like that, company also should update in these 4 years what all efforts they took to find the buyer. Are you following guys? That's it. Now coming to the main definition. Sir, all this is applicable only if it's a discontinuing operation. In this session, I am not going to take the effort to make you mug up the definition like we do, but I am going to focus on the key points in definition. Discontinuing operation is a component of the enterprise. For example, I am selling one chair here. No, it's a component of the enterprise that the enterprise pursuant to a single plan. The word single plan is key. Single plan means one day I decided. For example, let's say I want to sell this classroom. Today I decided to sell the whole classroom. Are you following? It becomes a discontinuing operation. Ground floor is being shut. Example. But same thing, let's say I am selling today chairs, tomorrow camera, next month lights, the month after that screen. Like that, different decision points to sell different assets, it's not a discontinuing operation. ஒரே நாள் I will decide and sell everything. Are you following, guys? Everything could be sold on the same day or different day. That doesn't matter. Are you following? So single plan, one decision, one plan to do three things: A, B and C. What is A, B and C? Let me come from reverse. Termination by abandonment. Here I am not selling the business, I am just abandoning it. For example, sir, Purila sir, I have a factory in Ukraine. Suddenly war came. Now I can't go and recover that building, I can't go sell that building, so I will terminate, leave it by abandonment. That business or that part of business component leaves my business in a single day. I decide I can't do anything else. Correct? Are you following? That is termination by abandonment. Second, let's say you have an old bike in your house. Parents got old bike. Nobody wants to buy that bike. What you will do? Spare parts. Okay, at least the engine or 1,000 rupees somebody will buy in second hand. Few parts I can sell for 50 rupees, 100 rupees. Correct? If I am not able to sell the whole classroom, whole component as such, then at least it's a part of it. But I decided to sell everything today. Say I want to sell this classroom. I'm telling classroom because you can easily visualize. You're here. Okay. I want to sell this classroom, but nobody is ready to buy. Then at least part of this I will sell. Why I am selling? Maybe I want to move to a bigger location, bigger classroom. It could be any. It could be profit or loss. Doesn't matter. The reason for sale doesn't matter in the standard. If you're selling, disclose. That is my second part. Disposing of the component assets in a piecemeal manner and settling the liabilities individually. Piecemeal distribution, dissolution of partnership. So basically, whatever I can sell today, I will sell and keep paying my liabilities. In balance sheet, I have multiple assets. Different days, I will sell different assets. Are you following, guys? So one thing is discontinuing operation, termination by abandonment. Next is piecemeal manner. Third is selling the business itself as a whole. Income tax, slum sale, amalgamation, purchase, full business as such is sold. Classroom, somebody bought it as such fully. Are you following, guys? So disposing of substantially in its entirety. Sir, we have 25 classrooms, sir. One classroom you are selling, not a discontinuing operation. Substantially in its entirety, the component through a single sale transaction by demerger, spin-off or hive off the component to the enterprise shareholders. This demerger means splitting the business into two. Spin-off or hive off means selling it to my shareholders. I am the company, you are the shareholders. I want to sell. Ningle vaangittu, you are floating a different company. Are you following, guys? For example, let's say classes. We have 25 classes, foundation, inter, final put together, classrooms. CA foundation la in one location I am selling 2 classrooms. No need. I am shifting online. Is it discontinuing operation? No. CA foundation business in Amikra. The whole line. Are you following, guys? Then it becomes a discontinuing operation. So far what is the definition, guys? Discontinuing operation is a component of the enterprise that the enterprise pursuant to a single plan is doing 3 things. One, disposing substantially in its entirety, or disposing in piecemeal manner, or termination by abandonment. Keywords only I am focusing. Now, whatever you are selling, whether in whole, piecemeal or abandoning, that should be, for example, let's say Apple has 10 factories, I am selling 4 factories. Still business is continued. Once COVID came, I closed down all my offices because we went online. But still business is continuing. They are saying what component you are selling, it should represent a major line of business. It should represent a major line of business or geographical area of operation. In full North India, I am shutting down the business. In full South India, I am shutting down the business. When I say geographical area, don't think only country. It could be a major geographical area or major line of business. Apple, major line, Apple Watch. Full watch they are discontinuing. Are you following, guys? For some reason. And that is identified separately for operating and financial reporting purpose. Very, very important. Identified separately for operating and financial reporting purpose means in the component ku or tani team irukku. Prakash is appointed for Delhi operations of this restaurant. He is taking care of the operations and financial reporting of this branch of this restaurant's branches in Delhi. I am shutting down everything in Delhi. Are you following, guys? That only is discontinuing operation. So what are the key points to remember, guys? Discontinuing operation is a component of the enterprise that the enterprise pursuant to a single plan. Now keywords, component, single plan. This single plan, what I am doing with the component, three things: terminate by abandonment, piecemeal manner, or disposing substantially in its entirety. Any of these three, that is a major line of business or geographical area of operations. It is identified separately for operating or financial reporting purpose. This is the key point. Okay. Now you learn the definition to an extent. Let me ask you few examples. You tell me, is it discontinuing operation idea? Okay. For example, I am shifting my factory from Chennai, Ambattur to Hyderabad. No. Is discontinuing operation? No. No. Okay. Let's say I am manufacturing multiple lace packets, blue, green, orange, all of that, yellow. So slowly I decided nobody is buying red. So I want to slowly discontinue red lace over a period of time. And on the production I am using for blue, green lace, top two sellers. Is this discontinuing operation? No. No. HUL has many soaps. 5 soaps, least most sold soaps. They are closing down. Is this discontinuing operation? Yes. 5 least sold soaps. Close on the operation. Discontinuing operation. It should represent a major line of business. It says 5 least. The percentage of that contribution to my revenue could be less than 5%. It's not a major line of business. Are you following? Now I have a huge plant and machinery. I am replacing that with another new plant and machinery so that my operations has become more efficient. Is this discontinuing operation? Like this they will ask questions. These are all not discontinuing operations. In the book they have given some clarifications in the study mat saying these are all not discontinuing operations. Generally these are not discontinuing operations. Gradual or evolutionary phasing out of a product or class of service, lace. Discontinuing, even if relatively abruptly, several products within an ongoing, this loss making, I told this HUL 5 soaps suddenly decided to shut down. Let's say I'm a travel company, I'm providing many services. COVID came, I have to shut down now. But it's not permanently. Are you following, guys? Next, shifting of production facilities. We saw Chennai to Hyderabad. Closing of a facility to achieve productivity improvements or other cost savings, replacing machine. These are all not discontinuing operation if you do it separately, but all put together, which meets the above definition, then it becomes a discontinuing operation. That's it. Standard. That's all, guys. Standards. Are you following? Is there a question in the study mat? One question in the study mat, if you remember. Correct? Only one question is there. Let's go do that. What to remember in the standard and the definition of the key points. What are the key points of definition, guys? Component, single plan. In single plan, disposing the full business substantially, piecemeal manner, termination by abandonment, that represents a major line of business or geographical area identified separately for operating and financial reporting purpose. That's it. Only one question is there in our study mat. Which one? Yeah. Okay, this is the question. One question study mat. I think previous study mat didn't even have this question, but it was an RTP. They added now in study mat. Rohini Limited is a manufacturer of passenger cars and commercial vehicles. It's actually Tata Motors. Real thing. The company is working on a strategic plan to close down the production of passenger cars and to produce only commercial vehicles over the next 5 years. However, no specific plan has been drawn up for sale. Single plan, not there. Neither for the division nor its sale of assets. As part of its prospective plan, it will reduce the production car by 20% annually. It also plans to establish another new factory for manufacture of commercial vehicles and transfer of employees in a phased manner. Is this discontinuing operation? No. Answer? No. Are you following, guys? Can gradual phasing out be discontinuing operation? No. We saw in definition, gradual phasing out is not a discontinuing operation. If the company passes a resolution to sell some of the assets in the passenger car division and also transfer other assets of the passenger car to the new factory, Is this discontinuing operation? No. Why no? Shifting of production facilities, not a discontinuing operation. No. Third one, generally yes irukonu. Idha moonu me no kudutha eppadi, but generally we don't know guys. We can't predict, I say no. How would you answer to about 2B if the company resolves to sell the assets of a passenger car in a phased but time bound manner? Resolves to sell, now it's like they've taken a decision, like a piecemeal distribution. Then I will take it as yes. Are you guys following? That's it. So you will look at the answer, they write the full definition once, at least the key points, and then yes, phased and time bound program resolved in the board. Other single plan. That resolved in the board is matter, not the phased and time bound matter. Resolved by the board indicates the closure of the passenger car in a definite time frame and will constitute a clear roadmap, and it's considered as a discontinuing operation. The minute it becomes discontinuing operation, you have to update. For Ambrish marriage, whatever will update, about him will update everything. Like that, about the discontinuing operation, nature of discontinuing operation, what business is there in, period. How soon do you think we will sell? That we can't tell for Ambrish how soon he will get married, but here we have to, my expectation, how soon I will find a buyer, amount of revenue and expense for the DCO, pre-tax profit, net cash flow, investing, all of that. Are you following? Basic things, cash flow breakup, pre-tax breakup, revenue and expense breakup. Can I have multiple DCOs? Multiple DCOs? Or only one DCO? Multiple DCOs. I can have 10 businesses and the 3 I want to sell. Possibility is there. So in that case also standard is applicable. Multiple disclosures. Ambrish might have siblings. Multiple matrimonial account. Not one account for all. Swipe to see next photo. Not one. It will be different. So different disclosures for each. Are you following guys? So they are saying if there are multiple DCOs, information should be for each DCO. That's it. In simple, whatever is there below PBT, you break it down. That's it. Are you following guys? With this we are done with AS 24. Are you guys following? Perfect. Okay. AS 24 is done. Now in this session we will try to knock off a lot of standards in this space. 24 is done. Next let's go to AS 7. Along with AS 7 let me do AS 9 also. Okay. Both are related standards. Both relates to revenue. 11 also will do, or whatever I wrote, everything we'll do today guys. Okay. I also want to do a chapter. Let's see how it goes. Fine. Clear? Okay. Next AS 7, AS 9. First let me finish AS 9. Again I am not teaching the concepts. I am only teaching you the core provisions. Next, in the next half an hour I will target to close both of these. Half an hour, 40 minutes. Okay. AS 9 talks about revenue recognition. What is the problem in this standard? What is the issue, sir? Very simple. I will ask a question for those who are watching. If you know the standard, if you are able to answer this question, fast forward to the next standard video. Online live recording everybody. You can choose to sleep also if you guys are here. Now, some of you might know the answer. Good if you know the answer. Ideally you should be knowing. Let's say today's date is what date? 3rd April, okay. We are close to the year ending, okay. Let's say on 31st of March, night 10:30 p.m. you booked a night show movie, okay. When you made the booking, let's say at 6 p.m. you decided financial year ending, I want to celebrate. So you booked night show movie 10:30 p.m. Movie is supposed to get over at let's say around 1 a.m. You made the booking on the PVR app at 6 p.m. Movie started at 10:30. Movie got over at 1 a.m. I am PVR. Revenue is for PVR. So their entry is not debtors. Bank to sales. This sales entry. When will I pass? 6 p.m. on a booking or 10:30 p.m. or 1 a.m. What's the time? For those who said 6 p.m., what if the movie gets cancelled after you book? So I will recognize revenue for 31st March and do sales return on next day. Now PVR gives an option to even cancel movie tickets and get refund if you book within the time. Correct? Are you aware of that? I am aware. I have done that many times. Okay. Fine. Now, in this case, what to do? So, if I book at 10:30 also, okay, what if the movie starts, interval, projector is not working? Sometimes happens in theatre, they will tell, take the refund and go home. Now what to do? Are you following, guys? That means it's important when I recognize the revenue. So this standard is only two things. What is revenue? When to? Standard has only two parts for exam. Theory based standard. Okay. What is revenue? When to recognize my revenue? Are you following, guys? Clear? Now, why revenue ku mattu or tani standard? Other items like expense and all, these are very common. Rent is common everywhere. Revenue only will change based on industry. Telecom go different, education different, health sector different, auto sector different. It is unique for each business how they earn money. OTT, all of that, correct? So this standard talks about recognition of revenue. So first we should learn what is revenue. Of course, not applicable for 7, 19 and 12 because we have separate standards for that. Okay. Now, revenue means what they are saying. And one more question, is GST part of revenue? No. Because GST is collected and given to the government, not revenue. So, revenue means gross inflow of three things: cash, receivables or other consideration. Let's stop over here. I'll explain. Revenue means gross inflow of cash, receivables na debtors. Debtors to sales, cash to sales. Other consideration is what? Kind. Barter, giving goods and getting goods. So I can get exchange of goods. Three things. Revenue means gross inflow of cash, receivables, other consideration. How I am getting cash? Simply I am getting cash. I am getting revenue means inflow. Inflow of cash, receivables, other consideration from three things: from sale of goods, rendering of services, used by others of enterprise resources yielding interest, dividend, royalty in ordinary course of business. Let me explain. The definition splits into three: gross inflow of cash, receivables, other consideration. These three comes from three things: either from sale of goods, rendering of services, used by others of that will come to that part. So I can get cash sales from sale of goods, credit sales from sale of goods, other consideration from sale of goods. So 3 into 3, 9 combinations. Are you following, guys? Okay. That doesn't matter. So in simple words I can again write from sale of goods or rendering of services or used by others, you will get three things. What are the three things? Cash, receivables and other consideration. Is this clear, guys? So one is sale of goods, one is rendering of service, which we know very clearly. Multiple examples for sale of goods. Yes, Riya, give an example for sale of goods. Give example. Selling laptop. Okay. Rendering of service, give an example of service. Saloon. Okay. Use. Okay, fine. So saloon example, all of that. Now you ask the question. In saloon example, when will the revenue be recognized? Correct. After the service. In restaurant, when will revenue be recognized? Sometimes I pay before, sometimes I pay after. Let's say I entered restaurant at 11 p.m. on New Year night. I was there till 4 a.m. I paid bill only at 4. Now when I will recognize revenue? Sometimes you have to pay in advance. When I will recognize? Problem is there, guys, question. We will get the answer in next 5 minutes. Third point, used by others of enterprise resource. My resource, somebody else is using and yielding what, guys? Interest, dividend or royalty. Very simple. My resource, cash. This morning only, bank account, I invested in Sun TV shares. 2 shares I bought to attend the AGM, which will happen in August and September. So I bought shares now. Now when I buy Sun TV shares, my resource is with Sun TV shares. What I will get in return? Dividend. Let's say my 1000 rupees I will keep in bank, FD. Now what I will get in return? Interest. So used by others of enterprise resources, my resource, yielding what I am getting? Interest, dividend or royalty. Why will I get royalty? I am a cinema production house. I made a movie, copyright. That script somebody else is buying. and they're paying me money. I compose the music. Somebody bought my right for using that music and they will pay me. T-series, franchises, all of that. Are you royalty for franchise? Are you following? So then that means for music you have to pay. See, some people pay, some people take it without paying with some changes. That's a different discussion, guys. Who is the music director? I didn't tell, guys. Fine. Following, guys. This is the ordinary course of business. Royal. Now the standard says this is revenue, guys. First part of the standard is over. So revenue means, again quickly one last time, because in exam definition sorry, revenue means gross inflow of cash, receivables, other consideration from sale of goods, rendering of services used by others of enterprise resources yielding interest, dividend, royalty. In ordinary course of business. Mock test paper MCQ one case. How many marks? 6 marks came from this standard yesterday. One question came. Okay. Fine. Next, how to recognize revenue? The first condition is this. They are saying to recognize revenue, there should be no uncertainty in amount, no uncertainty in ultimate collection. For example, student came, inquired about the class. So, super sir, I am going to join the class. And he said, I will come, go outside, withdraw from ATM and come. I am waiting for him to come. Can I recognize revenue? Because there is uncertainty in ultimate collection. We go to a shopping mall, we'll tell I want to buy this shirt. Wait for me, sir, I will come back and buy. Can the shopkeeper recognize revenue? No. Uncertainty in ultimate collection. What is uncertainty in amount? Uncertainty in amount. The amount that you have to pay is not certain. What kind of service? Amount payable is not certain. After service only I will know. Telephone postpaid. Postpaid. I cannot recognize bill for this month until the month ending is over. Are you following, guys? Clear? Credit card bill charges usage. So electricity, classic example. Uncertain. So TNB can't recognize revenue until computation for that month is over. Yesterday's question in mock test paper, everybody focused on specific conditions. Everybody forgot general conditions. Okay. So two important things. No uncertainty in amount, no uncertainty in ultimate collection. This is common for every revenue recognition. If you can recognize revenue. That means amount is certain, collection is certain. 100% certain I will collect the money. Then only I can recognize. Okay. Fine. Let's proceed. Now coming to specific cases. What are the specific cases? You can get revenue from 3 sources. Used by others of enterprise resources, rendering of service, sale of goods. Used by others of enterprise resource. Very easy. What are the 3 resources we are going to get? Interest, dividend and royalty. Very easy. Dividend, section 123 of Companies Act says, once dividend is declared, it has to be paid within 30 days. So I will recognize revenue when it is declared. I am the user. ITC declared dividend today. I can recognize today itself because as per law it's payable to me within 30 days. We can't revoke. Correct? So when the dividend, when the right to receive is, that means when 123 gets activated, when they declared it, shareholders approved. Are you following, guys? Second, interest on accrual basis. What is this, sir? This is where investment account comes in. Let's say, take a simple example. Let's assume this is 31st of March. I invested in debentures. Okay. Let's say I invested in debentures. Okay. I invested here, guys. Ignore that part. Okay. I invested in debentures on 1st Feb of the year. They told we will pay you interest only yearly once. Correct? We mostly get interest yearly once. So today only I invested. Will I get interest today? Artha Vasana I'll get. So let's say this is 1st Feb 24. I am expecting interest on 1st Feb 25. Now the year ending came, 31st March 24. Let's say I invested 1 lakh in debentures. I have to get how much, guys? Let's assume 10%. I have to get 10,000. Now as on 31st March, how much will I get? Nothing. 31st March, how much will I get? Only next year February I will get in my hand 10,000. But should I pass any entry for this till 31st March? Yes. Because for 2 months I have the right to receive interest using the concept of, so interest receivable. Na entry poduva. Interest receivable debit to interest income account. Are you following, guys? What is the interest for 2 months? 10,000 into 2 by 12. How much? 1,667. 1,667. I will pass as revenue for this year in my P&L. Are you guys following?
Yes, sir.
Understanding? That is what they are saying. Interest will be accounted on accrual basis, whether I receive the interest or not. What about royalty? Royalty, for example, let's say music composer, let's say Rihanna, put her songs on Spotify. Okay. Now every time you listen to a Rihanna song on Spotify, Rihanna will earn some money. Every time more songs are being played, more money to the artist. That's how it works. Okay. Now, but Rihanna can't get 2 paisa every day. They will accumulate everything and give once in 6 months, once a month, bulk amount will come. Now, let's say she put a new song on 1st Feb. They told first 3 months no payment. Let the song become popular. Feb, March, April. For these 3 months put together, 30th April I will give you the payment. Spotify told. Now 31st March came up. Can I recognize revenue?
No.
Can I recognize revenue, guys? If it's accrued, if Spotify is giving me a running ledger, okay, this is the amount receivable as of 31st March, then I can recognize. Okay, 2,04,000 receivable as of 31st March. Kaila varla, but amount receivable, I will recognize. But Spotify is saying I can't tell the amount until April. Will I recognize? No. Because of general condition, no uncertainty in amount. Ultimate collection vandro, but amount is not certain. Are you following, guys? But if amount is certain, then I will recognize. So, for interest also it's on accrual basis, on proportionate basis. Royalty depends. Now, Rihanna example is one case. Each musician or each artist will have their own way of royalty. For example, if you take Friends TV show, the original cast who acted in 1990s, till today they get royalty. If you take Jordan's, the basketball player, Michael Jordan, he tied up with Nike for Air Jordans. He retired long back, but still he makes more money now than when he used to play. Every Jordan shoe which is sold, he gets 5% royalty. So each person makes a different agreement. As per terms of agreement, generally accrual basis for royalty. Are you following? Recent factor, actually I was reading recently only, that Jordan basketball player earns most money now than when he was playing, because of that one agreement he made with Nike, that for the rest of their life, as long as that shoe is people are buying, he gets 5%. Yes, doubt.
Sir, dividend வந்து நீங்க என்ன சொல்றீங்கன்னா நம்ம டிக்ளேர் பண்றப்பே நம்ம வந்து ரெகக்னைஸ் பண்ணலாம். பட் இன்ட்ரீம் டிவிடெண்ட் வந்து பே பண்றப்ப மட்டும் தான் நம்ம வந்து ரெகக்னைஸ் பண்ண முடியும். ஏன்னா இன்ட்ரீம் டிவிடெண்ட் வந்து ரிவோக் பண்றதுக்கு கூட சான்சஸ் இருக்குல்ல.
Interim dividend can be revoked only in exceptional cases when all the shareholders pass a unanimous resolution. But once interim dividend is declared, I have the right to receive established HR, then I will recognize. Are you following? The problem comes only if this falls in 2 financial years. If it's within the same financial year, no problem, no. It won't impact much. Okay. Next. Coming to sale of goods. Sale of goods, guys. Are you following? Now, sale of goods, when the ownership will be transferred, we can discuss a lot over here, but I'm just getting straight to the point. For example, let's say 31st March, you went to OnePlus store. On 28th March, you paid advance. Then on 30th March, again you went, paid the full 100% amount. He told, sir, stock is not yet coming, you make the payment now. 4th April, you went, he gave the phone to you. Are you following, guys? When I will recognize revenue? When will OnePlus recognize revenue? Are you following? What if OnePlus has a new scheme? Buy the phone, use for 3 days and then pay. So you bought the phone on 30th March, you are going to use for 3 days and you are paying on 4th April. Payment can be this side, delivery can be other side, it can be in any combination. How to recognize revenue for goods? Sometimes payment is faster, sometimes payment is later, sometimes delivery is faster. We don't know which, it can go in multiple combinations. McDonald's I pay first, Sangeeta I pay last, Sangeeta hotel. Okay. Now, are you following, guys? Okay. Now, follow, guys. When do I recognize, guys? When do I recognize? I told because I'm seeing the face. Okay. So when do I recognize, guys? When do I recognize? They are saying you recognize only when the ownership, when the property in the goods is transferred to the same foundation sale of goods act. Ownership is transferred means property is transferred, is nothing but transfer of risk and rewards. Only when risk and rewards are transferred. The exception is AS 19 finance lease. Are you following, guys? Here, even though in AS 19 lease, even though ownership is transferred only in the end, risk and rewards are transferred in the starting. So I provide depreciation, the lessee, correct? So when the seller has transferred the property to the buyer for apona gift varadunga. Consideration is mandatory. I paid consideration, got ownership. What do you mean by ownership? Transfer of risk and rewards. Are you following? Let's give an example to understand this better. Let's say on the same day, guys, okay, let's say you go to Titan watch showroom, you purchased a watch, then you went to like EA mall, you purchased it. After buying that watch, you went to watch a movie in the mall itself, PVR. Fine. You told the watch showroom, keep the watch with you itself. I will come back and take it. So payment over, delivery over, everything came to me. I gave the possession back to him, telling him that you keep with you, I'll come back and take. After movie, when you went back, the watch was damaged, earthquake came, all the watches fell. Now, who will bear this loss? Buyer or Titan showroom? Buyer. Because here risk and rewards are already transferred. Now I become a bailer, he becomes a bailee. Are you following, guys? Only the buyer will bear this loss. Are you following, guys? So you have to see when risk and rewards are transferred. Each sale agreement decides when risk and rewards are transferred. When you go to a supermarket, let's say you take a Pepsi bottle, it fell from your hand and it broke. You have to pay. That time you can't tell, hey, I didn't make payment, I didn't take invoice lam podla, why should I pay? Anga you have to put a board. If consider anything touched and broken, sold. Consider it sold if you break something. You would have seen that board, guys. That means there risk and reward is transferred when you buy it. That's it. Simple. What remember for exam? Sale of goods, transfer of risk and rewards. Next, service. Service they are saying very simple, guys. Check what kind of service is it. Is it a service that gets over within a day or within a very short period of time, like movie, saloon services, then saloon short period, short period, okay, short period of time. Next, Zomato service. All these are short services which gets over at a single, it's basically a single act, one-time activity, one-time service, Swiggy delivery. Here, I will recognize one service is over. So, in the first PVR example, only after movie is completed, then I can recognize revenue at night 1 AM. Are you guys following?
Yes, sir.
Service involving multiple acts. So, what is multiple acts, sir? Service involving multiple acts, now long period, class, education, school, or CA interclass. You join CA interclass in the month of Feb. It is going on till August, almost 6 months. Do I recognize in Feb, March, April? When should I recognize after student pays fees? No. This standard doesn't care about when you make the payment of fees. Are you for only accrual? So they are saying if class is for 6 months, you recognize on a percentage of completion basis. Yes, your name. Oyo some name. Kaushik. So Kaushik is like, sir, Oyo, he booked Oyo room for 90 days. Okay. Now, and he booked Oyo room for 1 day. If he books 1 day, it's service involving single act. Then he will recognize revenue on the same day once the service is completed. The booking is over. Are you following? Service involving multiple acts. 90 days Kaushik booked the room. Then proportionately on a day-to-day basis, he will recognize revenue. Not he, Oyo will recognize revenue. Are you following, guys? Understanding? Clear? So it's not about the type of service, it's about the period of that service. Clear? Done. This is the standard. So for exam, what do I remember? We still have few special cases, but that will quickly close. Revenue means gross inflow of cash, receivables, other consideration from sale of goods, rendering of services used by others of enterprise resources, yielding interest, dividend, royalty in ordinary course of business. Super. Recognition criteria, we have primary and primary is for everybody. No uncertainty in amount, no uncertainty in ultimate collection. Super. Special conditions for each special case. Sale of goods when transfer of risk and rewards property. Used by others, interest, accrual. Royalty, accrual, generally accrual or based on contract. Dividend, right to receive established. Services, to single act or multiple acts. Single act and services, multiple acts, proportionate basis. Construction comes where? In this example, construction comes in service or sale of goods or service or sale of goods or service. Okay, this construction service is a single act or multiple act which goes on for many years. At least few like class, it's within a year. SIM card, insurance, it's within a year. I pay for every year. It might split to 2 financial years. Construction of metro goes for 7 years, 10 years. So it is a service which goes for multiple years. Therefore, I have to use percentage of completion method now. But since it's for a very long period, we have a separate standard to help you find out how to compute that percentage of completion. That's it. Or a special case, AS7 construction contracts is applicable only for construction companies like L&T, DLF, all these houses, all of that. Clear, guys? Now, few more special cases that we have here. Take this new question added in the book. This is the Titan example, guys. Even though it's a new question, we already discussed. Titan. Seller can record sales when delivery is delayed. Watch, I didn't delay. Even now, delivery is delayed at the buyer's request and request seller to hold the. Remember the Titan example? In that case, Titan can recognize revenue where the goods are specifically identified and cannot be transferred to another. I made a customized watch for Ambrish for his wedding. No, I can't transfer to somebody else. I already paid now. He wrote the name. Okay. Delivery is delayed at the buyer's. Ambrish told, keep the watch. Tomorrow I will come and surprise my fiancé. So keep the watch with you. So I kept it at his request. Goods are ready to be delivered to the. When he comes, he can really take it and start using it. Or he can take it and go. No more work from my side. These 3 conditions are met now. Then I can recognize revenue. Sale is over. Following. Let's take few other businesses like Zomato. For them, they are an agent business of. If you see last 10 years, Zomato, Oyo Rooms, Ola, then Make My Trip, East My Trip, all these companies, Flipkart, Zomato, Amazon, Zepto, Dunzo, all these are agent businesses. Basically, they're agents. Redbus, they don't provide service. They connect the buyer and seller. Leave Zepto out of it. They actually sell. But others, they connect the buyer and seller. Are you following, guys? What is the revenue? What is the revenue for Zomato? Commission. That's it. That means 2 options. Will I show sold biryani, Zomato sold biryani, revenue 250, paid 200, commission 50 will come in net profit, or I have to show revenue itself is 50. Perfect. So for agency businesses, revenue itself is 50. Are you guys following? That is what I have to show. Next. These are special cases. Quickly, if I finish, agency business, na revenue is commission. Consignment sale, sale is complete only when the goods are sold to the third party, not when consignee takes it. Sale or approval by return basis, foundation. Sale is complete when the buyer actually accepts it or he doesn't reply for reasonable time, or if the time given is completed. Next, Warranty sales should be recognized immediately, but provision should be made to cover the unexpired warranty. This they have asked question previously. Sir, iPhone, sir, 1 year warranty. What is saying? I will write 1 lakh as sales, but 1 year warranty. You might come and ask, so I will create a provision of 5%. 5,000 as provision for. Upon what is the net revenue I recognized? Next year, I will reverse this 5,000. That will become revenue of next year because still there is a provision. Are you guys following? Clear? Understanding? Okay, perfect. So this is one of the different scenarios that we have. Now we will straight away go into questions before I jump to AS 7. I will randomly do a few questions in AS 9. Okay, look at the question 1. New question added in the new study mat. Quickly have a read, guys. Recording, pause and read. Audible, guys. Those who are sitting in third floor, if you can't hear me, come and inform soon. Okay. Fine. Proceed, guys. First, Zigato means here Zomato. Zomato is running a food delivery business where they have given price is 200, delivery charge 60, GST 40, total 300. What is the revenue for them? Revenue is 60 na revenue. Nothing else is revenue. Are you guys following? Clear? Next. Let's go to some other question. Question 2. AB sells goods to CD. CD is having significant cash flow issues since last few months. However, it is trying to raise funding through bank loan to be able to run its operations in future. On 5th May, CD is able to seek funding and is expected to be able to pay for the goods in future. At the time of sale, it is difficult for AB to ascertain whether it will be able to collect the money due to poor financial conditions. Can I recognize revenue? No. Uncertainty in ultimate collection. Question 3 is opposite. There is no doubt. So there is no reason to believe that they won't collect. Therefore, there is no uncertainty. They will recognize as revenue. Okay. Dividend. Question 4. Enterprise recognized 100 lakhs on accrual basis from dividend, but the dividend was declared only on 15th June, proposed on 10th April. When do I recognize? 15th June. That's when I can recognize. Let me take some, this question. Question 6. The board of directors decided on 31st March to increase the sale price of certain items retrospectively from 1st Jan. In view of the price revision from 1st Jan, company has to receive 15,000 from its customers in respect of sales made from 1st Jan to 31st March. Accountant is doubtful whether to include 15 lakhs in revenue. Can he include? No. It's like no uncertainty in ultimate collection. See, I already sold something to you. Now I'm coming and saying, hey, I changed the price. You please pay extra price. Will you pay, guys? No. There's uncertainty in ultimate collection. These are all simple questions you can go through. I'm just going randomly few questions. This is a new question again. This sale order and base are very simple, guys. You have already gone through this. Last question. Question number 3 is a new question added in the new study mat. So we will close this topic with this question. Okay. For the year ended 31st March, KY Enterprises entered into a following transaction. On 31st March, KY supplied 2 machines to its customer ST. Both the machines were accepted by ST on 31st of March. Super. Machine 1 was a machine that was routinely supplied by KY to many customers and the installation process was very simple. நீங்களே install பண்ணிக்கலாம். Machine 1 was installed on 2nd April by ST's employees. When the sale took place? Before 31st. On 31st March. 31st March I sold, but installation on 2nd. Mission 2 being more specialized requires additional installation process and is more complicated, requiring significant assistance. They are given cost and selling price for both. Mission 1, revenue 3,20,000, cost is 1,60,000. So profit is correct. Mission 2, sale is 3 lakhs, cost is 1,50,000, installation 10,000. So what's my revenue? 1,40,000. Correct. Now they are saying Mission 2 was installed between 2nd and 5th April. Question and answer. Always read the question. You should know what they are asking. How should the above transactions be recognized for the year ended? Let's go mission by mission. Mission 1, is the sale completed? Mission 1 was routinely supplied. 31st March itself, sale took place. Only delivery installed on 2nd. I told delivery doesn't matter. It's about when the risk and rewards are transferred. Here, where is the clue for risk and rewards? Both missions were accepted on 31st of March. That is only important. So since on 31st March missions are accepted, for mission 1 I will recognize full revenue of 1,60,000. Correct. What is the revenue of mission 1? 1,60,000. I will recognize fully for mission 1. But for mission 2, my installation fee is something I will collect up. But my revenue is actually not 1,40,000. 3 lakh minus 1,50,000. Then I will get 10,000 when I install. Only installation is pending. That means a particular service is pending. But sale is over because they accepted the mission. So how much is the revenue? 1,50,000 I will recognize for that. But what I will not recognize, rendering installation service cannot be recognized because installation is not yet done. This 10,000 I will recognize only on next year. What if the customer never accepted the missions? He told, I will accept only after installation condition put up. Then the full revenue is recognized in the next year. This year I will show as advance receipt, but revenue will be 0. Are you guys following? Clear? With this we are done with AS 9. Perfect. Okay. Super. புரியல. Can we proceed, guys? Get ready in 30 seconds. Yes, person or doubt? Page 24, termination by abandonment. Yes. No, termination by abandonment. Now his doubt in AS 24 is, sir, I abandoned it. How long will I show discontinuing operation? Until you fully abandon it. Generally, I abandon panna and the 1 year I will show difference. Next year I will show only balance continuing. Sometimes I will wait 2 years if the war gets over. Idhal poi recover pannalama. Otherwise fully gone. Generally abandonment epo varum, yarume leave war, exceptional case. Nobody is there to buy. So I will leave it. Are you following? Can we proceed further, guys? Yes, okay. Now, which one? Correct. Yeah. Fine. Got it. Yes. Yesterday, just one clarification, guys. AS 10 we discussed, but since some of them had a doubt, I want to clarify this part. AS 10 we saw definition. Asset is used for admin purpose, rental to others, all of that. And we told AS 10 does not include biological assets and wasteful assets. But this has an exception. Which has barren plants. That means what is the exception to exception means? Bearer plans ki AS10 is applicable. Just want to clarify that because some of them had doubt. Clear guys? Okay. They have never tested bearer plans in any exam. So you mark that as important in AS10 MCQ. They have never tested. It's part of syllabus. They have never tested. Now let's proceed. Next standard. If you are in Chennai, those who are watching online, if you come to Chennai, in Nungambakkam High Road is where we have ICA. Okay, our class is very close by. Narande polam. For 5-10 minutes, 10 minutes walk, we can reach. Right next to ICA is the income tax and GST also. Same scene in Delhi also. Delhi also ICA and income tax pakat. Okay. Earlier days income tax office was so small that they used to come and use ICA office for doing some work sometimes. Now they have expanded, they made it much bigger. Then opposite what you have here? Taj is there. And then if you keep going this side, there is one huge apartment called One Crest. You would have seen one apartment there. Okay. Huge apartment. It will look very good from outside. In that apartment, one house is how much? If you want to buy one house, it's a flat guys, not individual house. One house is roughly about 15 crores, 2 crores. 15 crores roughly for a 4 to 5 BHK. So 15 crores means, let's say you clear CA and you get a salary of 2 lakhs per annum, per month, sorry. CA, I was 2 lakhs per month is something you can easily get in your first job if things go well. Up to 2 lakhs you can easily get. Okay, 2 lakhs per month into 12 is 24 lakhs in a year. 15 crores divided by 24 lakhs. Assuming you are saving everything. Vanda kasu full of savings, sir. I am not drinking water also. Okay. How many years you have to earn? How many? 6.25. 62.5 years. Otherwise, when you become 70-80, you can buy in the same road of ICA one crest house which is worth 15 crores. That house is premium because celebrities, they all buy that house. Same opposite to that. Opposite one crest, you have another apartment called VGN. That house is roughly about 3 to. From there if I see, you can see this house. You can even buy a bigger house here, but opposite only. This side it becomes 15, this side is 3 to 4. Let's say 4 crores guys. Why I want 15 crores house? 4 crores house in Chennai. Same 24 lakhs. How many years should you work? How many years? 16 years you have to work, where you have to save the full salary guys. The increment, see, it's not the exact computation, but I am putting the full salary. Generally, we will save half, then increment will come roughly 10 to 16 years if you want to buy one house. Correct? Are you following? Now, easy or difficult? Now, I am not saying you have to buy a house, guys. Some people tell house investment is waste, sir. I am saying, okay, if you want to earn so much money, you have to work for these 60 years, get 2 lakhs per month as salary. BCom graduate another salary per month. 25,000 per month average starting. I don't want to do the computation, leave it. Okay. Now, that means if you want to get through over here, construction, this revenue of 15 crores and 4 crores, VGN and one crest will recognize as per AS 7. Now you are learning how to recognize revenue for them. When are you going to earn that revenue? That means you have to be a CA. That means if you have to be a CA, it's going to take so much time. That means for you to be a CA, next 30 days are important for our exam. Okay. That's why you are here in marathon. Now, it may not actually take 60 years, but once you become a CA, the avenues are multifold. Why? Because you might start with 2 lakhs per month, but depends on how good you are at. You can even start earning 2 to 3 crores per year. You can start earning 10 crores per year. There are still CAs who earn 20 crores a year. There are CAs who earn 20 lakhs per month. It doesn't matter about attempt. It matters about how skillful you are, how you scale in your career. But that's a problem for later. First CA now the problem is AS7 account. So to get through inter, then only you will see these big accounts. So now this 30 days is very important, guys. That's why marathon. Let's come back. Distraction over. AS7 accounting for construction contracts. I will just give a simple example. We'll understand how revenue is recognized in AS7. Quickly we'll go do a sums. In AS7 beautifully they have added 7-8 new sums add pannirukanga study mat la. We can't do all sums, we will just do quickly a few and then go to the next standard. Today's first session we will try to knock off all these small standards. Okay. Now this also is a service where I have to follow percentage of completion method. Let's say I have year 1, year 2, year 3. 3 years. L&T is building a house for me. They are building an independent house. Where we build the house, sir? AS16, Bharatwaj, 6 BHK slide. Okay. That house we are building. That time we did accounting for Bharatwaj. AS16, interest loan vangindom. Now I am doing accounting for L&T. Building that house. Are you for AS7? Now, Bharatwaj told totally he will pay 20 crores for this house. Where he is paying in cash, I am L&T, I am receiving from Bharatwaj. First year 10 crores, next year 6 crores, last year, this is not my revenue, this is what he is giving me, cash. I should also prepare P&L for year 1, P&L for year 2, P&L for year 3. Can I write 10, 6, 4 as my revenue? If you do that, then you are following cash basis. Are you following, guys? Cash basis is allowed if I am an LLP. LLP we can allow to an extent, they allow cash basis, but not for company. That too depending on accounting standards. Okay. Now, so what cash the customer pays doesn't matter. So how to recognize revenue here? They are saying again follow accrual, percentage of completion method. Simple as solra. First year la how much work you finished? 25%. Second year la I finished 50% of the work. Third year la I finished 100% of the work. Are you following, guys? Or if you want to know, this is cumulative. Are you following? Individual pathina first year la I finished 25, second year 25, third year 50% of the work. Correct? Apona na fulla 3 varshathula panna vendiya velaya total first year la I did only 25% of work. That means how much revenue I can recognize in first year? 25%. So year 1 I will not recognize this 10, 6 and 4. Follow, if you understand this example, standard is over. All the 12 sums, only same method. Numbers are mato. So out of my total revenue of 20, first year I will recognize how much, guys? 25% of work I did. So I will recognize. Sir, Bharatwaj cash kudukla sir. I am following accrual. I am kudukla bad debts. But accrual it will come. Second year another individual. I am not doing cumulative. Under the tani year. Second year 25% off. So again I will recognize. Third year 50% of work 10 crores. So I am following a method called percentage of completion method. Clear? First year expense enna poduva? This is revenue. Expense. How much I incurred I will put. Again incurred is accrual. Meaning, follow very carefully here. Let's take salary. Okay. This year I have only one employee, guys. Example Bharatwaj. I have to pay him 1 lakh per month salary per month. 1 lakh per month salary. So yearly I will pay him how much? 12 lakhs. But this year I gave Bharatwaj 24 lakhs as salary. Advance monthly I gave 2 lakhs and told next year you work for free. I am paying you in advance. Can I debit 24 lakhs? I will debit how much? My entry will be salary cost or salary account debit 12 lakhs. Then salary advance balance sheet asset or prepaid salary to bank 24 lakhs. Are you following, guys? So even though I paid 24, I will debit only. Sir, pay panna sir, Bharatwaj 1 year salary vaangala. I will not I'm paying next year. Zero paid to him. Entry no salary paid. Salary to salary, outstanding 12 lakhs. That means it doesn't matter how much you paid. It matters what is the expense you incurred. Correct? So, the question like expense incurred. First year is 4 crores. Second year is 4 crores. Third year is 6 crores. Okay. So, what is my first year profit? 1 crore. Second year profit? Third year profit? 4 crores. Total profit? This I would have anticipated in the start of the project only. I would have quoted him 20 crores thinking I'm going to spend 14 crores. My cost is 14 crores. So my overall profit in Munade Theriyum, guys. Project starting up, I know construction. Otherwise, why will I start? I know I can anticipate my overall profit will be around 6 crores. But how do I split this for 3 years? Year 1, year 2, year 3 is what matters. How did I split? Very simple. For each of the 3 years, my cost was the actual cost which was incurred using accrual principle. Question la revenue is nothing but revenue of the percentage of work done in that particular year. That's it. This total of year 1 plus year 2 plus year 3 will be my total revenue for all the 3 years. This is the starting. Are you following, guys? This time I will teach you with questions, 3-4 questions. I will keep including the concepts here and there, and then we will proceed. So let's go to questions of AS 7. Okay. If you guys are still thinking about that one crest apartment, you can go and visit like a buyer. That is not an issue. He will do a house tour for you. How you do window shopping? You can go and come, but ensure you wear good clothes and go. Okay. Just to get some motivation if you want to see and come. Or if you want motivation, why one crest? Opposite, I say we have Taj Hotel. Go there and order one plate of sambar, see the menu card, then come back. That's it. That is enough motivation. Okay. Question number 3. I will do roughly 4 or 5 questions. After the class we can go, guys. Okay. We are also planning in law class, I will tell you, we are planning one law field trip. Okay, so all the students should buy shares of companies in Chennai. In the month of August, September this year, we will go to all of us, group up and we will sit in AGM. If it happens offline, last year we did AGM online, video call, but if it happens offline, we can go. Okay. Fine. For a long time I am planning. This year I am going to execute for sure. Okay. Fine. Come back, guys. Let's take question number 3 in the study mat. Around 4 to 5 questions we will do. All of you with me, guys? Hello? Okay. Now, X commenced construction on 1st April. The fixed contract price they agreed was 2 lakhs. The company incurred 81,000 in 21-22 for 45% of the work and received 79,000 as progress payment from the customer. Cost incurred in 22-23 was 89,000 to complete the rest of the work. Show the extract of P&L and customer account for the relevant years. How many years are there here? 2 years. So what I should do in exam? Year 1. So I am writing year 1, year 2. You write the respective years. Both the years put together, the revenue is 2 lakhs. Both the years its revenue is, got it, go, 2 lakhs. They have also given cost for each of the years. 81,000 incurred na accrual. 81,000 in first year, 89,000 in. So I will come here and write down 81, 89,000. How much to write in revenue? Another question. Correct? My total revenue is, in that he told first year work done is 40. Generally question la the percentage compute pannu. Inga avane kuduthட்டான். That's why easy sum. How much you get? 90. Second year is 1 lakh 10,000. So you will get profit of net profit. First year 9,000. Second year 21,000 is my profit. That's it. Are you following, guys? Everybody understanding? Bharatwaj, Nabar can the sum? Okay, fine. Next, they were also asked to prepare customer account. They said prepare the customer account. Now I have to prepare Bharatwaj account. Bharatwaj is the customer or the user, who's building that house. Now for the user, first year I had 90,000. Sorry, not for Bharatwaj. Sorry, I am doing accounting in the books of. This is P&L. L&T order customer. That means debtor account. Debtor account. So customer account is my debtor account, guys. Customer for year 1. Customer for year 2. First year I recognize sale of how much? 90. Apna debtors will be 90,000, guys. Debtors. How much that fellow paid me? He paid me first year 79,000. So here I will write down payment received 17,000. What's the closing balance? How much? 11,000 is closing debtors. This will again go to opening debtors. Again second year I billed him how much? 1 lakh. How much he paid me second year? Nothing yet. So he has to pay me 1 lakh 21. This is my debtors account. This is my P&L account. Are you following, guys? This accounting in whose books? L&T, construction company. Here, who are the construction companies? Are you following? This is how you have to account every year. But the trick or every sum what they will play around with, unlike this sum which is very easy, percentage avane kuduthadam. So we have to find that percentage. How do you find that percentage? There are 3 methods to find that percentage. One method is called survey method. One more method is called physical measurement method. Survey method na எனக்கு தெரியாத percentage. I will call an expert surveyor. He will come and give me percentage. I will apply that percentage. Maybe it could be this sum. Physical measurement method na L&T will tell நான் எதுக்கு expert கூப்பிடணும், நானே expert தானே. So நானே measure பண்ணி சொல்லுவேன் 45%. Third method, what I am saying, no expert, no surveyor, no physical measurement. Example, these 2 methods will not come, because if these 2 methods he will give you percentage. Now I compute பண்ணுவேன். So third method is a method called cost to cost method. There is a derivation for this formula and all. I am not discussing that considering marathon. That's not needed for exam also. Now last 30 days for exam, don't ask why sir we are doing this. Why are we doing that? Last 30 days, what should I do in exam to get my 60-70? That's it. Beyond that you should not think anything. Logic purila sir. Write a separate logic note. After exam you figure out. I mean, you will not write it. You will write in the notebook and you will leave it. That's it. Okay. Paravala. Exam if you know what to do, it's enough. Okay. Cost to cost method. At this point is like that. When I teach regular batch, it's different. Here it's like that. What is cost to cost method? What I have to do? What is the cost incurred in year 1 divided by what could be the total cost? Year 2 or a percentage eppadi? What is the cost incurred in year 2 divided by total cost that I will incur for the entire project? Are you following, guys? So cost of that year divided by cost of total. We will understand this also with a sum. Let's go to question number 4. I can't do. Yeah, 5 works. This is loss making. Fine. 6 we can take. Okay. 6 is a question where I have to find out the cost. I have to prepare the P&L for that year. Are you following, guys? They are given construction contract for constructing bridge. The following details are available in the records. Okay. total contract price 1000 lakhs, work certified for the cost incurred 500, work not yet certified for the cost incurred 105, estimated further cost of completion 495. This you ignore for now. Okay, now I need to find the revenue for this year. So I need to find out revenue into, here it should be revenue into percentage, here it will be cost of current year. What is cost of current year? 605. 500 plus how sir? Work certified for cost incurred, work not yet certified. That is important if it's a costing exam. Contract, in that it will come. Yanakku, what is the cost incurred? 500 plus 105. Total is, so I will write here 605. Certified, not certified is for a different purpose. What did I incur? 605. When it comes to AS7, ignore this. Okay, 605. Revenue is how much? Into percentage. What is the percentage? 55. How did I find the percentage? Cost incurred is 605. 605 is current plus total cost. What's my total cost? Again 495 plus 495. So it will be 605 divided by 1100. You get 55%. 100 into 55%. Revenue is 550. Current cost is 605. So you have a loss. How much? 55 is my current year loss. Are you guys following? Understanding, guys? Let's do one more sum to practice this. Exam oriented we are focusing, guys. Let's do illustration number 5. Illustration 5 also let me prepare the ledger. I hope you guys have the book with you. Soft copy, hard copy, whatever works. Okay. Illustration 5. Ade formula. First to find out the percentage. What is the percentage? I incurred how much? 390. I told you what is the formula? Cost divided by total cost. So 390 divided by 390 plus 260. How much? 590. What is the percentage of work done? 60. Logic for this quick logic. Mottama I am going to spend 590. 390 plus 260. In that I spent how much now? 390. So percentage of work done is 60%. 60? Not 590, huh? 650. Recording students, not my fault. I take values from your friends sitting here. Okay. 390 divided by 650. What is the percentage? 60%. Okay. No problem. 390 plus 260 with using calculator, you told wrong answer. I generally don't do it in my mind, but now only I am figuring it out. Okay. Fine. Following, guys. 60%. So, what is the cost incurred till date? 390. What will be my revenue? 600 into 360. Current year losses. Are you following, guys? Like this I have to do it for every single year. Are you understanding? Now, whenever we have a loss, what do? This is for year 1 now. So now, year 1 loss now construction பண்ணும்போது year 2 பண்ணி என்ன use? So I should see year 1 loss means, is there a point of me doing this project? Overall I might get a loss. So what I will do, okay, let me see whole project profit loss. So what I will do for whole project, 600 is my total revenue, my total cost is 650. Are you totally also loss? This year also? That means I am able to see future loss. So I will create a prudence. Whenever there is loss in a particular year, when you do construction contract, I will anticipate future loss and I will provide for future loss now itself. Are you following, guys? So again create provision for 20. So the overall loss becomes 50. Are you following, guys? So previous sum also you have to create provision. Are you following? Clear? This is what I do in every single sum of these. Let me just go finish some theory, then come back and do 2 more sums and then close this. So types of construction contract, theoretically let's see. Types of construction contract is of two types, fixed price and cost plus. Fixed price now, contract price is fixed. That's where you get price minus cost, loss can come. Second is cost plus, what I incur I will add. Now here they are saying, in whether it's fixed price or cost plus, how will you account revenue? Revenue will be accounted by using a method called percentage of completion. How to find that percentage of completion? Cost to cost method or survey method or physical measurement method. What is the cost? What is the cost of construction? You think for construction company, that crane over there, depreciation, cement, sand, all of that, that only is given here. What is the cost of construction? They are saying all these site labor costs, materials, technical assistance, depreciation, all of that. What is not included? Admin overhead. Director is sitting in some corporate office in L&T. His salary is not part of my project. If it's general overhead allocated, then it's fine. Admin overhead I will not take. Finance cost. This I will take subject to AS 16. No, this is not. It will come for asset. If I am capitalizing. This is revenue, guys. So I am talking about over here revenue and cost. In this cost, will finance cost come? No, AS 16 comes if you want to, in balance sheet, if you want to create an asset, then you will get AS 16. This is, in this cost, I will not consider finance cost and I will not consider penalty paid. Are you guys following? Then we also saw this concept where provision for expected loss. Okay, foreseeable loss. Can I foresee the loss in the future? How we saw now I can foresee future loss. Then I will provide a provision. If you are not able to foresee unforeseeable losses, provision should not be made. Sir, what is this? This let me explain. Unforeseeable losses. Basically, in the previous question, how did we determine that there is going to be future loss? I was able to estimate the estimated cost of completion. If you can't estimate the future of the contract, in the contract there is some suddenly flood came, people are fighting, construction is paused, then you will not create a future provision. I'll explain that. For that we will take question number 4, another new question in the new study mat. Okay. PQ Associates undertakes a construction contract for which details are as follows. You do the sum like how you normally do, guys. Okay. Forget what I told in the last few minutes. Contract value is 40 lakhs. Cost incurred till date is 3 lakhs. So 3 lakhs debit la varuma. Estimated future cost of completion 30 lakhs. Work completed 10%. Avane percentage kuduthana. So how I will do? Revenue into 10%. 40 lakhs into 10%. Revenue 4 lakhs. Cost 3 lakhs. Net profit 1 lakh. Correct? But look at this. The work has started some time ago and there is uncertainty with respect to the outcome of the contract due to expected change in regulation. In this case, how can you apply 10% here? How 10% is estimated? Current cost divided by total cost, anticipating that I will finish the work. But now work finish pannana, how can I recognize profit? Why will I get money? I will not get it. So, if there is uncertainty with respect to outcome of the contract, don't recognize profit. That means we will not use percentage of completion method. Whatever is the cost, that will become the revenue. There is a beautiful logic, but I am getting to the exam point. Sir, simple sir. Exam ko what should I do? Very simple. This is the final outcome itself we need to focus. Final outcome of the contract. Reliably can be, that means I can predict year 2, year 3, year 4 I will finish the contract. 9 out of 10 sums. Yes. Account using percentage of completion method. Revenue cannot be reliably measured. Then revenue should be recognized only to the extent of cost. Cannot be reliably measured. Now you can't measure the outcome. Contract in that case, don't use percentage of completion because you can't even complete. So he is saying recognize revenue only to the extent of. So here break even. Cost and revenue will match. Are you following, guys? For that they have given some theory points. How do you decide determine the outcome of contract, we have some theory points, guys. Fixed cost, now what all you have to see, like revenue can be measured, future economic benefits, you can easily identify stage of completion. Cost plus means again future economic benefits, you can easily track the cost and reliably measure. If you can't do this, that means cost cannot be reliably measured. If you can't measure cost reliably, don't use percentage of completion method. Are you guys following? This is one part. Last, let me give an example. Let's say you are applying to government to build bridges across Chennai. You want to build 5 bridges. Generally government contracts are tender based, correct? So L&T, DLF applied for the 5 contracts, 15 each in crores or lakhs. Now you applied for each of the tender separately. Now government can either give you each contract separately. They will tell A and B is for L&T, CD is for DLF. Now L&T got 2 contracts, A and B. My question is, should these 2 contracts of L&T, A and B, kept separately in 2 separate accounts, or will I merge them into one and show A and B separate together as one? Separately or together? Separately. Why separately? Because the revenue from each contract is different, cost is different, the time period is different, and different tender for each project. Government has the option to accept A and reject no. Only if there is a scenario where there is going to be one contract, either accept both or reject both, then I will merge them into one. So this we have a theory concept called segmentation versus combination of contracts. Here what they are saying, segmentation and combination, 3 key points. If each contract has a separate proposal, like how you did for each bridge, cost and revenue for each asset can be identified separately, and each contract is a separate negotiation. That means they can accept each or reject each. A can accept, B reject, again A accept, B reject. If that happens, then it becomes a segmentation of contract, otherwise combination of contract. For that we have a small question in the study mat, illustration 1. So if you look at this, XYZ construction undertakes the construction of an industrial complex. It has separate proposals raised for each unit to be constructed in the industrial complex. Since each unit is subject to separate negotiation, it is able to identify cost and revenue attributable to each unit. Is this separate contract or combination of? Separate, because separate negotiation, separately cost and revenue is identified. Separate negotiation, separate proposal, cost and revenue. Are you following? Illa sir, one bulk amount, build all the 5 bridges, 50 crores, give the full project to you, one negotiation, then it becomes a combination of contracts into one ledger. Are you guys following? Clear guys? Perfect. Now last one theory, one more sum. Revenue includes what all? We just now saw revenue and we put some amount. It includes what all? It includes basic contract price. Bharatwaj told 20 crores to build a house. Basic contract price. Claims and reimbursement. Suddenly Bharatwaj called and told, sir, I want a webcam or what to say, CCTV in all the common areas in the house for security, outside security. I said, I didn't plan in the budget. He said, no, you please install that. I will reimburse the money. So the construction company, L&T bought and installed CCTV camera, he is reimbursing. That is also revenue. Third, variation. Suddenly Bharatwaj told no, not 6 bedroom, I want 10 bedrooms. He increased from 6 to 10. I will also increase to 25 crores. Variation, additional revenue. Now Bharatwaj told, sir, you build a house in 3 years, it's enough. Suddenly he's calling and saying, sorry, 1 year la vedamudi. Why? No, it's important. Astrology is saying 1 year I should move into the house. So he's saying finish it faster. I will give you double payment. I'll give you extra 5 crores. So doing it faster, I get incentive. Are you following, guys? Less penalties, if any. With this, the theory part of this standard is done. We just have to see 2 more sums which I want to see. One I'll give as homework for you guys. Try it out, it's very easy. Illustration number 2, you can mark it as important for an MCQ question type. Question is bigger, answer is just 2 lines, very small. He is asking you to find out, if you look at the answers, that's it, answer. He is asking you to find out what is incentive, what is variation, what is claims. Are you following? That's it. If you read the question and try at your end, it's very easy. We did in the class, guys. Yes, you do it today as a homework, this sum, because I want to do another sum. But you mark it as important. I don't know how many of you have seen this question. New question, it's very easy. Whenever you are watching this marathon, that day you do of these questions. Daily I am giving you small homework. Okay. Yesterday, how many of you tried AS 10, those 2 sums? Then you will never try till exam. Only 2 hands are going up now. Others, when are you going to do it, guys? They only 1, 2 sums. When will you see it again after this, sir? Time when do you have time? Other subjects are there. If you leave those sums, you can choose to leave them. I told study matter full of first poning now 90 marks you can expect easily in accounts. First paper, I'm telling you 100. Both mock test papers came fully from what? Janeshwar yesterday 70 marks came from where? Study material. MCQ they will play around, guys. But 70 marks are copy paste, pick up from study mat. You will not get another attempt like this in your life. New syllabus, first attempt and the second attempt are blessing attempts where they will ask from study mat. Always. So study mat is first ponga. Accounts ta solran, guys. Don't go apply in law or other papers. For accounts. Okay. Those 70 marks I'm talking about. Okay. No need to refer any practice manual, this manual, that book. Not for the exams in 2024. Okay. Fine. So this question is simple. Read the question. If you want, for example, material cost escalation to the extent of 20% increase in material cost. I'm just going to facts. What is material cost given in the question? Somewhere they were given. Fixed price 5 crores. Where is it, guys? Down. The total increase in material cost due to escalation is 40%. We are allowing only 20%. So if 40% is 80 lakhs, what is 20%? 40 lakhs. So come down, you will see answer. Material cost to the extent of 20%, 40 lakhs. Are you following? Like that you have to do for each thing, labor, other things. In the ending they were told, AB incurred 20 lakhs for getting local authority approval, which is entitled to claim from the customer. It's a claim, add 20 lakhs as claims. Like this you read the whole question and split. MCQ proper question. Paragraph case கொடுத்துட்டு what is the claim, what is the way incentive you have to find. Clear, guys? That's it. Now let's go to the last question. With that I'm going to close this topic, guys. This you again try as homework. Practical question number 3 is a new question. Practical question 2 is also a new question. Both are easy. Practical question 1 is also a new question. With this I will close. I will do practical question 1. One is similar to 2 and 3. It gives you a holistic picture of this chapter. Are you guys able to follow, guys? Construction contracts. 3 new questions. How many of you have seen these questions before? Practical questions. Good. Otherwise practice now, guys. New questions. Depending upon the time you have, at least the questions I am marking. Okay. A construction contractor has a fixed price of 9,000 crores to build a bridge in 3 years time frame. A summary of the data is as follows. Look at this. Initial amount of revenue agreed in the contract is 9,000. Year 2 9,000, year 3 9,000. Then variation increase. Year 2 200, year 3. That means can I say total revenue is 9,400 or 9,200? 9,000? 200 now is my total revenue. It's not 200 in year 2, 200 in year 3. Cumulative is saying it is 9,200. Next, contract cost incurred up to the reporting date. Cumulative, this is up to reporting date, correct? So first year is 20, second year is 6168 including 2093. Third year is 8,100 and they gave some notes they have given, and he is asking you to prepare P&L account for all the 3 years. All the 3 years, guys. So how do we do that for all the 3 years? Okay. What I will do is, I will do it for the first year in simple. Okay. First year, we need revenue minus cost, correct? So they are doing it in this way. I am going to do it in a more tabular format. Year 1, I need revenue, cost. Then I can find net profit for each year. He wants only these 3 for 3 years, correct? What is the total revenue in year 1? 9,000. This I have to multiply into some percentage. Cost of year 1 is given. How much? Let's go up. 2093. Super. If I write 2093, then you can find out what, guys? Net profit of year 1, sum over, correct? For that I have to find out percentage. What is percentage? Cost incurred divided by total cost for each year. Cost incurred here is 2093. What is total cost? Questionnaire they have not given. But how do I find? Look at this. Cost plus profit is equal to selling price. Here selling price is given as 9,000. Profit is given as 950. How to find cost now? Cost is equal to selling price minus profit. Can I do it like that? So 9,000 minus 950, you will get how much? 8,000. My percentage is 26%. So first year I will apply 26%. You get how much, guys? 2340. 2340 minus 2093. 247 is the net profit for year 1. This is practical question 1. Practical question 3 also is very similar. Like this only, but to find that percentage, little bit here and there they will change. Next, let me go to year 2. I will just do for year 2. Then you will get the idea for subsequent years. Year 2 if I go, follow, guys. Year 2 also same things. Revenue is 9,002 into percentage for year 2, correct? But it's not 9,000. 9,000 plus 200. There is a variation in revenue. So I will take 9,200. What about the cost given for year 2? 6168. Can I write as it is 6168? No. Avane or star kuduthirukkan. It is only up to your what to say. Disadvantage if you don't ignore that. This 6168 star 1 includes 100 lakhs for standard material stored at the site to be used in year 3 to complete the apuna இந்த வருஷம் நான் 100 ரூபாய்க்கு ஏதோ வாங்கியிருக்கேன், but I am yet to use. That means cost is not incurred. That means my cost I spent is 6168, but actually used is only 6068 minus 100, correct? So I will minus 100. It becomes 6068. Are you following, guys? This is for cumulative of 2 years. How to find year 1, sir? Already I found year 1 cost is 2093. I can reduce it, but I am doing in a cumulative approach, guys. Follow. Now what is the percentage done? This is not year 1. I am doing year 1 plus year 2 together. Another approach to do it. Okay. Now what is the percentage for this? Year 1 plus year 2 cost divided by total cost. Okay. What is year 1 cost? 2093. Year 2 cost? No. This 6068 includes year 1 up. This 6068 includes year 1 plus year 2 divided by total cost is how much? What is my total cost? Look at this. Total revenue is 9,000. 200. Total profit is 1000. If I minus 1000, you get 8200. So my total is 8200. So percentage is 74 percentage. Are you following, guys? Or if you want to try in the other way, 6068 is total cost minus 2093 first year cost. How much you have left? 3975. 3975 is the cost of year 2. What is the total cost? 8200. What is the percentage? 40 something, 48.47 percentage. But this is 74 for whole. What is first year's? 26. What is 74 minus 26? 48. Rounding off difference. Are you guys following? That means effective percentage for year 2 is 48%. So year 2 what I will do? 9200 into 48%. How much? 4416. So now what will happen? In year 2 revenue is 4416. Year 2 what cost is 3975. What is year 2's profit? 441. Are you guys following? Okay, that only should be the answer. If you go down and see, your cumulative they are given. If I see individual, they have given cumulative nothing but 740 minus 247 is how much? 4. What is that? Oh, here 493 is coming here. Profit of year. First we got 247. No? We got 247. Here, because of this rounding off, we are getting how much? 441. Here it is 493. If I apply without rounding off, if I use the other method of 74%, where I got my total percentage is 74%, 9200 into 74% is how much? 6808. Cumulative cost of till year 2 is 6068. So now I will do 6808 minus 6068. How much? 740. 740. Now you get 740. 740 minus 247, you get 493. Are you guys following? So how to do for year 3? If I do for year 3 cumulative, you will understand. Year 3 total revenue is 9200. Percentage of work done is 100%. Year 3 work mudsta. What is the year 3's cost? Sorry, 8100. But double star is there. What is double star? Excludes 100 of previous material brought forward and used in year 3. That means I spent in year 2, but I am using only in year 3. So here what I will do? From 8100 I will add 100 because I spent only 81 this year, but 100 I already spent last year. Advance belongs to this year. So my cost is 8000. Revenue is 9000. So my profit will be 1000 is the total profit for all 3 years put together. Already you recognize revenue of how much? 740. Correct. Year 1 and year 2 profit minus 740 you will get 260. That will be my revenue for year 3, which is 260, 740, 1000. Are you following, guys? Clear? Presentation can be in any manner. What he is asking, profit for each of the 3 years, revenue, expense and profit. Are you guys following? Clear? We have a table to do it, but we are not doing it that way, just quickly solving it. Are you guys genuinely understanding, guys? Third question also is very similar to that. W, if you see, percentage will be same. 26, 74, 100. Only thing that changes here is how do you compute that cost by total cost. Based on the question, some adjustments will change. This is also important. Make a note of this. Are you guys following? With this, AS7 and AS9 come to an end. Perfect. Okay. If you look at the crux of AS7 for exam, step 1 is in all sums compute percentage of completion இருக்கிற எல்லா சம்லையும். Step 2 is revenue into percentage of completion. Step 3, cost incurred for each year, which anyway will be given. This is usually given subject to some adjustments. Step 4 is profit or loss, which is nothing but step 2 minus step 3. And last step, if step 4 is equal to loss, create provision. Are you following? That's it. And I can say percentage of completion method is not applicable if outcome of contract is not is uncertain. Then therefore in that case cost is equal to revenue. That's it. All the sums, it will be around this part only. Following, guys. With this we are done in this slot with 3 standards, 9, 7 and AS 24. This will do. Customer, when you're billing customer, you can bill in any way, but he will not pay more than what he wanted to pay, correct? எல்லாத்துலயும் fixed contract சொல்றோமா? Fixed contract price means he will pay only what he agreed. In cost plus, you only charge what you spent. So what is estimated is only for my accounting purpose. Are you following? Who doubt என்னன்னா, sir, what if நான் அதிகமா வாங்கிட்டேன் sir? Overall revenue is 200. There can be variations within these 3 years, but the total will not cross 200. Getting it off? Follow, guys. Let's proceed. Okay. Let me proceed further to next standard. This session let me do all small standards. Next session post break I will focus on AS 20 and branch accounts. Okay, that's the plan. Let's take next standard. Which was there on the list? 11, then 13. Let's do AS 13. Mudsta will go to 11. Okay. AS 13, which talks about investment accounts. Okay. Again another simple standard came in the MTP yesterday. MTP 2 or MTP 1 had a question in investment. MTP 1 no? 2 also. Both MTPs had investment question. Investment with just 1 page for us. Yeah. Fine. What is relevant for exam is what we are going to see. All of you with me, guys? Investment accounts follow. When do you invest, guys? When you have surplus money. First you should have money, then you should have surplus money, and you invest generally for the future. So when you are investing, sometimes you will invest for a short period. I will buy today shares, sell within 6 months. Sometimes you will invest for a long period. So the standard classifies investments into 2. What is it? Short investments are called, long is called long term or non-current investments. Simple small standard. I will finish the theory in 15-20 minutes. Do 2-3 sums. This will get over. Now let's say Amrish decided to buy shares of ITC, wanted to buy shares of ITC and he wanted to hold it for 10 years. He never wanted to sell. So in year 1 he purchased it. He purchased shares for 5 lakhs. He never wanted to sell it. He will show us what? Long term or short term? Long term investment. Now, but he sold it in year 2 itself. Is it allowed? Okay. Before that, what are the different types of investments that you can do? Shares, debentures, bonds, gold, mutual, gold means silver, all of that. Insurance schemes, then government securities, crypto, bills, no bill, T-bills, treasury bills, correct. Real estate, next bank, everybody forgot bank FD guys, correct. So these are all the sources where you can put your money for investment, correct. Where you put depends on your personal choice. Some of them will like real estate, some will like crypto, some will like mutual funds. Your interest, you will mix and match this and you will invest. Shares itself is a huge ocean, correct, where to invest. Now this investment only, it depends what you buy. Your intention is to keep it for a short term, you call it long term, you keep it as non-current. Let's say in this example only, someone purchased, let's say gold, with an intention to keep it for the rest of the life. Generally we buy gold with the intention to keep it for the whole life. You don't buy gold to sell, correct. But let's say you bought gold in year 1. So you keep the gold as what guys? Long-term investment. But year 2 you had a need. So you sold the gold and you book profits and you use that money. Now, can I say year 1 you made a mistake by showing in long term? No. When do I do the classification? Every year 31st March. Now let's say on 31st of March I purchased debentures with the, or not debentures, I purchased shares of Yes Bank. Yes Bank shares is roughly about 25 rupees Nova. 25? Okay. Let's say it is 25. Your idea was, if it goes to 30, I will sell. Or 1 rupee, every year it will go, slowly it will go up. Okay. So let's say you thought if it goes to 30, I will sell it. Clear guys? Now what happened? So you will keep this as short term or long term? Current or non-current? Intention is, the minute it becomes 30, I will sell. I want to sell it. Current or non-current? Current. But it never went to 30. Ade 25 years it was going up and down. So you also never sold it. This year I thought I will sell, but I didn't sell. Again next year, I thought I will sell, but I never sold it. Now what I will do? Current or non-current? Current or non-current? So year 1 I bought Yes Bank shares, thinking I will definitely sell this. Current. I didn't sell in year 1. Year 2 I wanted to sell, but I couldn't sell it. I will show it as 20 years over. Still will I keep showing as current? Yes or no? Yes. What matters is your intention, your mindset, not what you actually do. My intention, this is ready for sale. I want to sell it. I want to sell within the next 12 months if I get an opportunity. Intention is to sell within the next 12 months. Then it becomes a current investment. Whether you actually sell or not, I don't care. For the next 12 months, what's your mindset? Are you following guys? But I can be without selling itself. Long term, gold. Generally gold is long term. I bought thinking I will keep for whole life. So year 1 I will classify as long term. Within 3 months I sold gold. There was a financial need. I can't tell wrong classification. Are you following? What was the intention of that particular investment as of 31st March or when you purchased it? See, are you following guys? So when do you classify investment? We classify investment typically 2 times in a year or typically 2 times. One when you buy it. initially when you invest in the investment, வாங்கும்போது, that time also same question. Are you buying for long term or short term? Current or non-current? Then every year, 31st March, I will question your intention again. And I will reclassify. Illa sir, I still want to sell. Continue in current. No. I want to know. I thought of selling this Yes Bank, but now I want to keep it for the rest of my life. Then it becomes non-current. Are you following? So every 31st March, ask yourself a question. What is the intention? Intention is to sell. What is it? Current. Otherwise, if it becomes current, how to value it? Just like inventory. Current now I want to sell. Realizable. So cost or fair value, whichever is lower. Simple concept. I don't want to teach you. Prudence knowledge, this comes. If it is long term, I want to keep for a long period, I will value only at cost. I will not do comparison every year. Are you following, guys? Why? When the idea is to keep it for a long period, temporary setbacks should not be an issue. And investment means it will go up, come down. A graph of a share is always like this, or it will be like this, it will keep going up, or it will be like this, it will keep coming down. It depends on each security. Are you following, guys? So I will value at cost because it is never a loss for me even if there is a temporary fall. Are you following? It will always be valued at cost unless the fall is, if the fall is other than temporary, then what loss, whatever is there, I will account for that loss. Are you guys following? We should not use the word permanent over here. Clear? So carrying amount of investment, if you see, current investment valued at cost or fair value, whichever is lower. Long term is usually valued at cost. However, if the decline is other than temporary, for example, Yes Bank was around 40, 45, 100. Suddenly when that problem happened, Yes Bank share price crashed to 5. So I felt it's an other than temporary fall. Then I will write off. Or if company is going to be wound up, when I know it's a fall, I can never use the word permanent because you never know when it will come up. But so word other than temporary. Are you guys following? Okay, next. What if for year 1 to year 5 I classified as current investment? Year 6 my intention is, email, I don't want to sell this. I'm going to keep it for a long period. I am reclassifying current to non-current. Possibility is that, or I thought I will keep for whole life. Now I need money. I'm looking to sell. Non-current becomes. So next is reclassification. If there is going to be a reclassification of investment from long term to current, again whichever is lower. But for non-current, see, long term already has cost. Cost or carrying amount on the date of transfer, I will change it. If it is from current to long term, again it's a cost or fair value on the date of transfer. That's it. Are you following, guys? The two MTPs, they've asked question only from this, correct? Only this they have asked. So quickly let's go do a few questions and then we'll go to the other part of the standard. Why it's other than temporary, I'll tell you a small story also. End of the standard. Why we use the other than temporary. 270. Sums தான் கேட்டிருக்காங்க MTP-ல. Account. அது வரைக்கும் கேட்பா. So our question is, investment is this one. This is one type of question. Then you have another type where they will prepare one investment ledger. It was there in old syllabus, group 1. Now, ideally that is removed from syllabus. Investment accounts remove பண்ணலாம். But in the chapter ending add பண்ணிருக்காங்க questions. So they may ask. I will also teach you basics in that. Okay, one basic sum. Okay, follow, guys. Quickly, we'll do 2-3 sums. Illustration 1, AS 13. Unquoted long-term investment is carried in the books at the cost of 2 lakhs. Published accounts of unlisted company received in May showed that company was incurring cash loss, declining the market share, and the long term may not fetch more than 20,000. Now this is long term investment. I will value it how much? 2 lakhs. Now is this loss should account for it? 2 lakhs became 20,000. If you feel it's other than temporary, then I will account for the loss. So clearly suggests that provision should be made because the fall is other than temporary because of diminishing market price. The question declining market share. Next. Question 2. On 1st Jan, they made an investment of 600 lakhs in equity share of any investment is covered. I will classify as current or non-current, of which 50% is made in long term and other is made in temporary. So I have long term and current. The realizable value of all such investments came to 200 lakhs. As Y lost the case of copyright from the given conditions, how will you account? Total you have how much? This 600 is split as 300. Now he is saying the 600 became 200. That means how much is each 300? 150? Sorry, 100 and 100. Are you following? So 600 became 200. Then how much 300 will become? Are you following? See, I'll again explain if you're not getting it. Overall investment is 600. So it is 300 and then he's saying the overall investment became 200. Then what happened to 300? Same equal split up. No other data, 100 and 100. How will account the loss for both or only for one? One is short term. So further I will write off how much? 200. Because 300 became 100, I will write off how much? But the other one is what? Long term. That I will write off 200 only if it is other than temporary. Where is it given? Only if it is other than temporary. Since they have not given data, you will take assumption here. From the given market, it is not temporary in nature. That means it is permanent. That means I will write off the full 400. Are you following, guys? Clear? Next. Quickly, guys. Illustration 3. A portion of this came in MTP, I think. A portion of current investment purchased for 20 lakhs is to be reclassified as long term. Current to long term, now lower of cost or current to long term. Cost or fair value, whichever is less. What is the market value here? So 25 or 20, whichever is 20. Logic is prudence. Second case, another portion of current purchase for 15, reclassified as long term. Market value is 6.5. Again I will transfer 15 lakhs or 6.5, whichever is third also I can tell the same thing. 18 lakhs or 12 lakhs, whichever is, no sorry, this one, current long term, no longer for holding, to be reclassified as current. Original cost is 18, written down to 12 lakhs. So the current cost is 12 lakhs. Are you following, guys? Yes, you can do a write-off because it's other than temporary. Are you following, guys? So what you have to remember is this one. Reclassification, lower of cost or carrying value or cost or fair value. Clear, guys? This is how you will get the questions. I think the RTP question has something. Yeah, these are the questions. Practical questions are not there. This is practical. Huh? That's all questions. Oh, sorry. My bad. Here, illustration 4. Innovative Garments invested in the shares of another company at a cost of 2 lakh 50. It also purchased gold for 4 lakh and 2 lakhs. The market value of each of this gold is 6 lakh, silver is 3 lakh 50 and shares are 2 lakh 50. How will you value this? First, which is short term, which is long term? Shares, they have not given anything, sir. But assumption. What is reasonable assumption? Shares will generally be short term. Gold and silver will be long term. So if you look at shares, 250,000 became 225,000. So I will write off how much? 25,000. But gold and silver increased. What I will do? Nothing to be done. Are you following, guys? That's it. Again, it's an assumption. Investment, if the investment is intention for short term, then I will classify as current. They also say if it is long term, then it will be shown as cost. They are giving both the answers. Are you following, guys? That's it. Now coming to this investment account sums. Investment account is nothing but, so far what we have accounted is the initial purchase or year-end classification. When you prepare the ledger over here, how do I deal with the accounting over here? Fairly simple. Follow. So if you see, there are two types of investments. Investment in shares, investment in debentures, interest type of securities. The first rule is, how do you prepare the ledger? If it's investment in interest securities where you are going to get income, I will basically, it is two ledgers prepared in one. You need to have three columns. One is nominal value, face value, to keep track of count of value. Interest, this will be interest expense, correct? This interest will be income. And cost is what you actually paid. This whole, all the examples they would have given in the book is X interest. We also have X and cum interest. Let me give one example to understand this. That is what we account. Let's say this is my year in 31st of March. Okay. And you are investing in debentures. Let's say you invested in debentures on, for example, let's say 15th Feb 23. This is 31st March 23. Okay. When I invested in debentures, I purchased 5 lakh debentures at rupees. Okay, I purchased debentures worth 5 lakhs. Interest was 10%. This company will pay me interest every year on 30th of June. That's it. That is the interest that I will get. They pay yearly once. Questions will have sometimes yearly twice also. Or let's keep yearly twice. 30th June is my first installment, and let's say 31st December is my second installment. Are you all following till here, guys? Let's take examples to understand better. Let's say we'll have Mukesh is one party. Other party next to Mukesh, Prem. Mukesh is Ganesh. Okay. Mukesh and Ganesh, guys. Fine. Now, Mukesh purchased securities on 31st December itself. For how much? Assume face value is 5 lakhs. Will he get interest on 31st December? No. So Mukesh will hold this until 30th of June, 6 months. Then on 30th of June, Mukesh will get 5 lakhs into 10% into 6 by 12. How much? 25,000. Correct? Are you following, guys? But what happened? On 15th Feb itself, Mukesh wanted to sell these investments to Ganesh. Purchased it. Mukesh had some financial need. He wanted to buy, let's say, some car. So he sold his investment. Ganesh purchased it. Now, on 30th of June, what entry will each of these people pass for sales? Let's say Mukesh purchased for how much? 5 lakhs. Let's say he sold it for 5 lakhs only, for ease of understanding. Let's say he sold it for 5 lakhs. Mukesh entry will be bank account debit 5 lakhs to investment 5 lakhs. Entry on 15th Feb. What entry will Ganesh pass? Investment account, debit 5 lakhs, to bank 5 lakhs. Are you following, guys? Now after 6 months, around 30th June, the company will declare an interest of how much? Who will get that? Ganesh will get. Bank account debit 25,000 to, not investment, sorry, to interest 25,000, correct? He got interest transferred to P&L. Is Ganesh happy? Yes, he purchased, he got the interest. Now Mukesh will tell, I was having this for how many days? Almost 45 days. Jan fulla, February 15 days. Interest is paid once in 6 months. But for 1.5 months, not a debenture holder. So Mukesh is asking the company, pay me interest split panni kudu. Yanakku 1.5, Ganesh 4.5 months, yanakku 1.5. What company will tell? Company will tell, nee oral da. In the 6 months, it becomes hard to pay interest. Company will tell, 30th June, so now what Mukesh has to do? What is the money he is losing? Interest for 1.5 months. How much is that? 5 lakhs into 10% into 1.5 by 62. So Mukesh has lost 6250. Can he leave it? 6250. Can he leave it, guys? He has to claim that money. He has to claim that money, guys. So what he will do? He will ask Ganesh to pay. Ganesh, so I already paid you 5 lakhs. I won't give you 1 rupee itself. So what Mukesh will do now? When he is selling itself, he will include 6250. He is not going to sell for 5 lakhs. He will now include this and tell, where you buy for? Okay, let me include it. I will sell it for 5 lakh 6,250. 5 lakh 6. No, the investment cost is 5 lakhs. So he will write to interest 6,250. Are you following? This is the accounting for Mukesh. Interest. What about Ganesh? Ganesh only invested. For now it will not be 5 lakhs. It will be 5 lakh 6,250. 5 lakh 6,250. 5 lakh 6,250. Are you guys following? Later when he is getting interest, if he takes bank to P&L, he is getting how much, guys? 25,000 interest he is getting. But now Ganesh deserves interest only for how much? 4.5 months, which is 18,000. So Ganesh will tell bank account debit 25,000 to P&L 18,000. 750 the income. Then extra 6,250 why you got? Basically, you pay panna investment you paid even for interest together. That means my investment includes interest of 6,250. So I will write to investment 6,250. So my investment will become net cost 5 lakhs 6,250 minus 6,250. It becomes 5 lakhs. Are you guys able to follow? Understanding? Okay. Now, what will you do if Mukesh sold it for 5 lakh 10,000? If he sold it for 5 lakh 10,000. 2. That means interest I can't write full 10,000. What is the difference? 3,000. Then I will write profit for Mukesh's 3,750. And here I will write 5 lakh 10,000. I will write 5 lakh 10,000. Interest entry will remain the same. Investment will reduce only by 6,250. That we anyway computed. Are you following, guys? So in this example, is this cum interest or ex interest? Here, the example of me saying 5 lakh 6,250 or 5 lakh 10,000 is inclusive of interest. Then I have to do as if it's inclusive of interest and split the price over here. Investment was split. Sometimes they will tell, in the question they will tell, this is X interest. In this question if I use the word X interest, If I say it is interest will be additional, it will be a add-on. Let's say Mukesh sold it for 5 lakh 10,000, but the words use this X interest. So he sold it for bank account debit to investment 10,000, 5 lakh 10,000, no 5 lakhs to P&L 10,000. Our full profit. Either Tandi interest will come. How much? 6250. I have to compute additionally, mainly for the purpose who is person of Ganesh who is investing. So Ganesh entry will be 5 lakh 10,000 to bank 5 lakh 10,000, and now he is getting interest. His interest is additionally is getting a. So when I'm computing, it will be bank account debit 25,000 to P&L 18,750 to interest 6,250. He will take it like this. No, I will not reduce my investment. Let me take it from the book example, then you will get more clarity. Hold on. Leave the second part, guys. Understood the first part? Let's take the example to understand this. Only one illustration, one transaction I will do. Y Limited issued 12% fully paid debentures of 100 each. Interest being payable half yearly on 30th September and 31st March of every accounting year. On 1st December, Bull and Bear purchased 10,000 of these debentures for 101 X interest. That means the price here in our example, this 5,10,000 that you purchased does not include interest. Come interest, it includes interest. You have to split this 5,10,000 as cost and interest. Here 5,10,000 is X interest, means here there is no interest in this. You have to compute interest additionally. Okay. X interest, where is it? Yeah. X interest, also paying brokerage of 1% amount of purchase. On 1st March, firm sold all these debentures for 103 X interest, again also paying brokerage of 1%. Make the accounting in books of Bull and Bear. Now first they issued, Y Limited issued something. On 1st December, I purchased how many, guys? 10,000 of these debentures into 101. How much? 10 lakh? No, 10 lakh. 10 lakh? 10,000. Next, you are also paying how much? 1% brokerage. I told you as per AS10 investment, whatever cost is necessary, you have to add it up. So I will add how much? 1%, how much? So totally 5 lakh. 10 lakh? 20,000? 100. 10 lakh? Sorry, 10,100. So my amount is 10 lakh 20,000. So if I go here, you can see to bank on the first day of purchase, nominal value, face value, I paid 10 lakh 20,100. What you paid in 101 doesn't include. Either Tandini interest to pay pannu. Interest also will come. What is the interest? Follow carefully. You purchased on which day? 1st December. What was the last day of interest? 31st of 30th September and 30th March. So if I put timeline, 31st December, March, 30th September and 1st December, let me put on both extremes. Okay. So you purchased on 1st December. The last interest was paid on 30th September. So how many months over? 2 months. October, November. Yeah. 2 months are completed. For these 2 months, I did not get. No, I will be getting the interest in the future. When I will get that? On 31st of. But I don't deserve interest of. So what will happen here? It's like Ganesh is buying and he will pay interest to Mukesh. Instead of Ganesh will later recover from the company. Are you getting it, guys? What is that amount here? What is the amount if you look at this? 10 lakhs into 12% into 2 by 12, how much? 20,000 is the amount I have to pay. So to bank 20, my entry will look like this. To bank, the investor, bull and bar, the entry will look like to bank 10 lakh 40,000 100. Interest expense account debit 20,000. Investment account debit 10 lakh 20,000. Are you following? This is X interest now. If it is come interest, first when you buy, you would have paid, the investment would have included investment account debit 10 lakh 40,000 100 to bank how much? 10 lakh 40,000. So my investment would have included this. Now you have to split and make it like this. So that means if he is giving come interest, this 101 is inclusive of interest. X interest when additional interest compute pannu. Are you following, guys? Next, when he sold it, guys, sold all these on 1st March. So when I am selling it on 1st March, I am losing interest. I am losing interest for how much? Follow carefully. You are selling on 1st March, but I will get the interest only on 31st March. So from 1st December, Jan, Feb, how many months? He is selling on 1st March. Selling on which day? 1st March. So December, Jan, Feb. 3 months interest is what I earned. But I am only going to sell it on timeline, 1 second. Interest is coming on which day? 30th September and 31st March and 30th September. I sold on 1st March. So the total time gap between over here is October, November, December, Jan, Feb, March. 6 months. Okay. Now you sold on which day? Sold it on 1st March 2013, some year. So I am selling it on 1st March. Before this, when I would have got the interest? 30th September I will receive the interest. So what is the time gap over here? 5 months. October, November, December, Jan. 5 months of the interest I am supposed to get. But I will get this only on 31st March. But I am selling it. So to whomever I am selling it, that fellow has to pay me the 5 months interest. How much am I selling it for? I am selling it for 103. How many debentures? 10,000 debentures into 103 is how much? 10 lakh. This 10 lakh 30,000 does not include interest. Other X interest. Okay, so brokerage is there minus 1%. How much? 10,000. So I am getting 10 lakh 19. This is what I will get up. So my bank will be 10 lakh 19,000. Either Tandi I have to get interest extra. So 10 lakhs into whatever percentage into 5 by 12, which is how much? So I will get here extra 50k. Are you guys following up? Now if this is come interest, sir 103 come interest then this 10 lakh 30 includes interest. How much is it? 50. So balance 9 lakh 80 is only my investment. Leave brokerage. Are you following, guys? If it's come interest, this 10 lakh 30 is inclusive of interest. So selling price is 9 lakh 80. What will come here is only 9 lakh 80,000. Are you following, guys? So in the nominal value you put only face value. Interest, so interest I paid how much? No, I paid to somebody 20. I got 50. Now you tell me in the question, when did you actually buy this? 1st December. You are selling on which day? December to March is how many days? December, Jan, Feb. How many days was I the actual debenture holder? That means your interest is only 30,000. So I'm getting 50, I paid 20, my interest is 30. I paid 10 lakh 20, I got 10 lakh 19, so my loss is 400, excluding all the brokerage. Are you following, guys? This is how you do for X and cum interest. Are you following? Cum interest, this price is inclusive. So அவன் கொடுக்கிற 103 you split with interest and principal. X interest you add that interest. Are you following? This is one type of sum. Most all the sums in study mat, I don't know why they have done it like that. If you see all the sums, only X interest. Cum interest one example also is not there in the study mat at least. Nothing is there in study mat, but cum interest is something you should know. Then the other type is investment in shares. Investment in shares. Shares is very easy, guys. Much easier than debentures. You don't have all this X interest and cum interest concept. Quickly I will explain with illustration number 8. Okay. And then we can close this chapter with this sum. Are you guys following? Okay. Illustration 8. Investment in shares. Now once you invest, you can get three things. Dividend, rights, bonus. Bonus na nothing to do. Amount will not change, only number of shares will increase. Rights now whatever you paid it will increase. Dividend only you have to see. Is it pre-acquisition dividend or post-acquisition? Same like this. Pre-acquisition dividend means the price includes, the price you paid includes dividend. Later when you get dividend you have to reduce. Like my cum interest. Like the price you purchased includes dividend. So here on 1st April, Rajat has 50,000 equity shares in P at a book value of 15. That is the opening balance. Look at this. Opening balance 50,000. Amount is 10,000. Number of shares they have given. Quantity. In this sum there is no dividend, I think, so the column is not there. Or if it's there also, we can keep separately also. It doesn't matter. On 20th June, he purchased another 10,000 shares of P at 16 per share. So it's straightforward. 10,000 into 16, you will write 1,60,000. Then they issued bonus 1 for every 6. So you already had 50,000 plus 10,000. So 60,000 into 1 by 6. How many bonus shares? Add another 10,000 bonus shares. Are you following, guys? Next, rights. 31st October. Directors announced the rights issue, which entitles them to subscribe for 3 for every 7 shares. So as on 31st October, how many shares he has? Into 3 by how much? 30,000 rights shares, which is paying 15. Okay. So 4 lakh. Yeah, rights. So he has to pay how much? 30,000 into 15. But he didn't take everything. So out of this 30,000, he sold 1/3 to someone for a consideration of 2 per share. What is 1/3? 10,000 into 2. How much? 20,000 is sold to somebody. He purchased only 20,000 shares. Subscribe the rest. So 20,000 into 15. How much? 3 lakhs. He purchased for 3 lakhs. Are you following, guys? Clear? What about the profit of 20,000? That will only come to my P&L account. It will not come in my investment account. Are you following? Later when you sell these shares, how should you compute? You have to find the weighted average cost of shares. Sir, what do you mean by this? Totally how many shares you have? 50, 60, 70, 80, 90,000 shares. Sir. Totally how much you paid? 3, 4, 12 lakh. How much, guys, totally? Anything is sold? Printing. Sorry, which one? Balance brought down? 50,000 into 10. So this amount should change. 7 lakh? Printing issue, guys. Okay, leave it. So it's going to 50,000 into 15. So what I paid totally for these 90k shares is 7 lakh 50 plus 1 lakh 60 plus 3 lakhs. How much? 12 lakh? Correct. So like this for every sum you have to compute. Weighted average. I paid 12 lakh 10,000 for 90,000 shares. So per share is 13.44. Whenever you sell the shares for how much ever is sold, I will take the price at 13.44. Let's say you sold at 16. The difference will be profit. I will account the profit. Are you following? Like that we will have some sums. Maybe in some, yeah, here sale is coming. So if you look at sale, they do the same thing. Look at this. Average cost. Mottama what I paid by price. Average cost. Then you do and you find the profit. Are you following, guys? The same thing that we do over here. Clear, guys? Find the cost per share before sale and then you compare with the sale. Clear, guys? What are the common mistakes that you should not be doing in this chapter? One, in investment in debentures, the brokerage purchase now you will add, sale now you have to minus. That is one. Similarly, X interest now you have to additionally compute interest. Come interest now you have to inclusive of interest. Next for bonus, don't add anything in cost. If rights comes, that profit on renunciation, don't take it to investment account, take it to P&L. Then in case of rights, if there is going to be a sale, find out the average cost. Sometimes if dividend is received, check for pre-acquisition dividend. We also have something called pre-acquisition rights. Pre-acquisition rights, that also will be reduced. That's it. These are the main core concepts in ledger. But the two mock test papers don't have ledgers. They have only that what we learned. Where, guys? Straight away over here. Exam, sir, if I'm not understanding this account also, simple. Reclassification. Whichever is lower, the two types of investment, current investment cost or fair value, whichever is less, long-term investment value at cost other than temporary. Then we have some other concept called investment property. That means investment in real estate. Investment property. For this standard gives a simple thing saying don't follow AS 13, follow AS 10. Investment property means investment in land or building that is intended not to be occupied substantially for use by the enterprise. Then for this valuation is cost model as per AS 10. Are you guys following? Then the other things are what all you, this is the cases, how you will deal, we just discussed. Clear? With this we are done with AS 13 also. Perfect. Okay. AS 9, yeah. These four are done in this session. Can we do one more standard or break? You guys should decide. One more small standard or let's see what all we finished. One and all I will not be covering in marathon, guys. 2 is done. 4 is done. 9. 19 is done. 22. 28 also is done. Okay, perfect. Today, second half, I will be doing AS 20, maybe AS 11 and branch, because 11 and branch are connected. That is what I will target for second slot. Now, do you want to do one more Kuti standard? Either 29 or 5 we leave it, it's a small standard. Okay, 29 or 17, which one? Which one? 29. Let's go on 29. I will strike off 29. Small standard it is. Just 15 minutes and then we'll go for a good break. So this sorts about all short sessions. Now, what is 29, guys? Cash flow இப்போ எடுத்தா உங்களுக்கு break கிடைக்காது, பரவாயில்லையா? So last one, AS 29, guys. ஒரே ஒரு பேஜ் தான் notes. I will just quickly explain. 15 minutes we can finish, guys. Okay. AS 29. Last standard in your syllabus. 30, 31, 32 is part of CA final. Now, this standard has only 3 terms and the questions are basically about classifying what you have. Provisions, contingent, asset. Okay. Quickly, let me be exam oriented over here. Why we have I'll just tell the accounting first. If you know it's a provision, create a provision. Entry is 2. It can be short term or short term, provision for tax, provision for bad and doubtful debts. Long term means provision for gratuity, those kind of things. Provision for gratuity, another tomorrow's class, last day AS 15. I will definitely do, guys. That's one terror standard. Okay, fine. We will spend some time on that. No worries. Contingent liabilities now. See, provision now in simple. First, I'll give you definition. I'll give you simple explanation. Provision now definite or liability irukku, guys. Pay panniye agano. But evlo pay பண்ணுவேன்னு தெரியாது. Provision for tax. Until I do PGBP computation and then I file, I won't know the exact tax amount. On 31st March, I can't predict because lot of account closing is there. So I will create a rough provision. So definite or liability irukku, but evlo therilla. That is provision. Outflow is there, but I can't estimate. Clear? Contingent liability. Outflow irukane therilla enakku. For example, if court case, if I lose the case, I have to pay. Are you following, guys? Contingent asset is opposite. If I win the case, I will receive money. Now contingent liability provision is doubtful. For example, I am telling Prakash, it's not a bet. It's not a bet. I am telling him, if CSK wins this season, then I will pay you 5,000 rupees. If CSK loses this season, you won't pay me anything. See, if I keep bet, CSK win now, I will give you 5,000. CSK lose now, you will give me 5,000. That is betting, wagering, not covered in contingent contracts. Contingent liability now, if CSK wins, I will pay you. If CSK loses, I don't get anything. That means Prakash here has a chance to win or nothing. Are you following? So contingent liability case, either case, legal case, either I will pay or nothing. Correct? Either I will pay or nothing. That depends on something else. For example, I am saying, if RCB wins the IPL this year, I will pay each of you 2 lakhs. For me, it's a contingent liability. Are you following, guys? புரியல நான் சொல்ல பாருமே எக்ஸாம்பிள் சொல்றேன். ஓகே, ஏ ஆர்சிபி வந்த ஐபிஎல் திஸ் இயர், வாட் யூ சேயிங்? பார்க்கல, நீ சரியா ஃபுல்லா பார்க்கல ஐபிஎல். உமன்ஸ் ஐபிஎல் வின் பண்ணாங்களே, வரதுவா தெரியல. தட் இஸ் ஆல்சோ செலிப்ரேஷன். ஓகே, something IPL BCCA. Okay, fine. Okay, follow. Okay, I'm not saying, I'm just saying, guys, 1 cup came, you should celebrate that first. Okay, so understood what is contingent liability now, guys. So for me, liability is not certain and RCB winning or losing is not in my hands. So I will not disclose liability because liability is not certain. For me, it will be a footnote in balance sheet. Nothing against RCB fans, guys. Example, I think you guys understand this enough. Okay. Next, contingent asset. I think Riya is an RCB fan. No. Feeling bad for them. Okay. Contingent asset. Contingent asset, guys. Yes, we can discuss more if time is there. Yes. Contingent asset. Contingent asset வந்து me receiving is doubtful. Okay. Same way how Prakash can account. See, for me, I will pay if CSK wins. For Prakash, for me, contingent liability na, for him, contingent asset. Contingent asset அவன் சொல்றான், prudence against தான் இருக்குது. Prudence, revenue recognition, no uncertainty in amount, no uncertainty in ultimate collection. Here there is uncertainty. So don't even show anywhere in balance sheet. Don't give someone hope and take that hope off. Not good in life. So he's saying, don't give the shareholder hope. உனக்கு வந்தா வரும். Keep it somewhere where they will not see. Disclose in board's report. படிக்க மாட்டான், 100 பேஜ் இருக்கும். Annual report is from 400 pages, 600, 400, 300 pages. Board's report nobody will read. Everybody will first go see P&L balance sheet. That's why provision means definite liability. It will come in P&L. Contingent liability below balance sheet. Maybe I have to pay. Okay, create a doubt. Reduce your expectation. That's good. Don't create expectation when you are not certain. So board's report I will disclose. So simple. Accounting, provision now, create P&L, contingent liability footnote, asset, board's report. Question, you just have to do two things. Some questions will be about classifying either provision or contingent liability or contingent asset. Some question is, they will give you it's a provision or contingent liability, you have to compute it. That's it. Are you following, guys? For that, let's go to our definition to understand what is what. For provision, it's a 3-point definition, guys, where all the three have to be satisfied. And. There is a present obligation arising from past events. Keep provision for tax. I have to pay tax now. Present obligation arising from past events of me earning income. Are you following, guys? Clear? The settlement of liability, tax, is likely to result in outflow of resources. Tax pay panna outflow of resource. What resource? Cash. Outflow of resources. Till here I understood, sir. Settlement of liability is likely to result in outflow of resources embodying economic benefits. What is that? Embodying economic benefits means it's going out along with benefits. Like what? Let's say tax is 10 lakhs I'm paying, guys. Income tax is 10 lakhs. If you don't pay income tax 10 lakhs, where will this 10 lakhs be there? Will be in cash. This will be kept in the bank, house, bank. Okay. So we're talking about accounted money. Kaushika. Okay. Fine. I will keep it in the bank. So when I keep it in the bank, I will earn what? Interest. So when I pay cash, I am also losing interest. So now read. Settlement of liability, tax, is likely to result in outflow of resources, cash, embodying, attached with that cash, embodying economic benefits. The economic benefits of interest also is going. Are you following? Definition is like that, guys. Okay. And a reliable estimate. You can't make an exact estimate. Reliable estimate, provision. In the moon mein irunda, it's a provision. So what are the three key points? Present obligation from past event, outflow of resources, embodying economic benefits, reliable estimate can be made. Those who are watching recording, again one more time. Reliable estimate can be made. Online, are you guys able to hear them? Come on, guys, in same wavelength. First, obligation from past event, outflow of resources, embodying economic benefits, reliable estimate can be made. These three are there now, provision. Now, in these three, present obligation is there. Between these two, let me call it A, B and A is there. Either B is not there or C is not there. Either one is not there. Reliable estimate I can't make. Or there is no outflow of resources, then it becomes a contingent liability. There is a present or possible obligation. I'll explain. If there is a present obligation or possible from past events, either there is no outflow of resources or reliable estimate cannot be made. Either B and C are failing or both are failing. Only if A is met, then you make it a contingent liability. Legal case. Present obligation arising from past event, for which reliable estimate cannot be made or there is no outflow. If I win the case, I don't have to pay. It becomes contingent liability. What is the accounting? Disclose in notes to accounts. Come this side. Second part of the definition of contingent liability is possible obligation from past events. Keep CSK match in mind. I will pay Prakash 5,000 if CSK wins. Possible obligation for me from past events. The settlement of that 5,000, settlement of which is based on occurrence or non-occurrence of one or more future uncertain events. Occurrence or non-occurrence of CSK winning, future uncertain event, not wholly within the control of the enterprise, not in my control. Then it is called contingent liability. Are you following, guys? So liability is doubtful. Opposite of, you should actually remember only two definitions. That's it. If you remember this part, provision is done. In that B and C, if you just write negative, contingent liability has one more definition. What is it? Possible obligation arising from past events, the settlement of which depends on occurrence or non-occurrence of one or more future uncertain events, not wholly within the control of the enterprise. Again with me, repeat guys, example you need to write this. Again, possible obligation arising from past events, the settlement of which depends on occurrence or non-occurrence of one or more future uncertain events, not wholly within the control of the enterprise. Super. If this happens, it's a contingent liability. Contingent asset is the same definition but opposite. And the possible obligation, possible asset which may occur due to past events, of which realization, and settlement, realization depends on occurrence or non-occurrence of one or more future uncertain events, not wholly within the control of the disclosed in director's report. Are you guys following, guys? This is the key over here. Straight away we'll go and do one or two questions. We have to classify correctly and standard ends. Where is it, guys? No, here this book is a little different classification. Got it, unit 2. Illustrations. This is a famous illustration. I think old study mat also it was there. In the question if you see, they are saying company has a case. They have 20 cases basically. 20 cases. அவனே சொல்லிட்டான், this is contingent loss, contingent liability. எவ்வளவுன்னு கண்டுபிடிக்க சொல்றான். Quantify the contingent liability. We have to compute. He's saying first 5 cases win, no loss, so nothing to do. Next 10 cases remaining. Next 10 case, let's do for each one case probability. The next one case is 50% winning into 0 plus 40% into 1 lakh. Probability kanupuding, guys. What is the probability of me winning or losing this case? Plus 10% into 2 lakhs. So for each case, how much, guys? 6 total 68,000. So the next 10 case, remember school maths or foundation maths probability you apply, guys. See, whether I will win this case, I know only 50%. Whether I will lose, two different probabilities. So straightforward multiplication, probability of each case in the next 10 case of me losing is 68,000. Totally how many cases? So 68,000 into 10. For next 10 my contingent liability is 6,80,000. It's an estimate. You can't be accurate here. Probability. Similarly for this, can you multiply 30,000? How much? 10,000, no? 42,000 total. That is for each case. How many cases? Total 3 lakh 60,000 plus 6 lakh 80. 3 lakh 60 is for this next 5. Are you following, guys? See, each case is 72,000 now. Totally 5 cases into 5 3 lakh 60. 3 lakh 60 plus 6 lakh 80 is how much? 10 lakh. That will be my answer. Are you following, guys? That's it. Clear? Purila, question la?
Question for 10 cases, 5 cases.
The assumption I am taking is this is for each case. Remaining 5 cases, we can do it that way also. Then, if you want to do it that way, then
68,000.
no. In that case, if I will take the assumption, if it's the percentage for all case put together, then 5 cases win. 4 cases I will lose. 1 case I will lose with heavy damage. 10 case la. Then I will do 4 case into 1,20,000 plus 1 case into 2 lakhs. How much will you get? Same 6,80,000. Are you following, guys? That is the second alternative method. இங்க நீ பார்த்தா next 5 cases 50 is 2.5 case and the point I am not doing that. Next 30% of 5 is how much? 1.5 and 20% of 5 is 1. 1.5 into 1 is 1,50,000. 1 into 2 lakh 10,000. Total 3,60,000 plus 6,80,000 10,40,000. Any assumption adhe answer varum. Got it? Clear, guys? Individual case wise or multiplying, we can do it in double way. Are you guys following? Clear, genuinely understanding, guys? Idla 5 mark question vanda. Okay, I think there are only 2 or 3 more questions. Totally 3. That's it. We'll just do a few. I'll just go to practical questions. Okay, that's it. Only 4 questions for practice. We'll just do 1 or 2 more questions. Oil company has been contaminating land for several years. Open a soltam paanga institute book la. It does not clean up because there is no legislation requiring cleaning up. Nammale chips packet sapta kila dhaan podrom. Only oil company. As on 31st March, it is virtually certain that the law requiring cleanup of land already contaminated will be enacted shortly after the year end. Is a provision necessary? Is the provision necessary, guys? It is virtually certain that law for cleanup will come. Now here again depends on assumption. Here they are saying in first year, when environment is damaged, there may be no obligation to remedy the consequence. The causing of damage will become an obligating event when a new law requires the existing damage to be rectified. Where details of proposed law are yet to be finalized, an obligation arises only when the legislation is virtually certain. Adu kurthana question la, virtually certain. In the given case, it is virtually certain law will be enacted of land already contaminated. That means I have to spend up. Therefore, oil company has to provide for cleanup cost by creating a provision. Doubt is not only, but law varapodhan confirm aichu. Then I have to pay. So create a provision. I don't know how much. Are you following, guys? Key is from the word virtually certain. New question added in new study mat. It was reasonably doubtful. Contingent liability. Not sure if the law will come. Depends on who buys more electoral bonds. Then it will not come. Sorry? No, this is provision. For his thing reasonable law, it is contingent liability. Yes. Following, guys? Clear? Next. Okay, this question also simple. Sun Limited entered into a sale contract of 5 crores during the financial year. Profit is 1 crore. The delivery of goods is to take place during the first month of the next year. In case of failure, they have to pay a compensation of 1.5 crores. Then Sun Limited planned to manufacture this during the end of the year. As on balance sheet date, goods were not yet manufactured. It was unlikely that they will be able to meet the obligation. That means they have to pay a penalty of 1.5, which is virtually certain. Should they create a provision? So over here, in first case, a provision should be recognized because I am sure I am not going to meet the obligation to the amount of 1.5 crores. Are you following? Second case, should provision be measured as the excess of compensation to be paid over profit? When I finish the contract, I will get profit of 1 crore and then I will pay compensation of 1.5. So my net loss is 0.5. Can I just show 0.5? No, because profit is not yet recovered. So provision should not be measured as the excess of compensation paid over profit. The goods were not manufactured before 31st March. Hence, no profit had accrued. So you will show only. But what if profit was earned, but I delayed? Then you can create provision for 0.5. If the profit had accrued, then for 0.5. It's not a strict no, guys. Depends. If you have benefit from the same thing, set off both and take the loss. Are you following, guys? Clear? I think last one question is there. You go through that question, guys. It's a simple previous syllabus question, copy paste only, where they will tell there is a wage revision retrospective wage revision, you will have to create a contingent provision. In that provision should be made. First case will be a contingent liability, straightforward question. With this we did 3 out of 4 questions in AS 29 guys. Able to follow, easy, perfect. Then we'll resume in next session. See you in the next session. Yeah, let's resume guys. So this session we'll start off with AS 20. We'll keep it exam focused, what to remember and do a few sums. Once AS 20 gets over, we'll move on to chapters branch or cash flow based on what you guys need that time. Okay. AS 20 musti we'll go about. Okay. Fine. AS 20 talks about earnings per share. Earnings per share, the equation is very simple. Basically, why do we have this standard? Just think there is a cake of 1 kg. All the 100 of you here have to share it. How much you will get? Cream. Okay. Like that. In a company, what is the profits available? Who are the number of shareholders? What is the profit per shareholder? Like that only earnings will be 3 rupees, 4 rupees. Like the cream is what you get. If you want more, then you need to buy more shares. So EPS equation is very simple. It's a simple straightforward equation. The standard basically has 2 parts. We have something called basic EPS, something called diluted EPS. Diluted will come to it after 15-20 minutes. Basic EPS is fairly simple. They talk about net profit divided by number of shares. But this has some complications. So net profit is, which net profit will I take? It is net profit which is attributable for equity shareholders. That means, is it the net profit reported in my schedule 3? No. You have to make some deductions from that, like preference dividend, if any. So if you go look at the standard, yeah, so if I go look at this, my EPS computation is fairly simple. I will take profit available to equity shareholders, that is my numerator, which is nothing but less preference dividend alone I will reduce. What if preference dividend is not declared? Will I reduce it still? You have to reduce depending upon what type of preference shares it is. If it is cumulative preference shares, then you have to reduce preference dividend. If it is non-cumulative, I will reduce only if they declare the dividend. Sir, my net profit given in as per schedule 3 is after adjustment of some prior period items. They are saying my net profit every year is 30, 30, 30. This year alone, because of some prior period item, my net profit is only 10. So now they are saying, now my question is, should I take 30 or 10 now? Should I ignore prior period item or should I take it? Are you following what I am asking guys? Hello? Should I take prior period items or should I not take prior period items guys? Okay, they leave that. They are saying every year it's 30, 30, 30. This year because of COVID, my net profit is only 5. Should I, if not for COVID, it would have been 30. Should I take 30 or 5? How many of you 5? How many of you 30? We are getting different answers. 35 now. The numerator is what is the profit available? I bought a cake for all of you. 5 kgs cake. But while coming the cake fell down. Only half kg is left. Can I tell? Assume guys you have 5 kg. What is left is half kg. So what is the net profit reported in schedule 3? After all adjustments only I will take. The only reduction you make is preference dividend. Our question is confused. Net profit is after this, after that. I don't care. What is as per schedule 3? Less preference dividend. This is my numerator. Straightforward. Clear guys? When it comes to denominator, we don't take just the number of shares. We take something called weighted average number of equity shares. The logic for this is, if beginning of the year I have 10,000 shares, end of the year also if I have 10,000 shares, I can take 10,000 shares. But sometimes what happens, let's say on 31st March, I added another 5,000 shares. So year ending I have, now let's say my net profit is 50 lakhs. Ideally I will divide by 10,000. But now 15,000 if I divide, the other 10,000 will ask, now varsham pura inga irukka. You came just for 1 day, and you want the full profit. I need to compute weightage. You were there, 10,000 shares were there for 12 months. So 12 by 12. Plus this 5,000 shares were there just for 1 day. 1 by 365. Are you following? I need to compute each share is there for how many days. Are you following? That's how you compute your veins. So let's say if I take a scenario. Beginning of the year I have 10,000 shares. After 3 months I add another 5,000. After another 2 months 2,000 was buyback. How many shares at the end of the year? 13,000 shares. After this buyback got over, we still have how many months left? 3 to 5, so 6 more months. 7 months. 7 months are left. How do you compute veins over here? 2 ways to compute my veins. Both are absolutely fine. First I will take 10,000 shares. This 10,000 is outstanding for whole year into 12 by 12 plus. Take this 5,000. This is outstanding for 10,000 into 9 by 5,000. Sorry, yeah. 5,000 shares are outstanding for 9 months. Minus this 2,000 was not in my business for 7 by 12. How much are you getting? 46,000. Weighted average now it should be between 10,000 and other average, between the extremes, between the 12,583 roughly. Okay. Second, this is one way of computing. The second way of computing is simple. It says for the first 3 months how many shares are outstanding? 10,000 into 3 by 12 plus for the next 2 months how many are outstanding? 50,000 into 2 by 12. Then for the last 7 months how many are outstanding? 13,000. I should be getting the same answer. Are you guys following? Now there are 2 methods. The second method is called time method. The first method is called share method. Sir, what am I doing? In time method, I am giving my trigger point or cutoff point is months. First 3 months, every time there is a share in or share out, I will recompute my equation. 3 months, 2 months, 7 months. The first method is called what, guys? Share method. Each share is there for how many months? First 10,000 for 12. Next 5,000 for 9. Minus 2 for negative 7. Both are getting the same answer. Which one to follow in exam? Any one is fine. But the difference is if I use time method, in the fraction if you add, it will end up to 12 by 12. Correct? Here you don't get plus 12 by 12. And if I do time method, my equation will never have a negative. But in share method, this total will never be 12 to 1. 12 is to 12. Maybe it is coincidentally. And if there is a buyback, there will always also be a negative. Which one to use? Both are fine. Are you understanding both methods, guys? Clear? This is how you compute weighted average number of shares, saying each share giving importance to its number of days it is there. So I don't divide by number of shares, I divide by weighted average number of equity shares. Are you guys following? Clear? Next, in this, what are the adjustments? Now let's say my veins is 30 lakhs, net profit is 30 lakhs. What's the EPS, guys? My net profit is negative 30. Veins is 30 lakhs. What's an EPS? EPS 0, negative 1. EPS can also be negative. It is earnings per share. This year you lost 1 rupee. It's not that you have to give 1 rupee to company. I will disclose in my financial statement that you have lost 1 rupee in the money you have invested. At least in terms of profit. The loss, profit or loss should be shared. So you don't write 0. Negative EPS will be reported. Are you following, guys? Clear? Next. Sir, what if I have 10,000 shares of 10 each? 3 types of shares. Class A, Class B and Class C. I have 5,000 shares of 5 each. 7,000 shares of 10 each, rupees 8. paid up. Net profit now is 30 lakhs. What is my Vains? Assume everything is outstanding for 12 months. There is no rights, bonus, nothing. How will I do it? Now I can't divide straight away by 10 plus 5 plus 7. 22,000 I can't divide straightforward. Because each share is of a different face value. So I need to convert everything to an equal face value. Either convert everything to 10 or everything to 5 or everything to 8 of your choice. Easy to make everything to 10. This 10,000 will remain as 10,000. This how I will convert 5,000 shares into 5, which is 25,000. If the face value was 10, this is equal to 2,500 shares into 10, correct? So 5,000 into 5 is nothing but 25 into 10. So I will write plus 2,500. Last one similarly 7,000 into 8 divided by 10. How much? 5,600 shares. Are you guys following? Plus 5,600. How much am I getting now? How much? 18,100. Then I will divide this. What's my EPS? 30 lakhs divided by 18,100. 165.75. Okay, 75. Whatever, guys. This is the EPS if your share is 10 rupees. But if your share is 5 rupees, then EPS will become how much? What is the EPS? I included 2,500 shares. So if it's 5,200, so I will divide by 10 rupees face value. Now EPS is 165. 5 rupees face value. Now I will divide by 2. How much? 82 point something. In this case, it will be 165.75. What about this? This is for 1 rupee. So 165.75 into 8 by 10. Are you getting it? That will be the EPS for this class. I will report only one EPS, but I will split it later. Are you following? So this is the next combination. So look at this. Cumulative preference shares, I will deduct whether dividend is declared or not. Vains should be computed on a cumulative or individual. That's what we saw. Next, if different basic EPS for each class of shares based on their paid up value, equivalent value means each class of shares will be converted into similar shares of same face value. Vains in case of partly paid up shares or different paid up value, convert them to equivalent number or equivalent value of shares. That's what we did now. Are you guys following? Ellame or common convert panni, you find EPS and then I will split. Are you understanding this, guys? They generally don't ask this, but it's part of your study mat. It's given in theory over there. Clear? Easier. So now so far what I have done, we have just learned basic EPS, net profit available for equity shareholders divided by Vains. What are the possible adjustments that can come in my basic equation? Are you following? This is the first part. Next, there are 3 different adjustments you have to learn. Okay. We are still in basic EPS. I'll tell you when we go to diluted. First, this is the first one. In this, there are 3 adjustments. Shares issued, or let me put it like this. If I take it like, if I put a U curve, I will see different combinations. Bonus, subsplit, rights, buyback, issued at face value. These are all the possible scenarios how shares, number of shares. See, now what I discussed so far till here is the possible changes during the year for numerator or denominator. Now I am talking about how the number of shares can go up or come down. In a year, number of shares can go up if there is a bonus, rights, or issue of shares at not face value, fair value. Market price ka issuing shares. Rights not discount, correct? Or number of shares will come down if there is a buyback or splitting. So not splitting. Consolidate, subsplit will come here. Correct, guys? So if you subsplit, number of shares will increase. If I issue bonus, number of shares will increase. Are you guys following? But if I do consolidation, number of shares will decrease. So there are 3 ways to compute Vains in each of these 3 cases. Case 1, case 2, case 3. Vains will change. Shares issued at fair value are simple, because if shares are issued at fair value, it's actual increase of number of shares. So you will just increase your gains, do the normal computation. Let's say, just now we did 10,000 shares, we did gains here guys. Remember we did gains here plus 5,000. Here my assumption is that shares are issued at fair value, so I will straight away do plus number of shares into number of months. Are you getting it? Why? Because there is no discount element over here. This is one. Come to the third case. You all learned bonus, but even if they ask in exam subsplit or consolidation of shares, answer is the same. Why, sir? In bonus what happens? Numerator is net profit divided by gains. The problem in bonus is year 1, year 2. Year 1 profit is 50, year 2 profit also is 50. Assume this is net profit. Assume the number of shares, gains. Year 1 is 10 lakhs. Year 2 number of shares, bonus 1 is to 1. Number of shares becomes 20 lakhs. So now if you divide, look at my EPS. My EPS will be like first year EPS is, second year EPS is 2.5. What happens in this 5 and 2.5? YouTuber will tell, hey, the company waste 5 rupees EPS, it became 2.5, don't invest. But he doesn't know that you have 2 shares now, 2 shares of 2.5. I can't educate the YouTuber. I can't call the shareholders or the science students and tell, come on, what is bonus? I have to change my presentation. So this is a case where the denominator is increasing with no change in numerator. Always both should be comparable. So denominator alone is increasing, no change in numerator because it is bonus. So what I have to do, the standard tells how bonus is given by converting reserves to share capital. The reserves was anyway yours, sir. Only now officially it is yours. It is like parents' property is mine, but it will come to my name at a later point of time. Like that for shareholder, the reserves are anyway mine. It is only officially coming to me by issue of bonus shares. So for presentation purpose, what he is telling, you assume the bonus is not issued on year 2. Let the date of bonus be any date. Middle of the year, start of the year, end of the year, I don't care. Assume the bonus is issued at the beginning of reporting period, not previous year. Beginning of reporting period. The term is beginning of the reporting period. Now I am reporting, if this is current year, if this is previous year. Beginning of reporting period is what? Previous year starting up. So I will not disclose 10 lakhs over here. I will disclose how much? So my EPS will now become 2.5 and 2.5 in both the years. You might ask me, sir, in the year kurta bonus, how can I show as if it's issued in the beginning of last year? That's why I told you, now only it's bonus given to you. Last year that was still yours, but that money was given to you in the name of reserves. So money was still mine, but it was in the form of reserves, which anyway belonged to me. So for presentation, I will assume bonus issued in the beginning of previous year. So now it's comparable. Are you understanding the logic, guys? Why we do this? Bonus na why we add in the beginning of previous year. This logic is very important when I come to rights. Are you getting it? Sir, bonus, what should I do for exam? They will give year 1 profit, year 2 profit, X, whatever, Y. My gains, or in other words, let's say year 1 is 30 lakhs, year 2 is 30 lakhs. If bonus is, let's say, 15 lakhs, bonus is 30 lakhs, you need to assume bonus was there in the beginning of first year, so EPS becomes 1 and both year. This adjustment is called adjusted EPS, adjusted for bonus. Are you getting the logic? So exam, what to do? Assume bonus is issued in the beginning of the reporting period, 1st April of previous year, and do the sum. Now exam no question kepa, sir, company did subdivide in the during the year. What you should do? Year 1, year 2. Year 1 net profit 50 lakhs, year 2 net profit 50 lakhs. Okay. Now here 10 lakh shares. Year 2 is somewhere in the middle. They are saying 10 lakh shares are subdivided. They made it 20 lakhs. What to do now? Same. Assume subdivision happened in the beginning of year 1, I will change it. They never asked an exam this question. But it falls in my category of change in number of shares without change in shareholders funds. Numerator change agame, denominator is changing. Even if consolidation comes beginning of previous year. What is consolidation subsplitter? Section 61. Alteration of share capital. Are you following, guys? Clear? This is one case. So this case nothing to do. This you learnt. Last case is rights. The concept for rights alone I have to teach for half an hour, but we don't have so much time. Why rights? These 4 steps are given in the book. Now when it rights comes, there's a huge concept. I am straight away going to the sum. I will take a sum and explain what I should do for exam is what I am going to teach you now. Concept I can't teach at this point. AS 20 concept itself will take 1 hour. I need to finish the standard in 1 hour. Are you all following, guys? Those who are watching marathon, if you want concept, you go watch the detailed class. Okay. It's here, guys. Oh, super. Okay. Sir, gap you are doing marketing. Okay. Super. Rights issue. Sum for rights. Okay. Follow, guys. Now, the illustration 4 is a proper sum for rights. It's a proper 4 or 5 mark question. What happened? Bharatwaj, concept வேணுமா உனக்கு? புரியல. Concept தான் கேக்குறானா? From yesterday he asked me at least 10 times. Sir, AS3 பண்ணுங்க sir, AS3 பண்ணுங்க sir. Again, I am not towards 1%. Democracy, what you guys vote, we will do that. Sir, AS3 3. Fine. Okay. Now rights, what I should do? Follow, guys. Net profit for both the years is given 11 lakhs and 15 lakhs. Number of shares outstanding prior to rights is 5 lakhs. Rights issue price is 15. Last date to exercise rights is 1st March. Rights issue is for 1 for every 5 shares outstanding. Fair value of 1 share immediately before rights issue is 21. Compute basic earnings per share. Now follow what is happening. It's on 1st March 2022. This is calendar year, correct? Yes, sir. Calendar year. So I have my current year, which is 2012. Jan, December. Let me write down all the facts here itself. So net profit for previous year is 11. This year is 15. So 2011 is 11 lakhs. This year it is 15 lakhs. Other facts. Beginning of the year, what number of shares? 5 lakhs. On 1st March, exactly after 2 months, rights is 1 is to 1 is to 5. That means I will give. Other question le kuduthutaanga. If you are not giving also, you can compute 1 lakh shares. Rights issue price 15. Before issue, fair value is 21. They are asking you to compute earnings per share. Normally, what I will do, I will give you at least the brief logic instead of going to the detailed logic. Okay. Follow, guys. Now, brief logic is normally how I will compute veins. Numerator is 15 lakhs. Denominator opening is 5 lakhs into. We can do it either 12 by. Okay, let me do it month wise here because I need the concept. 5 lakhs into 2 by 12 plus 6 lakhs into 10 by 12. You get whatever. Don't compute. No need. Wrong answer. Okay. Fine. So this is my period which comes here and this period is coming over here. Correct? So I am computing one part without rights. Correct? I am computing one part with rights. It is okay if the shares are issued at face value. Now look at this carefully. You are issuing 1 lakh shares at 15. So 1 lakh shares at 15 comes to 15 lakhs. இதே நான் மார்க்கெட்ல போய் ஃப்ரெஷ்ஷா இஷ்யூ பண்ணனா 21 divided by 21 how much? 15 lakhs divided by 21. This you compute, guys. 71 420 something. Okay. Now I am issuing 1 lakh shares at 15 where you should have issued in the market 71,420 shares. That means the difference, you gave it a lower price of 15 because you gave a discount. That means can I say something free is given in rights? Yes, that means can I say in the rights issue there is a bonus? Yes, that means this part of equation is not having bonus. This part of equation has bonus. I need to add the bonus to the first part of my equation. Yes, are you getting the brief concept, guys? Yes, so I need to, what we learned in bonus, assume it's given in the beginning of before reporting period. So I need to find what is that bonus element per share. This I found for overall. I need to find per share. Are you getting it, guys? So in this part of my equation doesn't have bonus. This part of my year has bonus because I issued shares. Are you getting it? Yes. I need to add bonus there. Other there are steps. These 4 steps has concept, but we are straight away getting into understanding what to do. Step 1. Compute something called theoretical X-right price. It has a beautiful concept, guys. Now look at this. I'll try to explain the concept over here. How many shares they had existing? 5 lakh shares. Correct? Yes, each share was worth how much? 21. Correct? Yes, now that means 5 lakh into 21 divided by 5 lakhs. What is the price per share? 21. 5 lakhs cancel 21. Are you following, guys? That means this was the price before rights issue. Now additionally, how much money you raised extra? 1 lakh into 15. This is the new capital I got. Yes, sir. For how many new shares? 1 lakh. That means now this is the total money I have. This is the total number of shares. So theoretically, what will become the new price per share? 20. The price will fall because of bonus element. Because I gave something for free to these 1 lakh people, the existing shareholder price will fall because I gave it for free. It comes to 20. So theoretically X-right price is 20. So step 1 is compute theoretical X-right price. Our formula is simple. What I just did, this is my formula. 5 lakh into 12 is what, guys? Existing number of shares into fair value before rights plus rights shares issued into rights issue price divided by existing plus new issue. Getting the logic of formula, guys? It is nothing but logic, so you get 20. Are you following the logic at least to an extent? I am not going fully in detail. So that is my step 1. Compute theoretical. Now I am saying, hey, the share price was 21. It became 20. That means for every 1 share of 21, it became 20. That means 1.05. The meaning of this is for every 1 share, 0.05 is the bonus element. Are you getting it? For every 1 share, 0.05 is bonus, free element. Are you following? That is my step 2. Ascertain rights adjustment factor. Step 1 is to compute theoretical X-right price. I found as 20. Step 2 is compute rights adjustment factor. For every 1 share before rights, now 20, 1.05 is the 0.5 is the bonus. Now what I should do? This bonus, the whole concept was to add to opening up. What was the opening number of shares here? 5 lakh shares are before bonus. Now every 1 share 0.05 is bonus. So into 1.05 you get 5 lakh. 25,000 is adding bonus to my opening shares. So now when I am computing veins, I will do 5 lakh 25,000 into this same veins. Instead of 5 lakhs I will take 5 lakh 25,000 into 2 by 12 plus 6 lakhs is anyway including bonus and rights. 6 lakhs into 10 by 12. Now compute. What's the answer? 5 lakh 87,000. This is my veins for rights issue. Are you following, guys? Now I will go and check the answer. You will get same 5 lakh 87,500. Now how do I compute my EPS? Come here. We have previous year and current year. So previous year, if I see, previous year is 11 lakhs, current year is 15 lakhs. Now when I am dividing with veins, careful. First let me finish current year. This is current year. So current year divide by 5,87,000. What's my EPS? 2.55. Now previous year I'll divide by what? I can't divide by 5 lakh. I told you how to assume bonus is issued at the beginning of the reporting period. That means beginning of previous year. So it becomes 5 lakh 25,000. Next last year will be 5 lakh 25,000. Because last year 5 lakh 25,000, no adjustment last year, into 12 by 12. That's my variance. So divide by 5 lakh 25. What do you get? 2.10 or 09. So now go check the answer. We got 2.55 this year. So 2.55 this year. Previous year 2.09, which is 2.10. Are you following, guys? Clear? This is how you have to do it for writes in exam. Clear? Okay. Exam, that's all. There is much more detailed logic as to how these numbers work out. But I gave you a brief of at least, okay, instead of memorizing steps, concept purida, why I am doing it. Step 1 is to find out what was the price before or what is the price after rights issue, finding the bonus element, adding to opening number of shares. Are you following, guys?
Yes,
Clear? Anybody wants me to explain this part again? Can't do it. Marathon. Okay. Fine. This is the 4 steps. Compute theoretical extract price, rights adjustment factor, apply to opening number of shares, compute gains. Are you following? Kaushik following? Sure. 100%. With this, we are done with basic EPS. This only is there in basic EPS in our book. If you see, yeah, they gave one more sum for rights. If you go and see, there are more sums for rights, guys. Practical sums has some more rights. It's the same. If it comes, you should be happy. Easily you can get your marks. Clear, guys?
Yes, sir.
Now going on to diluted EPS. I am checking time to see how much time is left, how much time I am taking per standard. I realized one standard AS2, I dragged it a lot. But then I learned, okay, one standard. From now, I just keep a track on time so that we understand at the same time. I don't keep discussing a lot. Let's proceed. Diluted EPS starts with where basic EPS ends. So in every sum of diluted EPS, you have to compute basic EPS first. That means for basic EPS, the numerator and veins, whatever we learned so far, you have to compute. Now additions. What are the additions? Now, what happens is, nothing happens in numerator much. It's all because of change in number of shares. Meaning, let's say, let me write year 1, year 2, EBIT 50 lakhs. I will teach the logic here. If you get the logic, you can do any sum. 50 lakhs, 50 lakhs. Let's say I have convertible debentures in my company where I'm going to, let's say equity shares are 10 lakh shares into 10. Given convertible debentures, I have 1 lakh debentures into 100, which is going to convert into 10 lakh shares of 10. This conversion is going to happen next year or the year after or after 4 years. I don't care. In the year career, it's going to be converted next year. Okay, following, guys. So this is my current year here. Year 1 is current year. Year 2 is going to be my next year. Can I predict what is my profit next year? No. So I'm assuming if the same profit of 50 is going to come next year, how it will look like? Less interest. Current year I have debentures. So 1 lakh into 100, assume debentures is 10% face value. So what is my interest? Correct? 10 lakhs, guys. Let me finish this year. So earnings before tax 40 lakhs. Then less tax, flat 30% just for ease. 12 lakhs. You are left with 28 lakhs. Veins. How many shares we had this year? 10 lakhs. Equity shares 10 lakh into 10, guys. So my earnings per share is, this is this year. But next year, this I'm going to get additionally how many shares? 10 lakh shares. So additionally, next year the same net profit is there, but correct, next year, assuming same number comes, my veins will not be 10 lakhs anymore. It is going to be existing 10 lakhs plus debentures are going to become equity shareholders. So plus 10 lakhs, you will get 20 lakhs. So 1.4 is my EPS, correct? Now this is going to reduce. My EPS is going to reduce. That is not because of you guys, but because earlier I issued some convertible debentures. So I'm going to get new shareholders. Now, are you going to be happy about this? No. So my earnings are going to fall per share. Do I surprise you next year? Surprise guys, EPS 2.8 became 1.4. Let's celebrate. Or tell you before. I should inform you or tell you before. That's called diluted EPS. Where my EPS is going to dilute. In the milk I'll add water. Diluted milk. So my earnings is going to dilute next year. Tell the shareholders this year itself that next year your EPS may become 1.4. Are you following? But here if you look at this computation, let me do next year again. I can't predict my profit next year. So I will assume if it's the same profit. We'll assume if the same profit is there next year, what will happen to my EPS? Let's write the same thing. EBIT is 50 lakhs.
Yes, sir.
Interest is 0. Debentures illiye. So you only bother about the denominator, but numerator also is going to change. So interest is 0. So what is no tax? 15 lakhs. So earnings is not 28. Earnings is not going to be. It's going to be 35. So EPS, it is still going to drop. So what is the impact of convertible debentures here? My denominator is simple. Just like the straight addition. But numerator, how 28 lakhs became 35 lakhs? Very simple. Interest is saved. So plus 10 lakhs from what? From my 28 lakhs, correct? From 28 lakhs plus. But because interest is saved, I have additional profit of 10 lakhs. So you have to pay additional tax. Where I paid 12 lakhs tax, I am paying 15 lakhs tax. So minus 3 lakhs tax. You will get 28 plus 10 minus 3. You will get 35 lakhs. Are you following? But every sum I can't do logically like this. So what I will do in exam, net profit given, how much? 28 lakhs. Adukku book la or formula kuduthirukam. Plus interest into 1 minus tax rate, which is nothing but my interest is 10 lakhs into my, I am saving 100%, but I am paying extra tax of 30%. So what I am effectively saving is only 70% into 70%, 28 plus 7 lakhs, you get the same 35 lakhs. So the equation for diluted EPS is, look at this, they say for diluted EPS, I will take the net profit as computed under basic EPS, add interest on convertibles, 10 lakhs in our example, minus tax impact on above interest. Are you following guys? You don't have to mug up. Denominator, if I see, for denominator it will be something similar. Veins as per basic EPS, add something called potential equity shares, that is nothing but convertible debentures or preference shares. We also have some other potential equity shares called options and warrants. I will teach you that now. Also contingently issuable shares, CA final. Ind AS you will learn, not there in our syllabus. So it's just there in material, you ignore it. Following guys, okay. For dividend and now for preference shares, what will happen if I do the same equation for preference shares? In preference shares there is no interest. So tax will remain the same. What will happen? After tax only profit will change. So let's say in first case, year 1, you got 28 lakhs. Profit after tax. Year 2 also will be same. 28 lakhs. But in year 1, I will reduce preference. Assume preference dividend is 2 lakhs. I am not giving numbers. Assume it is 2 lakhs. Hypothetically. Reduce 2 lakhs. Next year it will be 0. And also we learned in income tax, dividend has dividend distribution tax. Is it there now? It's not there. But when the questions were made by ICA, it was there. So we had something called dividend. How income tax worked was, company used to pay dividend distribution tax like TDS. When dividend kudukam pole TDS push kudupam. So you don't have to pay, dividend was exempt. But now law is amended. Company won't reduce TDS. So dividend comes to you. Dividend you have to pay tax. But unfortunately when the questions were framed in ICA, DDT was there. DDT is nothing but TDS on dividend. Think as TDS on dividend. So the questions will still have TDS on dividend. Okay. So now what will happen? What is TDS on dividend? Straightforward 10%. So another 20,000 I will pay up. Are you following guys? Tax on dividend. So grossing up, don't do. Straightforward you do. Are you following guys? So now it will be 28 lakhs minus 2 minus 20. 25 lakh. Here it will be 0. Same 28 lakhs. So from this how do I go there? Add back preference dividend. Add back tax on dividend. No need into 1 minus tax rate because it's below the bottom line after tax. Are you following guys? That is what I would have given here. Add back dividend on preference shares. Add back dividend distribution tax. Current regime we don't have DDT. Question lerko. They will trouble us like that. Are you following? Clear guys? So this is the adjustments I will do. With this background, let me go and do a few sums in diluted EPS. One sum for debentures, one sum for preference, one for options, and that's it. Okay. Now we might have a scenario of all three together. Nothing to panic. Apply the entire equation. Interest added minus tax saved. Minus tax paid. Add back interest minus tax. Add dividend distribution tax. Here you add both. So one sum with both preference and what to say, everything together can come. It has come in the past also, but our study mat has only this type of debenture separate, preference separate. Let's see this sum. Net profit for the year is 1 crore. Number of equals outstanding 50 lakhs. Basic earnings per share 2 per share. Okay. So amane basic EPS kurtana. You don't have to compute anything. Number of 12% convertible debentures of 100 each is 1 lakh. Each debenture is convertible into 10 equity shares. Interest expense for the current year is 12 lakhs. Tax saved. Avane fulla compute panni kuturan guys. He is spoon feeding you. All you have to do is eat and not spit it out. Okay. Now, so how do I compute my EPS? So net profit is 1 crore for diluted EPS. Add back interest saved. What is the interest saved? How much? 12 lakhs minus tax minus 3 lakh 60. This will be my numerator. What is the existing number of shares? 50 lakhs. Matta samla nee compute pannu. Avane compute panni kurtam. Next, number of convertibles are each debenture into 10 equity shares. I have 1 lakh debentures. 1 lakh into 10 is how much? 10 lakhs. Add 10 lakhs. So now you get how much? 1.81. That's it. Round off. Are you following this? Diluted. Now you have to be very careful. What is basic EPS? Diluted EPS is? I can report. If diluted EPS is more than 2 basic EPS, you should not report. That means you are trying to say basic EPS is 2, diluted EPS is 2. EPS is going to increase against the concept of prudence. Don't give expectation to somebody and kill that. Don't tell them your earnings is going to increase. One day let him be happy. Surprise now. Are you following guys? Clear? So when diluted EPS falls, disclose. When it increases, don't disclose. Prudence is nothing but human psychology. Are you following guys? Don't give expectation to somebody and hurt them. Okay. Fine. Has multiple meanings guys. But now we will focus for this. Oh. Fine. Next. Follow guys. Recording students ignore. I am very innocent guys. Okay. Now next. This is options guys. ESOP. Okay. For ESOP. ESOP what we will do. I will explain this. Are you all following, guys? We have an amazing sum in the study mat. Illustration 7, my favorite sum. This sum is AS 20 read along with AS 24. Discontinuing operations and EPS same door sum. Example is papa. Okay. You skip pannuvinga. Okay. Fine. Illustration 6. Last two sums we'll do. Options again. Ideally, you should not be asking options and all because ESOP syllabus then took it now. But in middle chapter like buyback here he will keep adding it. Or he could have kept ESOP itself. Okay. Fine. Can we proceed, guys? Understanding? Okay. Super. Look at these options here. Net profit is how much, guys?
12 lakh.
Net profit is 12 lakhs, correct? Always here, okay. Weighted average number of shares is 5 lakhs. So I'll divide by 5. What's my EPS? 2.4. This is basic EPS, correct? Now he is saying, this I'll explain the logic. It's a beautiful logic. Average fair value of one equity share is 20. Weighted average number of shares under options is 1 lakh. Yeah. And excess price is 15. That means, what is the meaning? This is basic EPS. Everybody understood this? 12 lakhs by 5 lakhs. What they are saying, I will additionally add another 1 lakh shares which I have given to my employees, where each employee will pay 15 rupees, but when the fair value of share is 20. Why, sir, I am giving employee discount? Because I am making him sleep in the office. Overtime, come on, work here. I want to motivate you. So I will give him 5 rupees, I will take discount. What employee will think, if I work hard for 3 years, then I can buy the share at 15. Tomorrow I will sell at 20 and make the profit. Yes, you will make that profit. But now you have to do some sacrifice, correct? So, we don't bother about that. I bother only about one thing. Look at this. Basic EPS is 12 lakhs divided by diluted EPS is nothing but add something here, I get my diluted EPS. Correct? Now, what I will add here? 1 lakh. What I will add here? I can't do 1 lakh into 15 because that is the cash flow, not the profit. Now, if I break it further, I issued 1 lakh shares at how much? 15. Which is? Idhe na velila leave employees, give it to existing shareholders outside. He will pay 20 per share. 15 lakhs divided by 20 is 70? Correct? Which is 70,000 into 20. So can I say 1 lakh into 15 is equal to 75,000 into 20? Are you getting it, guys? So can I say giving you a discount has bonus element? So I will break this 1 lakh shares into two parts. 75,000 issued for full consideration at fair value and 25,000 which is given as bonus. Now this 1 lakh addition over here has double impact. So double impact means for this I have to add something in denominator, something in here also had something here and something. Bonus we already studied. If bonus is given, numerator impact is 0. So I can add straight away 25,000. Assume as if bonus is given from the beginning of previous reporting period. Here if I add 75,000 here, what to add here? What is the impact? What is the profit impact? I can't determine. Plus it's issued at fair value. There is no bonus element. That means impact is going to be positive only for me. Nothing free. No dilution will happen. Dilution will occur. So I will ignore this part because it's given at fair value and take only the bonus element which is 25,000. I will go here. I will not add 1 lakh. I will add only 25,000. Add here 0. 12 lakhs divided by 5 lakh. 25,000. What's the 2.29. That should be my answer. 2.29. Are you guys following? Clear? Exam, how should I compute? I can't do all this logic. Simple. For exam, what should I do, sir? Number of shares? 1 lakh. Into 15 is what they are paying. But if they paid outside How much you're getting? 75,000 is the actual fair value. Total 1 lakh minus 75. 25,000 is the bonus element. That's what they did. They'll do it in a different way, guys. I like this much easier. Add 25,000. Are you following, guys? So you will divide. Adding 1 lakh and reducing. I am adding straight away 25,000. Are you following, guys? Same thing. Basically the same thing. Understanding, guys? 2.29. This is basic. This is diluted EPS. Now if a sum of debentures and options comes together, do both. In debentures, add the interest and reduce tax impact, add convertible debentures. Options can add nothing in numerator, add in denominator. Are you following, guys? Clear? Before I go to this last sum, with this I will close AS20. This sum I want to do in the class. Little tricky unless you know you need to know a lot of concept in this. Okay, before I do that sum, one important thing, if debentures, preference shares and ESOP comes together in the same sum in any combination, very important to note this. Let's say I have net profit divided by gains. Add here interest saved, net interest saved divided by new debentures, new shares, sorry, new shares. Here add dividend saved including DDT, add new shares, add 0 number of shares. You can't add or you should not add everything together and find diluted EPS. We don't have a sum like this, only extra sum. I can do it, but follow, you can't add everything together and find EPS. Let me give an example to understand this better. Okay, let's say net profit is, I'm just giving hypothetical numbers. Net profit, let's say, is 50 lakhs. Dhaneshwar, do you have that sum number ready available? In the sum, what number is it here? Class la potadu. Extra sum? No. Okay, leave it. Anybody has that? The numbers, so I can use the same numbers instead of doing the whole sum. I think net profit, I remember, is 1 crore divided by 20 lakhs. You remember this? Pavitra, are you able to get it? No, found it. In the Pavitra, one more Pavitra in the last. Quickly, Pavitra, marathon, you should respond in 10 seconds. Otherwise, I will do some assumption here. Okay, leave it. Okay, if she finds it, we will take it. If I remember, I didn't mug up the value, but I already put a thing. 40 lakhs, 88 lakhs. Here it will be 16 lakhs, 64 lakhs, 0, 20,000. Okay, follow, guys. I think this is the numbers of that sum. Following, guys, correct? Pavitra, just check. Okay, leave it, guys. I can modify accordingly. Follow, guys. Now, after doing all the adjustments, I'm coming very important, guys. After doing all the adjustments, I'm assuming interest saved net after 88 lakhs. Debentures converted is 40 lakhs. Dividend is 64. New preference shares is 16. Option 0 and 20. Basic EPS was 5. Now if I add everything cumulatively, how much will come? Add everything, guys. 1 crore plus 88 lakhs plus 64 lakhs plus 0 divided by 20 lakhs plus 40 lakhs plus 16 lakhs plus 20,000. Correct? These are the values. Yes. EPS I want. 3.05. No, I'm 3.30. Are you following, guys? 3.30, correct? Now, you can't do the sum like this. You should not do the sum like this. What should I do over here? Simple. You need to add 1 by 1. Either taniya panunga, guys. How much are you getting if I do 88 by 40 separately? 2.2. Either taniya panna, how much are you getting? 4. Okay. Either taniya panna 0. Okay. Now, can you do a small change? Instead of 64 lakhs, let me put it as 9 40 lakhs for example. Now tell me the whole EPS answer. Whole thing again. Yes, you have to do it fast. Whole EPS 7.825 is coming.
9.825.
Okay, no, hold on. Previously what we had 40 lakhs, huh? 64 lakhs. Now I'm just trying permutation combination. Imagine there is 72 lakhs. Okay. How much is coming now? If எல்லாமே add பண்ணோம் 3 point எல்லாமே add பண்ணுங்க guys. Take it as 72, add everything. I'll tell you why. 3.41 no? Guys, I'm saying fast guys. அதுக்கு என்ன பண்றது? 1 crore plus 88 lakhs plus 72 lakhs divided by 20 lakhs plus 40 lakhs plus 16 lakhs plus 20,000. How much? Super. 3 point is not the correct answer. You should not do it like this. Now you do it individually. 88 lakhs by 40 lakhs is 72 lakhs by 16. 4.5. 0 by 20,000. 0. Now what should we do, sir? Now let's say from this 1 crore I am first adding this. Add 0 divided by 20 lakhs plus 20,000. What is the answer? So EPS was 4.95. Next only are you following guys? Do a step based EPS computation. Next again I will add over here. Let me add this debentures. 88 lakhs by 40 lakhs. Now you do cumulative. How much are you getting? 3.12. Now you add preference shares. 72 lakhs by 16 lakhs. Why are you computing again? 3.4. Compute பண்ணிட்டீங்களே. Are you following guys? Understanding? So what I am doing basically is first I computed only basic, then I added only options, then I added options plus, then I added everything all. So my EPS, if you see, from 5 it dropped to 3.12 and went to 3. And if you add everything together, you will add 3.41, which is wrong because this is not dilutive. The least dilutive stops at 3.12. Correct? It stops at 3.12. Are you getting it? Sir, if I do, how do I know? Now for example, if I do 1 crore by 20 lakhs first, instead of adding options, you add preference first. You add preference. Okay, you add options itself guys. 0 by 20,000, you get 4. Now you add preference. Don't add debentures. How much are you getting? Without adding debentures, how much you get? 1 crore plus 0 plus 72 lakhs divided by 20 lakhs plus 20,000 plus 4. Now look at this. If I add first option is nothing. Next if I add options it becomes 4.95. Then it becomes 4. Then it becomes 3.41. That means here if you add options first and then if you add preference shares and then if you add everything, it's only falling. So either you first add pandriyo, the graph will change accordingly. Are you getting what I'm saying?
Yes, sir.
So if you add everything, my answer is going to be 3. But if you do this by adding preference first, உனக்கு அந்த drop and hike வராது. Are you getting it guys? So when everything comes, sir, இதனா concept புரிஞ்சுது sir. Exam க்கு என்ன sir பண்ணும்? That's what I want to know. For exam, all you have to do is first you compute everything individually. 0, 4.5, give them a rank. Least this rank 1. 2.2 is rank. 4.5 is rank. Add rank 1 first, rank 2 next, rank 3 next. There's a logic for this. I'm not getting into that logic. Are you able to follow? I gave you enough logic. So add this first, then this next and this next. That's why we did it first like this. I made you do it like that. So it dropped and raised. So my reported diluted EPS will be 3.12. Are you getting the logic guys? If all three sums all three comes together. Are you following? Very important. We don't have a sum like this. If he wants to trouble you, he will ask like that. Otherwise, good examiner now to this question or this question will come. Little bit arrogant fellow means he will ask this. Illustration 7. I will do this and then we will close EPS for the day. This question I am purely going with exam oriented mind. There is a lot of concept here. Follow. Inga enna solrana? If I have continuing and discontinuing operation, how to find EPS? Look at this. Here continuing operation income is 2 lakh 40, discontinuing loss is 3 lakh 60. So continuing is 2 lakh, discontinuing is loss 3 lakh. So overall becomes 1 lakh 20,000 is my overall. 1 lakh 20,000. Are you following? Now when you find the EPS, the number of shares given in this question is 1000 equity shares and 200 potential equity shares. So this here I will put not 1000 here, I will put 1000 over here. Correct?
Yes,
So you will have a negative EPS of
120.
basic EPS is negative 120. Next year what will happen? 3 lakh 60 will not be there, may not be there because of discontinued operations. So next year my profit will be, it will now, most probably it will be sold, correct? So next year this 3 lakh 60 will not be there. Now I have how much profit? 2 lakh 40. I will divide by potential equity shares, 1000 plus 200 he gave, 1000 EPS is. Will I report? No, because the basic EPS was diluted is 200. It's a positive impact. It's anti-dilutive. Are you getting? That is because your discontinuing operation had a loss. Now this increase, mostly it will become like this. But this isn't right because you are considering only denominator and numerator you are eliminating. So for the purpose of computing diluted EPS, if there is AS24 discontinuing, compute diluted EPS ignoring this. Ignoring the diluted EPS, keeping in mind only continuing operation. How do I do that? Now current year, if discontinuing operation is not that, 2 lakh divided by 1000, EPS is 240. Question la discontinuing operation illa guys. Don't look at it. It's not that. This is my basic EPS. What is my diluted EPS next year? Same profit 2 lakh 40, 1000. How much? 200. That means earnings is decreasing. This is dilutive. Because it is dilutive, now you compute diluted EPS using the actual profit. What is the actual profit? Loss of 1 lakh 20. Current year loss 1 lakh 20 divided by how many shares? 1000. What is it? Negative 120. What is diluted EPS? You keep this, assuming the same profit next year. 1 lakh 20 divided by 1000. What is the answer? 100 loss. So follow. This is my, I'll explain once I finish. This is my, but you might argue saying, sir, negative 120 is becoming negative 100. Isn't it anti-dilutive? You should not check over there. You should check only here for continuing, because next year discontinuing irukal. So I am only presuming if the same income goes to next year. So remember the 4 answers guys. 240, 200. How you did 240? 2 lakh 40 divided by 1000. Ignoring AS. And then you did 2 lakh 40 divided by 1000. You got 200. So first step, sir, exam oriented. Step 1. Ignore AS24 income and compute diluted EPS. Check, is there a dilution? Yes, there is a dilution. Then what I should do? Compute diluted EPS using the current income given. 1 lakh 20 divided by 1000. Basic EPS is negative 120. If I have 1200, it becomes negative 100. This is the reported diluted EPS. Let's go check the answer. Look at this. The final answer is basic EPS would be negative 120, diluted EPS is. For this, what you should do, basically you have to first check. Number dilution check pannuvom. Is it actually diluting or increasing? That check should be done ignoring AS24. Then you compute normally. So look at this. Potential equity shares should be treated as dilutive only when their conversion would decrease net profit per share from continuing 240 became 200. Here if 240 becomes 260, no diluted EPS. Are you getting it? You will do the check considering only shares income from continuing ordinary operations. As income from continuing ordinary operations, 240 would be considered and not negative 120 for ascertaining whether 200 should be anti-dilutive or dilutive. Accordingly, 200 equity shares would be dilutive since their 240 became 200. Now you do it normal, inclusion in the current year profit. 240 became 200, thus basic EPS 120. How 120 is computed? Negative 120 divided by 1000. How 100 came? Negative 120 divided by 1200. Are you following? Simple solution. The control point is, and the dilution don't check discontinuing operation. Are you following, guys? I will again summarize this once. For the step 1, for the purpose of checking if there is a dilution, consider only income from continuing operation. Here 240 became. Only if this is dilutive, then you would compute diluted EPS including the total income. Here if 240 becomes 280, ignore. No diluted EPS. Are you following, guys? To an extent you will get the logic because discontinuing operation, that income will not be there next year. So I can't take that for checking diluted EPS. Otherwise you will get an issue like this. Negative 120 becoming positive 200. Are you following, guys? You are comparing basically here both incomes, continuing plus discontinuing. Here you are taking only continuing. Can you see you are computing 120 with double income, 200 only with one income, which doesn't make sense. Are you understanding, guys? This sum was there in old syllabus, not in study mat. MTP la ketundam. Are you aware? One MTP they asked, but they didn't test in exam. But now they added to our study mat itself. With this, we are properly done with AS20. Okay. Perfect. Are you guys following? Easy, huh? Okay. Now we still have another R left. You will choose either AS3 cash flow or branch. How many of you AS3? AS3. How many of you branch? Majority, you tell me, guys. Okay. See, I will anyway do both, guys. Most probably I will fill in both. Okay. Consolidation we may not have the time, but rest everything. Consolidation anyway, you have the videos which is available for you to see. Okay. I'll at least try to do maybe 23 and 27 matto. I will try to fill 1-2 sums. Now AS3 or branch, guys? Okay. I think as per voting we got branch. Okay, fine. Okay, I'll do one thing. Okay. Say anyway, I will do both, guys. Let me do one thing. Let me do AS3 today, since fully we are in standards. AS3 cash flow. Okay, fine. Then we will just re-vote one more time. Okay, properly, fast. Who all wants AS3? No sound, just hands. Who all wants branch? Fine, I should not stick by my word, so I'll shift to branch. Okay. Just I wanted to make Bharat happy for 1 minute. Fine. Now let's go to branch. Guys, A3 I'll take next session. Branch accounts. This was the most difficult topic in group 1 accounts in old syllabus. Otherwise all chapters were easy. He removed all chapters and added branch accounts in our syllabus. If you see mock test paper, they used to test it for, I think 6 marks. Question came. Okay. We will not have time for doing all sums, but at least I will try to do one model sum in each case. Branch, if I go. Okay. I will teach you mainly concepts in this chapter. Okay. There are about 20 plus sums in study mat. I will just try to do. Today we will stick to branch for whole day. Okay. Whatever time is left. Irukkiradhe 1 hour da. Okay. Branch accounts. Follow guys. Concepts I will cover maximum possible. Sums I will at least do few important ones. Okay. Branch are of 2 types. What are the 2 types? Dependent branches and independent branch. Concepts are important because that concept becomes problems. Independent branch, now the branch is operating irrespective of head office support. Let's take a restaurant. Saravana Bhavan has head office, it has branches. The food is cooked in the branch. Saravana Bhavan has 1 branch in Ananagar, 1 branch in Nungambakam. Nungambakam branch is operating by itself without depending on the other branches. Even if the other branch is closed, I will operate. That's my independent. Dependent branch is basically, my Nungambakam branch is getting the idli, sambar, everything from the main head office. If head office is not operating, all the branches will be closed. If you look at this franchise like Wow Momo or Red Box in Chennai, they don't cook food. They just heat it and give it to you. It gets cooked in one central kitchen somewhere. From that food is sent to these branches. Within independent branches, we have Indian, foreign branch. If foreign branch comes in exam, you are lucky. Okay, it's easy. Foreign branch is nothing but you have to prepare trading P&L and balance sheet, where they will give you the trial balance in dollars or whatever currency, in foreign currency. Here where you have to be careful is, sometimes foreign currency will be rupees. So you should divide, instead of multiplying for dollars, see which is the home currency, which is foreign currency. Many times common mistakes, student will multiply where he has to divide that currency. That you be careful. He will give you trial balance in foreign currency. You have to convert it to the reporting currency. That is nothing but home currency. The right word is reporting currency. Are you following guys? So now I will prepare a new trial balance assuming in rupees. Assuming rupees is my reporting currency. From this trial balance in rupees, I will prepare the P&L and balance sheet. Let's do a sum in this. Okay. For the conversion alone, I will use AS 11. I will come to, I'm just giving you a brief first. Indian branches were head office and branches within India dependent. Head office maintains its separate books of accounts. Branch maintains its separate books of accounts. You have to consolidate. Basically, it's the teaser for consolidation. Earlier, this used to be in inter, consolidation used to be in final. Then they bought consolidation group 2 accounts, branch group 1 accounts. Now both are in the same group. Okay, that's how it used. When I studied, consolidation was final, branch was inter. Okay, so I have to consolidate both. This is the only complex part. Independent Indian branch only is where students struggle. HO account, branch account, Purila. We'll come to that in a moment. Dependent branch is the scoring area, where you have 2 types of dependent branches. One where the number of transactions are very minimal. We use a method called debtors method, where I treat my branch like my debtor. Little more detail means I use stock and debtors. Both these are fairly easy. Previously they used to ask only independent branch, Indian branch. Now in the mock test paper, if you see, both the questions came from first mock test, it came from dependent. Yesterday stock and debtors method. First mock test also, which one? Okay, leave it. I remember seeing both were dependent as far as what I remember. Okay, and they asked branch for 6 marks. They asked it for 6 marks. Following, guys, clear? I will just do one sum in each of this. This is the, let's start off. In debtors method, we open 3 ledgers. In stock and debtors method, we open multiple ledgers. In debtors method, what are the 3 ledgers, guys? So, not debtors, we call it branch account. Then, no, we prepare something called goods sent to branch. We call it GSB account, and branch stock reserve. Are you guys following? These are the 3 accounts that are open. Now, very important, guys. In dependent branches, accounting is done only at the head office does accounting. Branch will not do any accounting. Head office only does accounting. The branch does no accounting. So we will account for them. Now coming to the template of transactions. Okay, branch account basically here is a representation of every account. Okay, let's say head office is sending goods. I'm finishing debtors, then I'll go stock debtors and last one. Head office is sending goods to branch. First type of adjustment. What is the entry we will pass? Normal entry. If I am receiving goods, purchases to creditors account. Normally if you purchase. Now for the head office, the branch is the debtor, correct? Is the debtor. So head office should receive money from the branch. Head office should receive money from the branch. So for this branch is account is prepared in whose books? So this is like a debtors account for the head office where it is receivable. So if this is purchase entry, who will pass this? Branch. You know, it's purchase for the branch. But am I doing accounting for branch? No. So I don't have to write this entry. I am doing accounting only for head office. So if I am doing accounting only for head office is sending goods to branch. Yes, I am treating my branch like debtors. Yes, so debtors means what's the entry for sales? Debtors account debit to sales. Here who's my debtors? Branch. So I'll write branch account debit to. Now instead of sales, I create another account called GSB, goods sent to branch account. So let's say initially goods are sent from by head office to branch at 150 rupees. So here I will write to 150. Here I will write by branch account how much? 150. Are you guys following? Yes, sir. Now, but this account is inclusive of profit. Yes, sir. I want to know suddenly when I look at my branch account, let's say branch flood came, goods are destroyed. Assume these goods are sent at a price of 100 cost plus 50. That you have to compare. He'll give some numbers, 20% on cost, whatever. Profit is 50. Now, suddenly when I look at my branch account, I want to know how much is receivable for me. Receivable is how much? 150. But if something happens, something goes wrong, what's the loss for me? 100. So I want to know, I want to track the cost of goods sent. So whenever goods are sent, immediately the next entry, whenever head office is sending goods to branch, immediately next entry is to reverse the entry you passed for sending of goods. So what will be the entry for reversal? GSB account debit to branch, but the reversal is only for the amount of profit, which is 50. This you will compute. So here I will write by goods sent to branch 50. Here I will write down to branch 50. Now what is the representation of these two ledgers? Here net amount is 100 guys. So this GSB account tells me communicate, because branch has many more adjustments. This GSB account tells me, hey, of the amount of goods I received, 100 is the cost of goods. So GSB account purpose is to track purchase or track cost of goods sent. Now every other transaction that takes place during the year, this is the account guys. Now you in parallel, let us prepare a normal trading P&L account for all these transactions. Goods are sent at, that is like purchase for me, correct? So a normal trading and P&L. Let's go to next transaction. Let's say during the year branch sold goods for 500. No, not 500, 150. Let's say they sold goods for 200 rupees. Will I record that? No. Transactions happening at the branch, I will not record. Transactions happening at the branch will not be recorded by me. It could be branch expense at the branch, bad debts at the branch, anything happening at the branch. Head office will not record because head office doesn't know about it. Head office has no clue. But still, let me write the values. Let's say normal account sales is what did you say? 200. So let's say sales is 200. Assume this entire sales is cash sales. Okay. End of the, then let's say head office incurred some expense for the branch. Let's say head office incurred expense of rupees 10 for the branch. What is the normal entry for expense? Expense account debit to cash. Now this expense is incurred for whom? Branch. So who has to pay me? Branch. That means it's like being reimbursed by the branch. So my entry will be branch account debit how much? 10 to who paid? Cash paid by HO to HO cash 10. This is entries, all these entries are passed in head office books. So here I will come here and write down to HO cash 10. Here I will come down a normal thing and write 10. Are you following guys? Like this, whatever transactions are between head office and branch only I will record. Let's say some goods are returned. Goods are returned, it will be opposite of this. So let's say goods returned 50. So that goods received is 50 coming here. Returned 50 will come here. Here goods received is coming 150 here. 50 will come here. Let's say the goods returned profit is 10. Then that 10 will come here and this 10 will exactly opposite. Are you following guys? Double entry will come. One for return, one for reversal of profit. Are you following guys? What is the meaning of this? Now what is the balancing figure here? 150 plus 10 minus 50 minus 50. How much?
60.
Sorry? 60. This means of the goods that are sent, 60 only are left. According to my computation, how? 150 was sent. In that profit is 50. Again returned is 50. But add back reversal in that profit 10. So 60 goods are sent. Effective pathina cost of goods sent is 100. Cost of goods returned is 40. Left is 60. Are you guys following? This will I account in my normal trading P&L? Goods return? Yes. What is goods return? 50. Where it will come? Reduction from purchase. 50 I will reduce. Clear guys? Now let's say end of the year, branch is returning cash to the head office. Let's say 150 rupees thiruppi kodum. How much he gave guys? 150. After he met all the expenses, I got 150. What expense he met, I don't know. I got 150. What entry I will pass if I receive cash? Cash account debit. It's like my debtor paying me cash.
Yes, sir.
So cash account debit to branch account. How much?
150.
150. Let's make it 140 so that it will be different. 140. So here I will write down buy cash
140.
140. I got back cash of 140. Now what is the net profit we are getting here? The transactions are over. Whole year I will close it. So 140, 50, how much? Minus 170, how much? 70 is my net profit. Are you following, guys? Come here. What is your profit here now, guys? 150 is cash sent. Now that in trading PL it will not come, no. But here in this I will account. Look at this. They had sales of 200. They returned only 150. That means they would have had an expense of 50. Correct, guys? Otherwise I should compute. See, they got cash of 200. They returned 150. They have cash of 50 they spent. That means some expense they would have incurred. Correct, guys? Now what is net profit coming? Over here 200 is my sales. This net is 100, 110, 160. 40 is my net profit. It should ideally tally. It will tally. 1 second. We return cash of 140. So they collected 200. They returned. So my expense is 60. If you put it 60 is coming 30. Which one we missed? The
50 and 10 a profit for goods. On goods center.
goods
50 and 10 a 50 minus 10 is
40. Okay, that loading, that reversal of that loading. So in the goods returned, this side I will write goods returned is 50. So I will add back 10. Still it will not tally, correct? Not 50.
150 also is 50.
Correct, yeah. So 150 minus, in this 150 what is the profit? 50. In this 50 profit is 10. Now it should tally. We missed that loading. How much is coming now? Just check if it's 70. 200 plus 50. Just check if it's tallying. 250. Tallying, guys. 70. This is the normal way. Here we are doing it like this in debtors account. Let me quickly go and do 1, 2 sums for you to get clarity. Okay. Now, this is the question in debtors where they are given one Birmingham Bros have a branch in Nagpur. I will do the same sum in stock and debtors method and move to independent branch. They send goods to branch at their Nagpur branch. However, direct purchase also was made by the branch. All the daily collections are transferred from the branch to the head office. Prepare Nagpur branch account in the books of head office by debtors method. These are the items given. Okay. Follow, guys. See, this chapter is a big chapter which needs 20 hours. I am trying to consolidate to 1 hour. So one sum. I will mainly focus on the key points, adjustments. First they gave opening balance. Opening balance will come in my account. Opening branch assets, cash will be 2000. What all will come, what all will not come. Debtors is opening. I will copy paste this 25,000 over here. Opening debtors, and opening stock also is 24,000. This 24 plus 16. They just you can show it separately, guys. Stock. Okay, this is my opening balance, which is 40, 25 and 2000. Are you following, guys? Okay. Now one by one. Will cash sales come? No. I will not account in the brothers when sales is happening at the branch. It will not come. Will credit sales come? No. It's not happening at the branch. Direct purchase? It's happening at the branch. Returns from customer? No. I don't. It will only come in my working notes. Not in the account. Goods sent to branch from head office? 60 will come. I will write here 60. Okay. Now, transfer from head office for petty cash. It will come and branch is getting the cash. What is the entry for this? Entry from branch is getting the cash up. So I am giving the cash. So to cash, HO cash, debit branch account. Are you following? So if I go here, where is it, guys? To bank, petty cash. Are you following? Next, bad debts will not come, happening at the branch. Discount to customers will not come. Remittance to head office received by head office 1,65,000 will come. So I will write this side 1,65,000. You don't have to do the breakup, guys. You write together total 1,65,000. Next, remittance to head office not yet received so far. Branch has sent. Head office has not yet received. That means this is cash in transit. Closing cash in transit. I will write here by closing cash in transit 5,000. Are you following, guys? Okay. Yes. Word is missing here. Direct purchase are also made by the branch, for which payment is made by. See, direct purchase by branch will not come. But this is direct purchase by the branch, payment by head office. That means I know about the transaction. So I will record this and this 16. Ideally I can add this 16 and 45. Not add the 16 and 24. So this 45 also will come. This 45, yeah, it's here. Are you following, guys? Clear? Next. Branch expense directly paid by head office. What's the entry for expense? Expense account debit to cash. Instead of expense, for whom I will put expense? Branch account expense to cash. Are you following, guys? So this I will write here. Expense how much? 30,000. Are you following? Next, closing stock is given over here. Buy stock, direct purchase. See, closing balance in Kurti is given, stock is 10,000 and transferred from head office 15. That we have to find. So come here, closing stock 15 plus 10 totals 25. Are you following, guys? Now if I can question mark, we have to find it. How to find debtors and how to find cash. You do a rough working. If prepare a debtors account with the credit sales, I will take credit sales, I will take opening balance of debtors, I will take bad debts, I will take discount to customers, I will take returns from customer, anything, closing balance debtors we have to find out. We have to find anything else. Returns from, I will consider all of this and then I will prepare an account. Let's prepare it here, guys. Opening debtors is how much? 20. Credit sales 1,30,000 again comes over here. Return from customer will come this side 3,000. Bad debts will come this side 1,000. Discount to customer 2,000 will come on the credit side. So what's your closing debtors? 1,49,000. We'll go check. I don't know if it's correct. Okay. For this total output of 1,49,000 we are getting a 1,25,000 plus 24,000. Now when I prepare the cash account, what they are doing over here, they are taking an assumption over here. The assumption is in cash account, what is the opening balance? 2,000. So if I prepare cash account, opening is 2,000, closing we have to find. Cash sales is how much? 45,000. So I will add here 45,000. Remittance to head office how much? 1,65,000. Next, cash in transit, how much is that? So this 5,000 also is sent. Any other expense? Branch expense, nothing. So now you have here, what is the cash, guys? 1,23,000. If I go here, now here the assumption they have taken is, if I prepare a cash account 2,000, there is one more transfer from head office. For petty cash 4,000, and they will have mentioned how much. Okay, so 4,000 is the transfer from head office. Any other expense given here? Closing petty cash is 4,000. So closing is 4,000. Here what, if you take 1,49,000 also, it's fine, but here they are taking an assumption. Here opening is 2, addition is 4, closing petty cash is 4,000. Expense kuduthirukka no? Oh, transfer for petty cash. Oh, this one. Okay. Petty cash expense is 4,000. So this side I will write 4. So my closing will be 2,000. That's how this is made. Opening 2 plus 4 used for 4. Closing is 2,000. This only we are finding for petty cash. Now how do you find collection from debtors? They are saying, again working note, total remittances. Where is that? 1,65,000. That means I collected 1,65,000 plus I paid cash 5,000. If I paid so much, I collected only 45. So if I was able to remit 1,65,000 plus 5,000 and the cash I got is 45, then the balance should be 1,25,000. Are you guys following? Clear? So this is the assumption they have taken over here as debtors collection. So balance is 24. Are you getting it, guys? Okay. This is debtors method. I will now jump to more than stock and debtors method. So debtors method, sir, what are the points I should remember? Key takeaways for me. Prepare 3 ledgers. Whatever opening and closing balance is given. Sorry. Just a second. Whatever opening and closing balance is given, write those balances. Key points is whatever is happening at the branch we don't record over here. Journal entries are easy. Treat the branch like a debtor and the profit I will reverse. Last adjustment is if there is a closing stock, you need to find the stock reserve on closing stock and account for that. Now let me go to foreign branch because that's the easy one, scoring, which I can explain in 5-10 minutes itself. For foreign branch, mainly conversion, guys. How do I convert? I'll explain. From foreign trial balance, how do I convert to Indian trial balance? Key points. We will have 2 types of items, which is monetary and non-monetary. So how do I differentiate what is monetary and non-monetary? Very easy. If I prepare my balance sheet, can you give me a list of assets that we get here? PPE, let's say, investment, intangibles, stock, then trade receivables, cash. Okay. Now, stock. If I sell PPE, how much I will get? Will I get the same value, more or less? More or less. If I sell investment, will I get more or less? More or less. If I sell intangibles, will I get more or less? Stock also, more or less. Trade receivables, same. Mostly same. Cash. So whenever and let's take creditors, you will get more or less or same? Same. So items where you get the amount in fixed or determinable amounts you pay or receive, they are called monetary items. Items where the amount you realize is not the same as what you expect, PPE, investment, intangible stock, these become non-monetary. That's why, because there is variation here, PPE we have standard AS 10, investment AS 13, intangibles AS, stock AS 2. Only non-monetary items have accounting standards. Are you following, guys? So for monetary items, conversion is simple. Straightforward, take closing rate. Are you following? And most of the sums, there are two types of foreign branches or two types of foreign operations. One is integral, one is non-integral. All the sums we have in the book is only integral. So I am discussing only integral. Why not non-integral? Non-integral, generally it's like business happens there, we don't take the profits. Balances will stay over there. Integral only we get the profits back into our head office. There are multiple transactions. So all the rates are for integral now. That's where sums come. So monetary items like trade receivables, loan, cash, you take what rate, guys? Non-monetary items, we have PPE, investments, stock, intangibles. All, so I will classify this into three or mainly two, PPE and inventory. With PP only I will write intangibles. Okay. For inventories, normally you will use closing rate for exam. But the assumption we take here is inventory is valued at cost or NRV, whichever is. Since they don't give that value, I take my closing rate. But if they give the actual rate of inventory when it was purchased, then you have to take the actual rate. Are you following? FIFO method. Inventory is purchased on 14th of March. That is, inventory is left over. Then don't take closing rate. Take what rate? Actual rate. But all exam questions they take only closing rate. This is for closing stock. Are you following? If there is opening stock, what rate, guys? Opening rate. For PPE and intangibles, what rate you will take? I will again take actual rate on the date of purchase. Sir, what about depreciation? And what about all nominal account items? Nominal account items, I will take only average. So basically for exam, what remember? Everything which comes in trading P&L, I will take average rate. In balance sheet, monetary items, closing rate. Non-monetary items, closing inventory, closing rate, unless they gave the actual rate. Opening inventory, opening rate. PPE and intangibles, I will take the actual rate. Depreciation also actual rate. Why, sir? Very simple. Here PPE, why I take actual rate? If you don't take actual rate, what will happen? When you purchase the asset, you purchased at $5,000 when the dollar rate was 60. 10 years over. Now dollar rate became 90. I took $5,000. 5,000 into 90. Asset value will increase when it's supposed to depreciate. Are you following? Because of increase in dollar rate, asset value will appreciate. And you will start providing higher depreciation if you take the closing rate. So they are saying whatever rate was taken when the asset was purchased, continue with the same rate. And depreciation also will be the same rate which is taken for asset. Are you following? That's it for conversion. Quickly let's see one sum, because foreign branch came in November exam. See, now they cannot ask branch for more than 14 marks. They won't ask for 14 mostly, they will ask other chapters. So we have to be smart here. Independent branch is the biggest one where they can ask big questions. There is one huge big sum. 6 mark question now, debtors method, or 8 marks, 10 marks na stock and debtors method, or again 6 or 8 mark na foreign branch. At least other purchasing na, that 6 to 8 marks you can cover. 14 marks it comes only, independent branch can come. Are you following? Are you getting it? Okay. So if I take this sum quickly, question 16, Bombay has a branch in Sydney. Sydney branch is an integral. எல்லா question அதான் கொடுத்துருவோம் integral. Following if it's non-integral, for everything closing rate. Including assets, I will take what? Closing rate. P&L items, I will take average. Balance sheet, closing rate. அவ்வளவுதான். So கேட்க மாட்டோம் because straightforward computation. So here if you see, what all I will convert it, look at this. They would have given opening, closing, average and for fixed asset they would have given specific rate. Quickly you tell me guys, share capital what rate? In the rate. I will take it only if it's there in the branch. Share capital இல்லையே இங்க. Why will I no rate? Rate should come only for the branch column. Reserve and surplus, no rate. Land, nothing. Here it's not there. If it's there in actual. Buildings. So you look from this side. First item here is 200. Plant and machinery, what rate? Actual. Depreciation also. Debtors, creditors. Closing. Non-monetary items. Opening stock. Branch stock reserve. What I'll convert? Next, cash and bank. Closing. Purchase and sales. Average rate. Goods sent to branch. No rate. Because this goods sent to branch is an account which is there for head office in the branch. For branch in the head office, they are mirror accounts. So for this you will take corresponding equivalent value. So for here 5 you will take 100. Managing director salary. Again, it's not there here, so leave it. Sorry. Wages and salaries. Average. Rent. Office expense. Commission receipts. Average. HO current. Corresponding balance of this 7 I will take 120. Like this I will convert everything into rupees. Of course there will be a difference. Some sums difference will not come. You have to find if it's profit or loss. Look at this. Credit is more. Credit is 8086. Debit is 78. How to make it tally? 216 is what? This loss is on which side? Debit side. That means loss. Don't look at it like P&L account. It has P&L balance sheet. Which side, which nature is this? Debit nature. So it is loss. Are you following guys? Now that you have the full TB converted to Indian rupees, you can easily go and prepare P&L balance sheet. You know what to take, where it should go. Are you following? So with this we are done with foreign branches. Done. We still have stock and debtors method and independent branches. I will just give at least some key pointers. We may not have the time to do the whole sum, and doing it also, each sum needs half an hour for detailed explanation. I will just give you some key pointers to keep in mind. Okay. And how do you pass journal entries, especially for independent branch? This one part I want to take because they've added new sums in the study mat and branch and practical questions with one head office and multiple branches. How do you pass journal entries? They've done it. They've added a question which Ketangna that they should ask those kind of questions. This can come for 6 or 8 marks. So I'm going to focus now towards the end in independent branch one specific journal entries part where students get confused. Okay. Here we have head office, branch. Head office will prepare its own P&L, its own trading account, its own balance sheet, and head office will prepare an account called branch account. Okay. Branch will prepare its own P&L and trading account, its own, and it will prepare an account called head office account. Now when I am doing HO plus branch, I have to prepare a consolidated trading and P&L, consolidated balance sheet. But for any of these sums, the first step is to ensure this branch account is tallying with my head office account. That's where the journals will come. Normally this branch account will have balance on which side? Will have balance on which side guys? It will have balance on debit or credit side? Don't mug up. For the head office, Branch is a debtor. Because I am sending goods, they have to pay me. So it will be on the debit side. For the branch, HO account will be on credit side. Because for branch I have to pay. So in my mind, for the head office, branch account is like a debtor. For the branch, HO account is like a creditor. Are you guys following? Now we have to account for transactions in both the places. I will teach you these journals. What happens if there are multiple branches? Okay. Let's say head office is sending goods of 200 to the branch. I need to write entries in both the places. So let's say this side I will write in HO books branch account, here in branch books head office account. I don't want you to mug up. I want you to learn the skill in this 10 minutes of how do you make your own entries. In a booklet they have given 20 journals. Here maggadi. No, we don't want to do that. Now if first head office is sending goods to branch, let's say they send goods of 200 one by one. Now head office, for them this is like a, for these people this is like a creditor. So when you send goods to your debtor, normally what entry you will pass? Debtors to. So here who is my debtor? Branch account debit to sales. But what is my sales account? Your account called GSB account. Are you following, guys? Next, in branch books they are receiving goods. What is the normal entry when I purchase goods? To creditors. Who is my creditor here? HO account. Purchases? GSB account debit to head office account. Are you guys following? This is when goods are sent from head office to the branch. Opposite is the entry will reverse. Next, let's take a scenario. Now, expense of the branch paid by head office. 50 rupees expense of whom, guys? Branch. Who paid? Head office. Carefully we have to account. Now, in head office books, credit what? Head office cash. Normally you will debit what? Expense account. But is it an expense for me? No. It's an expense for the whom cash na pay panta. So who should give me the cash? You. So instead of expense I will write branch account to head office cash. Are you following? Come to the other side. I had an expense. What is the entry for my expense? Normally expense account to, but I didn't pay. Somebody else paid for me, so I have a liability. I have its expense to liability. Now here I will debit expense, my expense only, but I have to pay whom? My liability is towards to HO account. So my liability towards head office will increase. Are you guys following the entries? How you are getting it? Next, you tell me this entry. Let's say one customer who was supposed to pay in the branch. Debtor, see, branch is debtor directly paid in the head office. Now you have to think, now follow. Directly paid in head office means, what is the entry in head office? They received cash. Cash account debit to. Now, normally who pays me money? Branch should pay. If branch pays me cash, I will write cash to branch. But branch or debtors paid me. So, I will write to debtors account 100. Why I will do this? In debtors account, if I write 100 here, I should receive 500. In this I already received. So, my receivable towards my debtors is decreasing. Who is my debtor here? Branch. So I'll write to branch account. Are you guys following? What about over here? If the customer pays me, that money only I will pay to head office. So I have a liability towards. Now my liability is reducing because customer paid. So head office account debit 2. My debtors is not going to pay me. My debtor will not pay me. So head office account debit 2. Debtors account. Are you following? Look logically. For the branch, I'll go from scratch. Branch la my debtors paid me. What is the entry? 2 debtors account. But my debtor is not paying me. He directly paid the. So instead of bank, I will debit head office because my liability towards head office is decreasing. So any entry comes, you have to frame it. Are you following, guys? All you have to see is for the head office, branch is a receivable, and the receivable increase now you debit branch, and the receivable come now you credit branch. For the branch, head office is a like creditor. If my liability towards branch is head office is going to increase, then I will credit my HO account. If my liability is going to decrease, then I will debit my HO account. Tell me a case where in the branch I will write 2 HO account and increase my liability. 2 HO account and increase my liability, guys. Branch expense paid by head office, so expense to head office. Are you following? This is if there is one branch. The new addition in our study mat, from where they got the question, they copied from CMA study matter. If I have one head office and multiple branches, have you seen this practical question? Have you seen this, guys? Hello? It is an addition in the practical question. One question. First branch law, what is the addition, sir? New syllabus. This one. So I am going to take this last and close branch, guys. So you are not aware of this. No. How to do entries? Where is this in the book? You go to practical questions in the end. You will find at least 2 questions. 2 practical questions are there. I will just focus on the concept. Trust me, it's easy, guys. Now, head office will open how many accounts? Branch 1 and branch will open HO account and branch 2 account. What if there is transaction between branch and branch 1 and branch 2? Branch 1 will open HO and. So if I have 10 branches, everybody will open 9 accounts. Idea is to make it simple. We will complicate. Head office open 9 accounts. Branch open 9 accounts. Each branch will open 9 accounts. Gone. So, the solution is you don't open inter-branch accounts. The branch account will be opened only by head office. Now look at this transaction. If you get this part correct, independent branch is in your grip. Maybe I wasted time by doing debtors account. No problem. But this is, if you have stayed till here, recording fellows, this is going to be your takeaway at the end of this video. Okay. If you are skipping, if you see this, wait. No. Okay. This is the main part. Now follow. This is the part everyone skips. 10 minutes, guys. You will become expert in branch. With even 100 branches come, we will know how to do. First, let's say branch 1 is sending goods to head office. What entry will branch 1 pass? This is, forget branch 2. Branch 1 is sending goods to head office. What entry? Slowly. It will take time. In branch, head office account debit 2. Head office is receiving goods. GSB 2. Branch account. Correct? How I will cross check my entry is, if branch is sending goods to head office, my liability is decreasing. If my liability is decreasing, I will debit. If head office is receiving goods from branch, I am receiving from my debtor. For head office branch is debtor. If I am receiving something from my debtor, I will credit branch account. So all this time what I taught you was between these 2 people, which I am again revising just to see if you are understanding. Now what happens if branch 1 sends good of 100 to branch 2? Sorry, branch 2 sends 100 to branch 1. How do I account? Possibility is that Idli is over another branch, get from other branch. How do I account? We have in syllabus. Branch 1 to branch 1 to branch 2. I told you should not open branch 2. So what you should do here is, if branch 2 is sending goods to branch 1, the assumption you should take is as if branch 2 sent to head office sent to branch 1. Here one entry, here one entry, here one entry, here one entry. 4 entries if branch 2 sends to branch 1. Let's write them. Are you following, guys? Branch 2 sent 100 to branch 1. For the purpose of accounting, you will assume branch 2 sent to head office sent to branch 1. How will my entry be now? This scenario alone. One by one, guys. Null entry one by one. Branch 2 is sending goods to head office. For branch 2, liability is increasing or decreasing? So head office account debit 2. Head office receiving goods. GSB 2. Branch 2. Now head office is sending goods to branch 1. Branch 1 2. Here. GSB 2. GSB, checking if you are awake. GSB 2. Head office. Are you guys following? 4 entries. Did you mug up? No. Now next. Let's say branch 2 order debtors paid at branch 1 200. Are you following? One debtor of branch 2 directly came to branch 1 and made the payment. Are you following? What you should assume? You should assume that the debtor paid to head office and head office gave the cash to branch. So you should assume as if the debtor paid in the head office and head office gave the cash to branch. What entry I will write now? If debtor paid at the head office instead of branch, here what entry I will write? My for branch, his debtor is reducing to. My liability towards head office is reducing 200. Head office is getting cash from branch. So head office will write cash account debit to branch 2. Now head office is giving cash to branch 2 cash branch 1 account. Why I am debiting branch 1 account? For me branch 1 is a debtor. Now branch 1 is getting cash to head office. Are you following, guys? Easy. If there are multiple branches, any other transaction you want to take? Are you getting it, guys? If I have multiple branches, if there are transactions between branch, just assume it's routing through the and pass all the 4 entries. Clear? For this, if you have to practice, if you have to go to additional questions, end of. If you spot the question, let me know, guys. This is normal. See, why I am doing this? Because branch is 6 marks, he will give you like this 6 adjustments and tell pass journal entries. So I finished both journal entries. One head office, one branch. One head office, multiple. Sir, what about multiple branches and multiple head office? How is that possible, guys? Okay. Not possible, that is. Okay, again a question 4 in the back end is journal entries. This can easily be a 6 mark question for you. For example, just now we did head office collected 10,000 directly from a customer on behalf of the no intimation has been received by the branch. Just now we did the entry. Are you following, guys? Multiple branch. Here we go. Question 1 is different. Yeah, this question is the new question, guys. Already there before. Whole syllabus is there. I never solved an old syllabus batch then. Okay. Fine. So here you have 4 branches: Kolkata, Delhi, Mumbai and Delhi branch. Head offices. What's the head office? Some head office, guys. Okay. So this question, look at this. This can be a proper 14-mark question. On which is saying you'll do this. If he's asking entries for all of this, here is asking, let's try just one random point over here. For Delhi branch, received goods from Mumbai and 15,000 from Kolkata. What entry I should pass? Entry, just tell me entry in books of Delhi. Received goods from, let's draw that. Head office, Mumbai, Delhi. So Delhi has given directly goods to, received goods from Mumbai. How much I got? 25,000. And I also have one more branch, Kolkata, which gave me 15,000. So I got 35 and 15. I have to pass entry in the books of. What I have to do? I have to assume as if Mumbai gave these goods to head office. Head office gave it to Delhi. So I am getting goods from head office. Entry is GSB to head office account. Are you following, guys? Perfect. Same for Kolkata. GSB to head office how much? 15,000. Are you following? Like this, all these transactions. You put the diagram, see where it gets routed. Are you following? So what we have finished in branches, I have finished the foreign branch fully, conversion. There's nothing more. Independent branches, I have finished the journalizing part alone. Because once your journals are clear, you just have to prepare trading P&L and balance sheet. In every sum, remember, your branch account total should match with head office account total in terms of transactions and amount. Then only you can start preparing trading P&L balance sheet. In dependent branches, I finished the debtors account. Stock and debtors is nothing but the same, but instead of having one account debtors, I will open multiple 6-7 accounts. If you remember in debtors account, stock, debtors, cash, expense, GSB, everything we put in the same account. Now I will break this and put in multiple accounts. That's it. Are you following, guys? So when goods are sent to branch, I will write branch stock instead of branch account. Branch account multiple accounts for detailed control. Are you following, guys? Okay. We did 1 hour branch. In my life, I have never taught branch in 1 hour, guys. Okay. Fine. I don't know how much you understood, but honestly, the last 1 hour, was it of any use for branch? Fine. Okay. You can be honest, guys. Now, for tomorrow, last day of our marathon, the survivors will come tomorrow. Okay, for offline, how many are left, guys? Okay. What all topics I will take tomorrow? AS 15, 3 Romanarma Kekringa, I will take AS 3. What are the main standards left? Okay. Yeah, segment reporting also we have. At least let me try to finish full standards. Okay. So tomorrow we will close off. 15 will get over. 20 will get over. AS 17. Then 20 over, no? Yeah, right. Oh, by mistake, shade 17 I have to shade. Do you guys want 18? And AS 23, 27. If time is there, AS 25. That's it. 14 la amalgamation fully. These topics, idike time patha guys. These topics, which 2 topics I am not including in amalgamation and consolidation. Consolidation, those who are watching online, full consolidation chapter of 12 hours. I have already made it live, publicly available on YouTube. You guys can see full consolidation over there if you guys want. fully it's there. Again, remind me tomorrow when I'm doing 23, 27, I will tell for recording students. Full consolidation is publicly available. You can go see. One of my best chapters is consolidation, but we need long time. I can't summarize it in just 1 hour. Okay, so you have time, you watch that. Fine. Amalgamation, let's say if we have time I will brief. I just don't feel good. Or a branch 15 hours topic taking in 1 hour, I don't feel good. I know how much you understand. So I thought at least the same 1 hour if I spend here, we can cover the whole standard as what I feel. Okay, so we will take 15, 3, 17, 25, 27, 18, 23. We will try to cover these in the next session. 11, nothing is there in 11. Maybe I will just branch part only is over, nothing else. I mean, there is other small parts. I will try to cover that. Okay, that's it, guys. See you all next session tomorrow. Bye. Yeah. Hi guys. Now in this session, we will first target on 3 standards: AS 17, AS 18, AS 3. Let's finish these 3 and then proceed further. AS 17 talks about segment reporting. Let me give you a quick overview as to what is there in the standard and what you should remember for exam. Okay, let's take a company like HUL, Hindustan Unilever, which has so many products. Take company like ITC, so many products, tobacco products, stationery, then they have hotels, this, that, many other. In any company's financial statement, the revenue here will be total revenue of the company, guys. Total revenue of the company. Then in that case, if I write the total revenue, will you want to know what is the breakup? How much came from, let's take, if I take HUL, how much came from cosmetics, how much came from food products, how much came from other products. I will want to know the breakup. Why? So that you will know, is this company going to grow or not. For example, if I take ITC as a company, 10 years back for ITC, 70% of their revenue came from tobacco products. Today, if you see for ITC, only 40% of their revenue comes from tobacco products. That means the company consciously is slowly shifting to other avenues like stationery, food and other things, so that they are not dependent only on one product. That means if I am investing in ITC, I can be, okay fine, tobacco contributes only half, the remaining half there is so much more. In the 72,000 crores turnover, only half is from tobacco products. So you can anticipate how the future will be. This breakup is what is given in segment reporting. Are you guys following? So what should we do for exam? First, there are 3 stages, guys. Okay, first 4 stages actually. First, you need to identify the list of products and services in one Excel. 100, 200, 500 products. I will write down. Next step is to categorize these products and services into segments. For example, list of products and service for ITC, classmate, rule note, unrule, long size, short size, I will write. When I categorize into segments, all this will come under stationery segment. Are you following, guys? Like this, that is the second stage. Let's say you found out, okay, there are 12 segments. How many, guys? 12 segments. Now, will I prepare particulars followed by total, segment 1, segment 2, segment 3. 12 columns I will put up. If I put 12 columns, data is too much. What do I read? What do I understand? Lot of data is not good, correct? So they are saying don't report all the segments. These 12 segments will go through 5 tests. They will go to 5 tests. In exam they have been testing only those 5 tests so far, at least in the past. In this test, you have to pass any one. It's not CA exam, guys. You should pass any one. Pass panna podu. Let's say in these 12 segments went through these 5 tests. Only 6 segments passed any one test. You pass all 5, good. One pass panna podu, guys. Then you become a reportable segment. For these 6 reportable segments, you have to prepare the report. That's it. Idan, guys, standard. So I will go in reverse. First I will show you how the report will look. That means for these 6 segments what I should show. Some questions come like that. Then I need to show what are these 5 tests, how the 12 is becoming 6, then how these hundreds of products are becoming 12. Standard is over. We are going to keep it exam oriented. First, how this report will look. Simple. particulars followed by segment 1 to segment 6 up. How many ever segments are reportable, that many columns I will write, and then I will write others is for all the other miscellaneous, and then I will write total. Are you following, guys? In this segment, you don't have to prepare P&L, balance sheet now. Only 6 items. Only 6 items. 1, 2, then 3 and 4 and 5 is others. Under others, you have 2 points. This mattum kaatna podum. First item is segment revenue. I need to know revenue. Total revenue of ITC is 72,000 crores. In that, what is the split? In this revenue, if question has breakup, then you can show within internal, external can be shown if question has that data. In reality, they show it, guys. In reality, they show it. But if question has that data, what internal? ITC can internal revenue. The food products, cosmetics will sell it to ITC hotel. Bingo chips is available in ITC hotel as snacks, free snacks. If you book a room there, are you following, guys? Like that, internal sales, external sales. Next, I will show segment results. Results is nothing but profit. Only 2 things. Upon P&L samandama, I show only 2 things. Segment revenue, segment results. Why not segment expense? You can 1 minus 2 pona expense dana. I will show only relevant data. If you want to do, take calc 1 minus 2. Next come to 3 and 4. Balance sheet related. Segment assets, segment liabilities. In others, we will have non-cash items. Next, addition to fixed assets. So we have these 6 things. One is segment revenue, segment results, segment assets, segment liabilities, others. Under others, we have non-cash and addition to fixed assets. Are you following? This we have to present for in the data that is available. Why are we showing addition to fixed asset? I will know. Okay, segment 6 you did lot of addition this year. That means you are investing into this segment. Non-cash is simply to find out how much is the cash flow. From non-cash, if you add back non-cash to segment result, you can find cash flow. Because from net profit we add back depreciation to find the cash flow. So I will add non-cash to quickly compute cash flow statement without preparing cash flow. That's the logic. Are you following, guys? With this we are done with the last part of preparing segment report. Now coming to the 5 important tests, guys. The 5 tests. Irukra paadisam inga na kepom. Okay. So I will categorize these tests into 5. This is the important part, so I will spend some time, and after that we will quickly run through. Left hand side I call it 10% test. Right hand side we will call it as other test. Something I am calling for our discussion. 10% test. We have 3 tests. What is that? Revenue test, asset test, result test. I will do a sum also and show you over here. Revenue test is simple. Internal revenue divided by total revenue, or internal or external? Both. Internal plus. That means segment revenue divided by total revenue should be at least. That means your segment is contributing at least 10% of overall revenue. Similarly for asset, segment asset divided by total assets not less than 10%. Are you following? What about this? These are 2 things you have to test. We will do a sum. We'll do a sum with all the 5 results. When it comes to result, they are giving some steps. For example, let's write segment 1, 2, 3, 4 and segment 5. The results given is 30, 30 negative, 40, 50 negative, 70 positive. What is the total profit now?
140.
Total profit, guys. 60. Negative is the total is 60. Now I am asking you to apply same segment result divided by total result. How much are you getting? Segment result divided by total result. How much are you getting? All will come up 10%. It doesn't make sense. Because the total is not the real total. It's after set off. That is why we don't apply straightforward 10%. We apply a different step. Step 1. What are the steps to remember for exam? Compute total profit. 30, 40, 70. How much?
140.
Then same way, compute total loss. 30 and 50. 80. Which is higher? 140 is higher. So I will apply 10% of 140, which is anything crossing 14, I will take. All are crossing 14, I will take all. Are you following, guys? Now what if in step 1 here profit is 140, loss is 190, which I will take? 190. Take higher absolute number, ignoring the negative sign. This is because you are giving importance to, in this case 140, 80, 60 is profit. That means automatically profit will be higher. You are giving importance to the number which is contributing to the net profit. Are you following? That's it. This is the result test. These are the 3 tests. What are the 3 tests? Revenue test, asset test, result test. Revenue test, internal, all revenue of segment divided by total revenue of company should be less than at least 10%. Asset also same. Result, these are our steps. In the last 6 attempts, whenever this standard came, they asked only one of these 3. I am not joking. Either tavara they question kekla. So many more are there concepts, but I will brief through everything. What is others test? Others test we have 2 subpoints. One is discretionary test and 75% test. What is discretionary test? Sir, segment 3 fails, sir, but pass. Basically, it is like a nepotism test, guys. So hero's son or daughter, you are the next hero. No audition for you. My choice. Are you following? Like that, the management at their own choice, ஏதாவது ஒரு segment fail ஆனாலும், or even if it doesn't meet the respective threshold, I will still disclose or report it. Fail ஆன segment-யும் காட்டிக்கலாம். Are you following, guys? Why, sir? The reason is not nepotism and all. Reason is sometimes the management feels this segment has to be disclosed. Apollo Hospitals starting education business. Percentage wise pata it will be very small in the whole business. But I want you to know. Then education pandram parada. Are you following? Clear? So for that management at their own choice, they will give explanation and disclose. These are the 4 tests. Okay. Now what is this 75% test? This is a test you should apply in the last test, in the last exam. Okay. After doing all the 4 tests, this test will come. Okay. What they are saying here, segment 1, segment 2, 3, segment 10 வரைக்கும் இருக்கு. Okay. நான் இந்த 4 test apply பண்ணி, after applying these 4 tests, first 4, I selected segment 6, segment 5 and segment 1 and segment 4. Okay. Let's assume 4 out of 10 segments have become reportable segments. Now what I have to do, I will do division. Total revenue of company divided by revenue of segment 1, segment 4, segment 5, segment 6. These 4 segments alone I will check if it's hitting how much?
35%.
The logic is at least 75% of company's revenue is it reported in columnar segments. Are you following? But the catch here is this equation of the reportable segments divided by total revenue should be only external revenue, no internal revenue. That means at least 75% of external revenue should be reported. Are you guys following? What is the logic? Internal revenue, segment 1 will sell to 2. I have 100 rupees. I will give 100 to Bharatwaj. Sales for me. அவன் 300 கொடுப்பான். நாங்கள் அதே 100 மாற்றி 1000 வாட்டி பண்ணி 10 crores turnover. 10 crores turnover. Yes. இருக்கிறது 100 ரூபா தான். What we take home is 50 rupees each. This is only called இருக்கிற 100 ரூபாவை மாற்றி we will do and we will increase. This pyramid structure and சொல்லுவாங்க. Okay, there is something called multi-level marketing. Let's not get into that. Okay. Many in the COVID time it became famous. இந்த சோப்பு நீ வித்துரு, நான் அந்த சோப்பு விற்கிறேன், come on let's take. அந்த படத்துலேயே வரும், சதுரங்காட்டில் வருமே, climax, that only. Okay. And many companies do this multi-level marketing. They will sell among themselves and boost the revenue. You have heard of it, guys? See, maybe you or your family members may be part of it. No offense to that, but scam na. That's it. Okay. அதே 100 rows சுத்தி we have 10 crore சொல்லுவோம். Fine. Clear guys? Fine. Now these are the 5 tests. It's there in our notes guys. What are the 5 tests? Test 1 is revenue, asset, result. Result I explained here. It's simple notes and discretionary and 75% overall estimate. We'll straight away go to a sum very soon. One last thing important in this, year 1, year 2, year 3. Okay. I'll come to this in a moment. Let's do a sum. Segment AS17 is in which module here? Triple one. Fast case. We'll finish off this quickly. Let's do 2-3 sums and that's about it. Okay. They've added about 4-5 new sums in the book guys. Let me take one sum which covers all our tests. 11, this one, huh? Okay, super. This is a new sum added. Like this, many new sums are added, guys. Heavy goods has 6 segments, namely whatever is given below. You have to find what are reportable segments. First, asset. What is total assets? 1,02,000. In this, sir, first 3 tests we have 10% in any order of your choice. 10% test. What is 10%? 10,000. Any asset which is crossing 10,275. Which one? Only except Q. Everything else is reportable segments because they are crossing 10,000. Sir, appo matha test panna venama sir. Adna LM and all. Why should I do other test? Reality panna venam. One test bus. Exam la nee 3 way panni kaatnu. Okay. Next is what? Revenue test. Total these two. How much? 45. 45. Here you have to prepare a total column for both these revenue in your solution. Okay. Then 45,750 into 10% is how much? 4,575. Any segment crossing 4,575 will be reported. Don't look only external column. Look both total. Are you following? Except N and Q tavara, everything else is reportable. Are you guys following? N why it's not reportable? It's only 4,000. But I need 4,575. Clear guys? Come to result test. Result test. This is my result. What is the total profit? 3, 4, 5, 6, 6,000. Total loss 2,000. Which I will consider? Into 10%. 600 I get. Whatever crossing 600 I will take. All I will take. Are you following? That's it. This only you will present over here. Look what he has done. He has prepared a table. In sales what all is coming. In profit everything is coming. In asset what is coming, show them the percentage. Prepare one summary table like this. Anyway you will do the computation in calcium. At the table every time you write the answer. Otherwise how will you get that 4-5 marks? Are you following guys? Clear? This is one question. Let's do one more question. Yeah, that also I will do. Okay, this question only examiner's favorite question. That illustration one. In the question last 6 attempt கேட்டிருக்காங்க guys. Every attempt in all syllabus advanced accounts in the question கேட்டுனே இருப்பான் every time. I hope the same examiner is setting your paper guys. Okay, fine. The chief accountant. This is for old syllabus. New syllabus I can't tell you until few attempts get over. Who is the examiner? What is his mood? Okay, follow. So here, are same thing. Data is much more easily given. Are you following guys? Clear? You will apply as it is. They are thinking only M and N should come. You have to give your opinion. Sometimes they will ask only asset for 4 marks. Sometimes only result for 4 marks. Then you have to explain. Are you following guys? Next let's go to question number 3. Question number 3 is a question where they are asking you segment asset test. There are 3 segments XYZ where total assets is 10, X is 2, Y is 3, Z is. So now they have given individual assets. They have also given total assets, I have to find out what is 10%. First case, is it more than 10%? Yes. Second case, more than 10%? Third case, more than 10%? Yes, 5 by 10 is 50. So I will report all X, Y and Z. Answer is correct, but how many marks? 0 marks. Most people do this. Now they have also given included in the asset is deferred tax. Now if you remember AS 28 when I revised the top down and bottom up, sometimes I can't allocate asset to segments. Sir, ITC, the director of ITC has a BMW car which the company purchased for official work. Now I am director of ITC for whole company, not CEO. Full company, tobacco products, stationery, everything. In the car, in the segment la. Are you following, guys? Clear? So some assets cannot be allocated. Okay, mostly they are corporate assets like advance tax paid, TDS deducted. See, if you can identify the segment, proceed. Sir, TDS is for this segment, sir. You take it. But when you can't identify, eliminate it from the entire equation. Deferred tax is one such. We can't identify because you know deferred tax is not because of one item. It's because of multiple items. Correct? And we set off itself within the same head of income, we set off. So you should do the same equation 2 by 10, but you should remove deferred tax from equation. What is total deferred tax? 1.20 crores. So 10 minus 1.2 you get 0.5. You get 1.5 divided by
8.8.
this also is more than 10%. Like this, if you look at this, for each they have removed the deferred tax and then it crosses 10%. Therefore, all are reportable segments. Are you following, guys? Perfect. Next. Okay. So now if I come back to our notes to discuss what we just saw here, only 2 pages, guys. AS 17. We are going to finish in another 5 or 10 minutes. Segment revenue, what I should include, what I should exclude. No need to mug up, just read like a newspaper. Internal, external, common revenue allocated on a reasonable basis. Exclusion, what? The revenue which I can't allocate to a particular segment. Company, irkira motta kaasa which they went in bank FD. Bank FD, bank is giving me interest. Which segment? I can't say, it's all segments. So, interest, dividend, these things will be excluded. Extraordinary items will be excluded. AS5 talks about extraordinary items. Are you following, guys? Similarly for expense, include all the internal, external and common expense. In the interest dividend I will exclude. Same way for assets and liabilities. What to include, what to exclude is given here. Look at the exclusion. Income tax, outside investment, company invested, all of that. Here exclude corporate items like provision for tax, dividends, debentures, those things. In the basis, I made you do deferred tax sum. Are you following, guys? Clear. Next. Can we proceed, guys? So next important concept, something called comparables. They have not tested, but I saw it in RTP and MTP questions in old syllabus, but still not added in our new syllabus study mat. It's a very good concept. Let's say I have segment 1 to segment 10. I have 10 segments. Okay. Now, first year I reported segment 2, segment 5, segment 7, segment 9. Are you following? Okay. Now, in these 4, this came because of 10% test, this came because of 10%, this came because of 75%, this came because of discretionary test. Okay. Now, next year I am reporting only segment 2, segment 5, segment, let's say 6. Are you following? Now, these every year you should apply the test again or you should just carry forward. Reapply test every year. So second year test la pass we have segment 2, 5 and 6. Okay, segment 2 is there in current year, it's there in previous year. Okay. Segment 5 also is there in current year, it's there in previous year. Segment 6 is there, it's not there in previous year. What to do? Prepare a previous year for segment 6. Okay. So then what about this segment 7 and 9? Will it come next year? It failed, so it will not come. No carry forward. Are you following, guys?
Yes, sir.
Segment 2 passed by 10%, segment 5 passed by 10%. Let's say segment 6 passed by 75%. Let's go to the third year now. Third year, let's say the segments which passed are segment 2 10%, segment 4 10% and segment, let's say 8. Now what will happen? Now segment 2 has previous year, good. Segment 4 is not having previous year, I will prepare. Segment 8 is not having previous year, I will prepare. Now come in reverse. Now what about 2 is there next year, okay. 5 is not there, what to do? 6 is not there, can I carry forward? No. But 5 can be carried forward. No sir, purila sir. Any segment which has passed the 10% test here can be carried forward up to 1 year. Are you guys following? So segment 5 will come to this year. Are you following? So in my year 3 I have segment 2, segment 4, segment 5 and segment 8, where these three 10%, 10%, 10%. Now year 4, which will be carried forward? Which will be carried forward, guys? Only 2 and 4. So carry forward is allowed only for 1 year. Are you guys following? Simple as whatever segment is reported in this year, next year you freshly recompute everything. Sir, should I carry forward something? Yes. If the test passed the 10%, but it's not there in next year, then you can carry forward to the next year. Are you guys following? Clear? Any doubts still here? Perfect. Okay. Next. That is what we have here also. Comparatives. When an operating segment is qualified in year 1 to be reportable based on quantitative threshold, then such segment will be reported in year 2, even if the segment does not qualify the test. Similarly, a new segment qualified in year 2, then its corresponding previous year figure should be reported. This carry forward principle is only for 1 year. Are you following, guys? They have not tested this in exam yet. Clear? We don't have a question also for that. Next, other small procedures. Now, so if I go to the start, we are almost done. If I go to the start of the chapter, we finish the report. Now you know how these segments become reportable segments. Now how the products will become segments. Now if I write Apple, for example, Apple, they have multiple products like MacBook, iPad, watch, iPhone, Vision Pro, AirPods, etc. They also operate in US, Asia, Australia, Europe. So now products can be classified country wise, correct? Or I can rewrite this, taking all the products to my rows. I can classify it product wise. I'll write here iPhone, iPad, all of that. Are you following, guys? So do I show the breakup country wise or product wise? Do you want to know iPhone sales globally or iPhone sales wise? You want to know sales breakup product wise or geography wise? Both, correct? So you will also report both, but one will be a primary reporting, one will be a secondary. So you will prepare two dabbas. I will prepare two dabbas. One is a business segment. Business segment means classifying my products based on business products and services. Geography means classifying on a geographical basis. How do I classify in business and geographical? You need to give importance to this basis of classification. Products now give importance to nature of products and all the cosmetics one side, stationery one side, method of production, capital intensive, labor intensive, method of distribution. Sir, own franchise, give franchise, own store, franchisee store. Are you following, guys? Class of customers, what is this? Class of customers. Higher class, lower class, அப்படியா சொல்றோம் இல்ல. It's more of retail customers, wholesale customers, அந்த மாதிரி. Okay. Or for AC company, domestic users or corporates, the industrial use, அந்த மாதிரி class of customers. Regulatory requirement, drugs, medicines, then tobacco products have high regulations. Some products don't have regulations. Within drugs, within medicines, they have the schedule H drug and all of that. When I say drug, I'm talking about medicines are called drugs, guys. Drugs and pharma industry. Don't think anything else. Okay. Fine. யோசிக்கிற பரத்வாஜ் புரியல அவனுக்கு இன்னும். பேசிஸ் ஆஃப் கிளாசிஃபிகேஷன் அதான் யோசிச்சே நீ. The pharma drugs, Sun Pharma, those medicines are called drugs. It has Schedule H drug. It's not allowed without prescription. So some medicines in pharmacy you will not get if you don't give prescription, guys. Okay. Fine. Next. Following, guys. Okay. Purida Bharatwaj. Yeah. Okay. No. Let's proceed. Based on geography classification, currency risk. I can categorize my countries based on currency risk. Europe fulla is one. Australia and New Zealand one. Exchange control regulations based on the FEMA regulations that we will change. I am not getting into detail over that. Similarity of political economic environment. Like let's say India and Pakistan, even though they are neighbors, the political environment is not good. So I cannot classify both in the same. iPhone cannot be sent in the same flight to both the countries. Are you following? Okay. Special risk associated with operating in specific areas, war zone areas, or possible war could come there, those kind of areas. Proximity of operation or location. When US is sending a shipment to India, they can send the same shipment for Sri Lanka also if it's coming to Chennai. Proximity, location of operation. In the basis you can classify. Now, does this mean geography is, we'll go to a question now. Are you able to follow, guys? Yes, sir. So with this theory part of the standard is, only one last thing is left called secondary reporting. I'll come to that in a moment. Let's do last two questions and close this. Now, in practical questions, okay, follow, guys. Look at practical question 2. Company A is engaged in the manufacture and sale of products which consist of two business segments. The products of the company are sold in domestic market only. So business segment I have two products, correct? Two segments. The management says in order to reflect better operating information by two broad market segments, rural and they want to classify geography as rural, urban. Abhi pannalama? I never told you geographical segment only country wise. It could be within country, rural, urban, north, south, anyway I can categorize. Are you following, guys? Yes, so there are two segments, business segment and geographical segment. In geographical segment, its classification can be on any manner. Are you following, guys? If you take this question next. Like this, these are all small questions, guys. They gave many new questions. These are the only result test. I'm not doing all of this. These are all again only result test. You take the total and do it. This question you mark it as important. You try it out later. Not this, not this. This is easy. Okay. This you try at your end. This question is a good question. If he wants to ask you for 10 marks or 8 marks, they will ask illustration 4. It's fairly simple. If you look at the answer, you will know. They have just given all the details. You have to prepare the segment report. Remember, we prepared this revenue, domestic export, external, internal. Otherwise, you have to prepare one solution. But all the data is given. You just have to categorize. At your end for this standard today's homework, go through illustration 4 of the study material. Are you following, guys? Yes, one last thing before we close AS 17. Secondary reporting. What can I report? The primary report we saw, main one. Yes, that can be business or geography. If you report geography as the primary, then secondary will be business. See, let me write down. You can report two things, guys. Business segment or your wish which you want to report. So, in primary reporting, you should choose business or geography of your choice. Do you want to report product and service wise or country wise? If you choose business as primary, then secondary has to be geography. If you choose primary as geography, then secondary will be business. Are you guys following? Yes, sir. And my secondary ku what should I report? And the 5 tests we did know. That is for the primary dabba. Are you following, guys? Primary dabba da and the 5 test. Secondary ka enna solran? Revenue greater than 10% from external customers. Other report pannu. Segment assets greater than 10% of total segment assets and addition to assets alone I will disclose. This is a new concept. I mean already there, but first time they asked the question from this area in the book. That question is third question. PK has identified, last question, with this we will close. PK has identified business segment assets, primary reporting format. It has identified India, US, USA as the three geographical segment as secondary reporting. It sells its product in the Indian market, which constitutes 70% of the company's sales. 25% is sold in USA and the balance is sold in UK. Upon how much is sold in? Only 5% in. I should report only more than 10% from external. So as part of its geography secondary reporting, segment revenue from export sales, where such sales are not significant, which you should disclose, guys. I told you only sales from 10% or more from external customer I should disclose. Yes, so I will disclose only India and US. No need to disclose for UK. So therefore somewhere will be given revenue from UK. Since it does not meet 10% or more, you need not disclose. This concept was there in old syllabus also. They never tested. Now we have a first time they added a sum for this in the study mat. Are you following, guys?
Yes, sir.
Clear? This sum, this time also simple scoring and the test that's it. With this, AS 17 comes to an end. Perfect. Okay. This speed level we will go to AS 18. Same flow. 20 minutes we will close AS 18. And then we will go to AS 3 after this. Follow. AS 18 talks about what, guys? Related party disclosures or related party transactions. Standard is simple, it's just going to be twofold. Okay, I will finish it in 20-25 minutes maximum. Okay, one, you should know who are related parties. So who is a related party? One chart is there, I will run through that diagram. And second is, once you identify related party, what should I disclose? That disclosure part I will finish first. As per this standard, there are two types of relationships. There are two types of relationship. What is that? Relationship based on control, relationship based on significant influence. Based on this standard, I am seeing some of you what relationships are you talking about. Based on this standard, especially today, these Gen Z kids have so many terms, different types of relationship. We are the patient and marathon mundu. Okay, fine. Recently, I saw a reel where somebody was talking about something called, they introduced something called A to Z dating. For me, it was new for me also. A to Z, not together, they will do everything in A to Z. Meaning, for example, they will go and do together, let's say A. We will go to amusement park together, A over. Anamai, okay. C, A, B, C, we will go to class together, C over. Like that we will finish A to Z. New thing I saw reel. Left to your imagination. Come back now. Fine. This, come back guys. Here AS 18 talks only about, I am not educating you on these things, guys. But I saw this, okay. So AS 18 talks about two types of relationships. One is relationship based on control, relationship based on significant influence. What should I disclose? Sir, how do I know it's control or significant influence? Towards the last I will teach you. The conclusion you arrive at, control relationship or significant influence. Control means you have to disclose that there is a relationship of control plus disclose details of any transaction. For example, Adidas is a holding company, Reebok is a subsidiary company. In reality, Adidas is the holding, Adidas Reebok one company, brand da mathi vepom. Okay, Adidas is the holding, Reebok is subsidiary. Now I have to disclose that, hey, Adidas and Reebok have a relationship of control, holding controls, subsidiary, and I should also disclose if there is any transaction between them. During the year, they gave loan, they purchased this, all of that. Relationship of significant influence. For example, Adidas has only 22%. Here let's say 60% are control. 22% are associate.
Yes, sir.
I have associate relationship, let's say with Abibas. Okay. Now, this is a relationship of significant. This I will disclose only if there are transactions between Adidas and Abibas. Look at the difference, guys. Sir, what to remember for exam? There are two types of related party relationships in this standard. Relationship of control, relationship of. Relationship of control means I will disclose in my financial statements that who are all related to me based on control and what was the relationship I had, what transaction, how much money is sold, how many goods are sold, how much is paid, how much is not paid, how much bad debts, this is how much percentage of total sales, all of that. Are you following? If it's relationship of significant influence, I will disclose all these details only if there is. So transaction, don't disclose. Adidas and Abibas had no transaction last year. I will not disclose anything. Are you following, guys? Now this period of transaction, should I check the relationship for whole year? Should they be in relationship for the whole year or any one day enough? Any one day is enough. The standard is applicable if you are related just for not even one day, one point of time, even for a particular period like 2 minutes. Relationship was there in event. Are you following, guys? Clear? Yeah, I became holding, then again I sold, guys. Okay. Now, follow. Now, let's say for the first 3 months, they were related parties. Next 9 months, they were not related parties. Now, I should disclose transactions of the whole year, only 3 months. Only 3 months. Are you following? You don't have to disclose the transactions that took place when you are not related parties. Only these 3 months. Sir, now coming to a complicated relationship. Okay. Sir, during the year, they were related parties only for this period. The relationship was on and off. Okay. Is the standard applicable? Yes. Okay. Now, only for the period where they were related, that time only I should, those transactions only I have to. What happened when I was not related, I need not disclose. Are you following, guys? Yes, understanding? Clear? Yes, this you guys have experience. I don't know how to tell. Fine. Next. Follow, guys. So now, so disclosure. Conclusion is over. Conclusion is what? Again, one more time. There are two types of relationship. Control and control means disclose everything. Whether transactions there are significant influence, disclose only if there are transactions. These transactions will be disclosed only when the transaction took place if they were related. Are you following, guys? This is one part. Next, who is a related party? You need to take for a company. For example, let's take your name, third row middle, next to Radharam. Dinakaran. Yes, forgot, but I remember the name. Dinakaran Limited or Dinakaran Private Limited, whatever. He is the entity. We are going to find who are all related parties for Dinakaran. Dinakaran's holding company, Dinakaran's subsidiary, Dinakaran's associate, Dinakaran's joint venture. If you are related to associate, for associate also they are related. Are you following? Yes. So for Dinakaran's holding, subsidiary, associate, joint venture. Again, Dinakaran's holding, subsidiary, associate, joint venture, first stage. Next, now we will name Dinakaran's holding as, let's say, Bharatwaj Limited. Okay. Now Bharatwaj Limited is the holding of Dinakaran. Yes, Bharatwaj had one more subsidiary, let's say Viju Limited. Okay. Now in the Dinakaran Limited ko Viju Limited, is there a relationship? Yes. They are not directly related. Both are controlled by the same person. We are like brothers. They are like sisters. Same person controlling. Are you following, guys? So this is called co-subsidiary. It's also known as a sister concern. Okay. Following guys. So first, who is related to me? If I am individual, my holding, subsidiary, associate, joint venture and my co-subsidiaries. Are you following guys? Next. We'll take two other people. Let's take. One second. Satyaranga illiye. Fine. One second. Now one second. Individual. Okay. In Dinakaran Limited have a KMP of Dinakaran Limited. Who is that? Behind Dinakaran, who is that? Next to Kamesh. Vignesh. Vignesh is the KMP of Dinakaran Limited. Then Dinakaran and the KMP Vignesh are related. Even Vignesh's wife, Vignesh's relatives are also related to Dinakaran Limited. Are you following guys? So who is related? Dinakaran Limited. For Dinakaran Limited again, holding, subsidiary, associate, joint venture, co-subsidiary. And any KMP in the company, who is that? Vignesh. And Vignesh relative. Who is relative of Vignesh? Vignesh, do you have siblings? Yes, no. Okay, let's say future Vignesh has kids. Now, is Vignesh related to his kids? Yes, but the standard says no. What standard? Take it down. Okay. What the standard is saying, just because they are your son or daughter, they are not related. What if, let's say, in the future, example, let's say Vignesh and his son are fighting, they are not talking. Okay. Now they are not related as per this standard. Are you following guys? So, that means Mukesh Ambani and Anil Ambani as per this standard are not related because they are not in talking terms. They can't influence each other. Don't tell sir, Anil Ambani came for wedding sir, I saw photo. Are they in a position to influence each other? No. Are you following? Next. Let's take some other individual. Madhav. Yes, we missed Madhav. Madhav has some kind of an interest in Dinakaran Limited. What interest he has? The interest he has could be control or significant influence. Madhav is an individual, separate individual who either has control or significant influence in Dinakaran. Then this individual is also related to Dinakaran and Madhav's relatives. Are you following guys? So, now again let's come to the definition. We are going to close this quickly. Dinakaran Limited. For Dinakaran, holding, subsidiary, associate, joint venture, co-subsidiary. KMP and their relatives, any other individual and their relatives, if they have together control or Madhav is not having control, significant influence. But Madhav along with his future wife, they have together control, significant influence in Dinakaran Limited. Then both of them become related party. Are you following guys? No. Let's have this is one part of definition. Last, let's have some other entity. Yes, we already took. Yes. Veera, okay. Okay, Maniraj edukkalam. Maniraj Limited is one individual company. Okay. Maniraj Limited ku Dinakaran ku sambandhame kediyadu. No relationship. But this same Madhav along with his relatives either has control or significant influence. Then Maniraj and Dinakaran are related parties. Or this Vignesh along with his relatives, they also are KMP here or more than KMP, they also have control or significant influence. Then they are also related parties. That means, can I say these, let me call these people as set A, these people of set B. If either people in set A or set B have control or significant influence in some other company, Maniraj, then this Maniraj Limited and Dinakaran also related party. This is the end of the definition. One last time. For Dinakaran, for the companies, holding, subsidiary, associate, joint venture, co-subsidiary. My KMP and their relative. Any other individual and their relatives, if they have control or significant influence, such KMP and individual along with the relatives, in some other company, Maniraj, if they have control or significant influence, that some other company, Maniraj and my main company Dinakaran are related parties. Are you following? Now if you learn these terms, the standard is over. What are the terms? So who is relative? Who is KMP? What is control? What is significant influence? Definition is complete. Are you following, guys? Clear? Now when you disclose in our example, I will take 1 or 2 questions in the standard. He will just give one company, Dinakaran, and give some relationship with multiple companies. You have to identify for each company. For Dinakaran, Bharatwaj Limited is holding up. For Bharatwaj, Dinakaran is subsidiary. For Dinakaran, this is associate. For the associate, Dinakaran is investing party. For Dinakaran, that is the joint venture. For the joint venture, Dinakaran is venturer. Are you following, guys? They are the venturer. Clear, guys? Any doubts till here? So we'll go and see quickly notes. I'll just summarize everything in the notes. So related party relationship are as control, disclose everything, even if transactions are 0. But related party transactions, I will disclose what? Name of party, transaction, amount written back, outstanding, everything. Clear? Next, this only we discussed. This entity only is Dinakaran. For the entity, associate, joint venture, holding of Dinakaran, subsidiary of Dinakaran, fellow subsidiary of Dinakaran. Then KMP is our Vignesh, individual is Madhav. So individual and their relatives, and KMP and their relatives. Here I gave a set N and set M. If these people in some other entity, Maniraj, have control or significant influence, they are related parties. Are you following, guys? Super. Now let's go and see the key definitions. Relative. Here, relative is my close family. One line of relationship in all ways. Parents, kids, brother or sister, spouse. That's it. Don't go to one more. No grandparents, grandkids, in-laws, nothing. Close family. One level above parents, one below kids, brother, sister, spouse. But you who may be expected to be influenced, or you are influencing. Either you can influence them, your kids, or you are being influenced by parents. Sir, both husband and wife are not in talking terms. They are not related parties. Are you following, guys?
Yes, sir.
Clear? Sir, how will we know, sir? எனக்கு எப்படி சார் தெரியும் அவங்க சண்டை போடுறாங்களா இல்லையான்னு? So as an auditor, when you go to a company, you need to get declaration from that director and the people relevant KMP over there. உங்க related party யாருன்னு நீ எழுதி கொடுன்னு கேட்கணும். So he will tell, he will write and give. Are you following, guys? Practical applicability is a challenge, but it's simple. Oh, here at least theoretically it is simple. Clear, guys? What is KMP? KMP here is not MD, CEO. Even a security analyst can be a KMP if he meets the definition. So KMP எப்படி define பண்ணிருக்கானா? KMP are people who have both authority and responsibility for planning directly and controlling the affairs of the enterprise. Are you following, guys? Simple. School teacher, class teacher is responsible of that class and has authority in that class, but she doesn't have authority about syllabus, when to keep class or not her. So mainly she is more of having responsibility. Who has authority and responsibility? Principal. Restaurant branch manager has responsibility. Who has the authority and responsibility? Owner. Are you following? So mostly company who will they be? Director, CEO, those big people. Are you following? They have authority and responsibility for what? Planning, directing and controlling the affairs of the enterprise. This is a question hints you have to pick up. Quickly we will go to questions. Last 2 more points. Control and significant influence. Control is same like Companies Act. Holding and first point. Voting power of more than half of nominal share capital. Holding subsidiary more than half of voting power. Second, controlling the composition of. Simple. I don't have shareholders, so I can control composition of board of directors. Example, CSK is owned by India Cements. Now India Cements only controls CSK by more than half of voting power.
Yes, sir.
But still whatever Dhoni tells, as long as he is there, CSK will listen up.
Yes,
So the board of CSK is in whose control? Dhoni's control. So he is not going to misuse that control, but if he wants he can make some changes. So you have the ability to control the composition of board of directors. But we won't tell Dhoni and CSKs later. If you have the ability to control, that's it. These two are nothing but holding and subsidiary. Companies Act definition. AS 18 control has a new point. What is the new inclusion in AS 18 which is not there in Companies Act? Control more than half, composition of board of directors. Good. Substantial interest in voting power together with the power to direct affairs, financial and operating policies of the enterprise arising from statute or agreement. What is this? Example, you are able to control some other company not because you have shares but through an agreement. Example, Jio, Airtel, BSNL, Vodafone Idea, all of them are in whose control? TRAI, Telephone Regulatory Authority of. So TRAA controls these four companies in terms of decisions. Are you following, guys? So you have substantial interest in voting power to direct the affairs through an agreement. Are you following, guys? Clear? What about through statute, through law? State Bank of India controls some banks, State Bank of Mysore. That is through law, even though I might not have any voting power. In terms of shares, are you following, guys? RBI, perfect. RBI has control over many banks. Then they become related parties. Clear, guys? That's it. What is significant influence? Significant influence, I am just getting the crux of key points. You don't control, but you can participate in the financial or operating policies, but not control. I can give my thoughts, you decide. You can participate in the policies. Here, how do I know, sir, you have influence? They are basically saying, if you have more than 20% or equal or more than, that means you have significant influence. If you have significant influence, you are an associate. If you have less than 20%, then you don't have significant influence. That means you are not an associate. Are you following? But the opposite is also possible, meaning, sir, I have more than 20%, but I am not an associate. See, what is the default rule? Default rule is if you have more than 20%, you are an associate, more than or equal to. But the other way is also possible. Sir, I have 32%, but I am not an associate. If you can prove that you don't have, no, you are not participating in the poll. Look at this. Substantial interest in voting power, 20% and it is presumed to give rise to significant unless demonstrated. Vijay Mallya has 22% in Kingfisher, but after he flew away, he is not having any influence now. So even though I have more than 20%, my power is of no use. Absence of substantial interest in voting, I have less than 20%. It is presumed that there is no significant influence, default rule, unless demonstrated. Dhoni has less than 20% in CSK, but still he has significant influence. Are you following, guys? So default rule, more than equal to 20 now, associate, significant influence. Less than 20 now, no significant influence. But even if I have more than 20, if you can prove you don't have significant influence, you are not covered in AS 18. If you have less than 20%, but if you prove you have significant influence, you are covered in this standard. Are you following, guys? Yes, everybody with me, clear? Yes, super. With this, we are done with the definitions are done. We will just do 2-3 sums and then we will actually close. AS 18 last time had only 1 or 2 illustrations. This time study math has 13 illustrations. I will just do 2 to 3 and then close this standard. Yes, all of you with me? Let me do a few illustrations here. I will use the diagrams given in the book itself. Okay. This is illustration number 3. See, diagrams will not be given for you in exam. You have to draw these diagrams. Now follow. After giving the data, they drew this. X has 28% in Y, Y has 32% in Z. Who is related to whom? For X, Y is an associate. For Y, Z is an associate. For Y, X is investing party. For Y, Z is associate. For Z, Y is investing party. What about X and Z? Nothing. So same thing, X, Y, Z. X has 70%, Y has 60%. Now, X is holding for Y. No, we'll just go one by one. For X, Y is. For X, Z is. Subsidiary. Subsidiary is my subsidiary. I have control. Always do it entity wise, you won't get confused. X over a. For Y, X is holding, Z is subsidiary. For Z, Y is holding, Z is ultimate. That means subsidiary is my subsidiary. Associate is not my associate. Are you following, guys? Okay. Next. Here they are asking, for whom they are asking relationship? For R. Okay. They are asking who are all the related parties only for R. Can we figure out who are the related parties only for R, guys? For R, one by one. X is subsidiary. Only for R. Don't see for others. For R, Q is P is ultimate holding. Till here easy, sir. For R, S is co-subsidiary. It is like that Viju and what to say? Dinakaran Limited. Look at this. R and S both are controlled by Q, co-subsidiary. So what about R and W by Y? Y is controlled by whom? S. S is controlled by whom? Q. R is controlled by whom? So we both are fellow subsidiary or co-subsidiary means we are all controlled by the same person. Are you following, guys? Clear? Understanding of? Next. What about this question? See, diagram வந்து questionல examல கொடுக்க மாட்டாங்க, guys. Paragraph தான் கொடுப்பான். Study mat as diagram, so I am using diagram to explain. First நீ diagram போடணும். Clear? Now UH, they are asking the related parties for each above. For UH, subsidiary 1 is subsidiary 2 அவனே கொடுத்துட்டான். Joint control, associate 1. What about for subsidiary 1 UH? For subsidiary 2 UH. For JC1 venturer. For associate 1 investing party. Are you guys following? Okay. Next. Look at this scenario. Robert has 70% shares in P and Robert's wife is Mrs. Andy. Now question is Andy and P related? Yes, we saw, guys. Who's Robert in our example? Madhav, guys. Madhav and Madhav's relative Andy, they are related parties. They are related to whom? P Limited. Are you following, guys? Instead of having 70%, if Robert is KMP, then Madhav becomes Vignesh. Are you following, guys? Now are you getting it? Hello? Now here, other question. Robert is the managing director of P Limited and Mrs. Andy, spouse of Robert, received remuneration of 5 lakhs for the year. Should I disclose this? And Andy left the job on 30th June. Now, till or Miss Andy, who's Miss Andy? Spouse of Robert received for services for the period 1st to 30th June. After that, she left. So you have to disclose transaction up to 1st April to 30th of June. Are you following, guys? Yeah, until this period. Okay. Okay. Fine. Now we'll go to the last few exceptions and close the standard. Now you tell me guys, is this related party relationship or not? For me, or this classroom, electricity is coming from TNEB. Is TNEB a related party? No. No. Let's say for example, Nestle is selling chocolates to everybody. Nestle buys it from some job worker, or leave Nestle. Let's take Adidas. Adidas manufactures clothes where guys? In Tirupur, Tamil Nadu. Tirupur, Tamil Nadu, there are many units. They manufacture clothes and send it to Adidas. Adidas will put the logo and sell it to everybody. Now in this Tirupur, this company, it will be a small company, yarne theriyadu. But avanda manufacture panni Adidas ku vikran. So if Adidas cancels the contract, you are full gali. I am fully dependent on Adidas for my livelihood, but I have a good livelihood. I will have an independent house, all that is fine. Because I am manufacturing for Adidas. So can I say Adidas and this company are related parties?
No.
No. Why? They are not related parties. Are you following guys? But it looks like related party, because there is some relationship. Are you following? So the standard gives 6 exemptions. It gives 6 exemptions, which says 3 things are exemptions. That means they are related parties, but AS 18 is not applicable. The next 3, they are not related parties. They look like related parties. Are you following? 1. For us, this public utility providers. Who are those people? Public utility providers like electricity, water, trade unions. In this movies you will see employees coming and fighting guys. The trade unions. Providers of finance. Who are they? Bank. Bank, just because they are giving me loan, they are not my related party. Or any other government departments or government sponsored bodies. Tamil Nadu Cricket Association. They are not related parties to the company. Are you following guys? It might look like related parties. Now, sole supplier, that Adidas example, Tirupur. Sole supplier, sole customer. For the Tirupur, the only customer is Adidas. Let's say, sir, I am doing business, sir. 40% of my sales, ore aal vaangran. Sole, or I am buying all my goods from one person. Sole supplier. Sole franchisee, with whom enterprise has significant volume of. Basically my debtors and creditors, with whom you have lot of business. Just because they have lot of business with you, they don't become your related parties as per this standard. Now, 2 companies merely having a, let's say Madhav is director in 2 companies. Just because Madhav is director in 2 companies, those 2 companies don't become related parties unless Madhav is a KMP or has control or has significant influence. Are you following guys? These are the 3 points. Next, let's say I will name some companies. Tell me, are they related party or not? ONGC, BSNL, LIC, IRCTC. Are these related parties?
No.
Then any other government company? Bail, sale, okay. Are all these related parties? Who is the shareholder in all these companies? Central government or? Then aren't we fellow subsidiaries? Co-subsidiary, hello. We are all controlled by central government. Then we are related parties, fellow subsidiary, hello. Central government is all subsidiary companies, correct? So all these are government companies. That means all government companies are related parties. That means if there is any transaction between LIC and BSNL, any transaction between LIC and ONGC may be there. Can I disclose? No. I mean, AS 18 is applicable but exempted. Government is saying, government kulla nadakra transaction we will not disclose. We are very transparent. Are you following? Transaction between 2 state controlled enterprise exempted. That means state controlled enterprise, government company related parties. No need to disclose as per AS 18 exempted. Are you following guys? Now let's say tomorrow Dinakaran becomes the CEO of, let's say, Jio. Oh, not Jio, sorry. CEO of, let's say, HDFC Bank. He is the KMP of HDFC Bank after 20 years from now. Now, is Dinakaran a related party with HDFC? Yes. KMP of HDFC sonane? Yes. So, he will have bank account with HDFC or some other banker? HDFC. Now, should I disclose his bank balance? No. So, Banking Regulation Act says no need. Where law permits, confidentiality exempted. Defense, come on, disclose how many ships we have, how many aircrafts we have, where they are located in India, disclose to the world. Law permits, confidentiality. Last one, if you remember consolidation, holding and subsidiary company, if they have transaction between themselves, in one step, intercompany la kammi panniruvama? Yes, sir. Trade receivables, trade payables, we set off, guys. Yes, sir. But as per AS 18, shouldn't I disclose transaction between holding and subsidiary? Yes, sir. But you are doing set off. Yes, sir. So, intra-group transactions in case of consolidated. Yes, so, AS 18 is an exception for AS 21. Are you following, guys? Clear. These are 6 exceptions where they might ask in exam. Any doubts, guys? Hello? Okay. So, in this, if I just have to take one question, just one last question. Yeah, look at this question. Question number 8. UK Bank has 23% shares of voting rights in P. They provided 20 million loan at, and then they also have the power to nominate one member as the board of director of P. Is the bank and P Limited related party? Yes, because of what? They have more than 23%. That means they become an associate. They have significant influence. Sir, they gave loan. Are they related party? No. Providers of finance are not related party, even if they can nominate one member on the board of directors. Are you following, guys? Yes, everybody clear? Yes, understanding? Any doubts till here? That's it. With this, AS 18 comes to an end. Okay. Perfect. Super. Now we will go to which standard next? AS 3. 3. We will go to 3 and then go to the rest. See, some standards like AS 23, 27, 25. I have already released the video of that on YouTube. 23 is just 2 hours. 27 is just 2 hours. 50 to 10, 25 also is just 1.5, 2 hours, which I have already put on YouTube, which is the full video. Okay, so I am trying to do these standards. Are you following, guys? So you can anyway go and find it over there. But AS3 will take. Follow guys, let's start off AS3. Okay, AS3 cash flow statement. I will at least do one sum in direct, one in indirect. First understand that AS3 first classifies into three types of activities. Why do we do cash flow statement? Why it's very important? It's actually very easy to prepare cash flow if you understand the concept. Okay, let me prepare a P&L. Sales 10,000 crores, purchases 4,000 crores, gross profit 6,000 crores. Then let's say all expenses put together is 3,000 crores, net profit is 3,000 crores. Balance sheet I will write reserves and surplus 3,000 crores. But there is no use of this profit of 3,000 crores if, and then let's say this expense I am yet to pay guys. Credit la vaangirukka expense I am yet to pay, I will pay in 2 months. So I will have here a creditor how much? 3,000 crores, and the sales predominantly is okay, and let's say this purchase is 4,000 crores, adum credit purchase. So again one more creditor 4,000, and this entire sales is credit sales. Debtors 10,000 crores. எனக்கு எவ்வளவு இருக்கு? 1 ரூபா வரல. I purchased on credit, sold on credit, took expense on credit. I am waiting for my debtors to pay. Are you following guys? Now why cash flow is important? Your net profit reflects, okay, you're operationally you're profitable, but how much of that profit is in cash and you're with you? So sometimes, or in reality for funding everything, they give more importance to cash flow than P&L. Because here I can play around with numbers. But what is the cash I have with me is very important for a business. That is why we have to prepare a cash flow statement. Cash flow statement AS3 classifies activities into 3 types. Everybody knows that. Operating, investing and financing activities. What is this? These 3 things basically they tell us that. Let me give an example. Let's take a cash flow statement which looks like, everybody knows the format of cash flow. Let's say a cash flow looks like this. Operating has a negative 300. Investing has a negative 400. Financing has a positive 900. Positive 900. Therefore my closing cash how much guys? 200. இதை பார்த்தா என்ன தெரியும்? If you look at this, okay, I am positive cash flow, but only if you prepare this in this way I will understand. Okay, you borrowed 900 rupees and the borrowing use பண்ணி you invested in your business and your business also gave you negative cash flow. That means you are surviving because of borrowed funds. If this 200 gets over, you can't do anything. That means you need to be operating cash flow positive. If it's operating cash flow is negative, எதுக்கு நீ business பண்ற? Are you following guys? So it gives me an analysis about a business. So basically operating cash flow is your core operations, how much money you are getting. Investing includes any investment into assets, current or long term investment, and financing is basically all your borrowings. Quickly if you look at these points you all know very well. If I just quickly have to run through what all comes in operating, even I have never read this after I made the note. Okay, from sale of goods, supplier of goods, then cash receipts, dealing in securities, then if you are into securities, derivative purpose, or if you are into trading business guys, investing, purchase of PPE, then sale of PPE assets. If it's investing security, then those securities I will take. Similarly, financing, buying new shares, issuing debentures, repayment, finance lease, all these things. Now what is important is how are you going to solve a sum in this method? We have 2 ways of solving. What is it? Direct method and indirect method. Direct and indirect. For investing and financing, we have only direct method. Only for operating, we have direct or indirect method. Direct method is straightforward. Let's do a sum quickly. And then indirect method, I will do 1 or 2 big sums for you to get clarity. This is in module 3. Yeah? So cash flow is there in 3 modules. With 2 modules. It's there in module 1 and module 3. Adhe AS3 da. Okay. At least now you should have fixed it. But padla. Page number 60. Indirect is where most of us get stuck. Correct?
Yes, sir.
Okay. I will just do one sum in direct method just for you to get the feel of this chapter, and then I will do a proper sum in indirect method for you to get full clarity. Illustration 3 in module 3, cash flow statement, direct method. Even I thought they won't ask in exam, but when I wrote my CA final, first question sorry yeah, follow guys. When I wrote my CA final, the first question was a direct method question. So sometimes examiner will surprise you in a good way also. It's like a batsman is waiting whether it will be off spinner, leg spinner. Sometimes straight ball pono. All you have to do is defend it. Now, look at this question. They wanted to prepare the cash flow statement. They have given the opening balance of cash and closing balance. What to do with this? Nothing to do. End of the sum. Cash sales comes where, guys? See, direct method is nothing but they will give you a cash account in form of a ledger. You have to prepare this in a statement classifying in operating separately, investing and you need to write in the same order. First operating, next investing, then financing. So in this ledger, if you see, cash sales comes in. What is 2 trade receivables? Receipt from my debtors. This comes in. Trade commission. Sale of investment. Loan from bank. Financing inflow. All my debits are inflow because on debit side of my cash. 2 interest and dividend received. Any income you receive from investing becomes part of my investing. This side if you see, by cash purchase, operating outflow, by trade payables, operating, office and selling expense, income tax, operating, main operations only we pay tax. If you are able to identify income tax, how much is for financing, then you split. How much is for investing, you can split. CA final, we don't have. By investment, investing, repayment of loan, financing. Are you following, guys? Adhe basis they will categorize, guys. Operate, they asked only for operating, you prepared for operating. All the inflows, all the outflows, negative cash in operating. Are you following, guys? Same way we have other sums and all. Illustration 5 also if you see, direct method, you know opening balance, receipt from customer is operating, issue of shares, financing, sale of fixed asset, investing, payment to suppliers, operating, payments to PPE, investing, overheads, operating, wages. These both, one is operating, dividends is financing. And then repayment of bank loan, financing. Same way you prepare a cash flow. All the operatings plus and minus come here. Similarly, investing and financing. Anybody wants me to explain more in direct method? Everybody is clear what to do direct method? Kudukaradu ledger, you convert to a statement and classify this correctly. Okay. Now, coming to this also is direct. We will come and do question 5. Let's do 5 and then go to indirect. Now, question 5 pathina again is asking you to prepare in which method? Direct, but the question is little different. These are good questions. Look at this. When they ask direct method or indirect method, especially direct method, only focus on the cash in and cash out. Okay. Company sold goods only for அப்போனா credit sales கிடையாது. Gross profit ratio was 30%, GP was 3,82,000. What you can find? Sales. So 3,82,500 divided by 30%, how much? 12,75,000. This is going to be my sales. Are you following, guys? So operating you will write from sales 12 lakh. Next. Opening inventory was lesser than closing inventory by 35,000. What to do? Idle ஏதாவது cash movement இருக்கா? What to do? Ignore. And at least do it well. Wages paid during the year 4,92,500. What is that? Operating wages 4,92,500 negative. Next, office and selling expenses paid during the year 75. What is that? Operating. So I will write here 75,000. Are you guys following? Next, dividend paid during the year is what? Financing 30,000. So you will go to your financing, dividend paid 30, one by one. Like this bank loan repaid during the year 2,15,000 including interest. I don't care. Principal and interest both as financing. I will come here and write 2,15,000. Trade payables on 31st March. Opening trade payables exceed the closing by 25,000. What to do? Nothing to do. This and all will come only in indirect method. Changes in all of that. Amount paid to trade payables. Operating cash flow 4,60,000. 4,60,000 negative. Tax paid during the year amounts to 65,000. Provision is so much. What to do? I don't care about provision. எவ்வளவு tax pay பண்ண? 65. Cash out minus 65. So in direct method, how much cash came, how much cash went, அதை மட்டும் தான் பார்க்கணும். Investment of 7 lakh sold during the year at a profit of. Oh, what to do in this? Profit came. I'm getting scared. What is the entry for this? Bank account debit 7,20,000 to investment 7 lakhs to profit. I don't care about profit or loss. How much cash I got? 7,20,000 investment plus 7,20,000. Depreciation on fixed assets 85,000. What to do? Ignore. Plant and machinery purchase for 2,50,000 investing outflow. Then they are given opening cash and closing cash. It will of course tally. Are you following, guys? Clear? Understanding? This is direct method. This is the maximum complication you can have in direct method. Easy one. If I didn't do also, you wouldn't mind it. Okay. Now we'll go to indirect method. I'll take a good sum. Can we do illustration 6 if you want? No, we'll do two sums. 2 or 3 sums. First one basic sum and then we'll do practical sums. Okay. At least I will do some adjustments, all of that. Which one? Okay. We'll do, guys, 2-3 sums, at least the key adjustments. One sum I will teach you for the basics. Then 2-3 sums we will do adjustments. We have enough time. Let me spend some time for cash flow. Now, let me address a few common points in cash flow statement as to, sir, investing and financing in my cash flow is not going to have any change. Only in operating, we start off with what? Net profit. And then we move ahead or back with net profit. Let me explain the logic behind many of these steps. In the chapter, logic now, let there be any complicated sum. You can even prepare cash flow today for a company like Reliance if you download the financials. Okay. Now, let's say trading and P&L account. Let me write down sales 2,000, purchase 1000, GP 1000, assume everything is in cash. Then expense rent, cash paid 300, let's say electricity paid 100. Net profit how much? What is my net profit? Loss ah? எப்படி ஒரு loss? நான் கான்சியஸா ப்ராஃபிட் எல்லாம் போட்டிருக்கேன் 600. Are you following, guys? Just sometimes if you don't use calculator, this will come. If you use so much calculator, this happens. Okay. Now, in this case, what is the cash in hand? What's the cash in hand, guys? It already I did that day when I told depreciation is saving on day 1. So cash in hand is 600 because you sold for 2000, received cash 2000, then you paid purchase 1000, then you reduce rent 300, electricity 100, you have net profit of 600. That means it's matching with my cash in hand up. Are you guys following? Now let me introduce one by one slowly adjustments. Depreciation 100, so my net profit is, what's my cash in hand? Because it's a non-cash expense, you add back. Instead of depreciation, what if it is provisions? You add back to net profit to get this. Are you getting the logic now? Non-cash expense ellame I will add back. That is step 1. Now let's say here I have other income, interest income, make this 9,900, 100, so it won't change. Now what is my net profit? Still 500. My cash in hand is 600, correct? So my net profit is 500, cash in hand is 600. But when I am preparing cash flow statement, I am breaking down my cash flow into operating, investing, financing. So I will start off this sum with net profit, which is, I will add back the provision of cash is 600, but I am preparing cash flow statement, cash flow from operating up. In this 600, 100 belongs to investing activity, interest income. So I will reduce 100 here and add 100 in investing. Are you following, guys? So when you start off your cash flow indirect, always start with net profit. First search for everything non-cash. Both on my debit side and credit side, everything non-cash took. For example, credit side, what is non-cash? Let's say profit from sales cash only, no. Let's say interest accrued 50. It's a non-cash, I will reduce because that was never part of my cash, only part of profit. So first thing you have to search in your P&L is everything non-cash. Predominantly 99 sums out of 100, it will be provision and depreciation. You will add them back. Next, search for cash items only, but that belongs to financing, investing. For example, interest income, now I reduced 100. What if I have profit on sale of fixed assets 50? It is a cash only, but this cash belongs to investing and not operating, so I will reduce another 50. So keep in mind, you start off with what? Net profit. Then add back non-cash items. Logic inga purinjukonu. Then search for everything which is cash but belongs to investing, financing. Remove here and add it there. Correct? Are you following, guys? Now we'll come back to our base example again, because if you get this logic, cash flow, it's not about doing 20 sums, it's about doing one sum with the concept, then you can do even 100 sums. Okay, let me go to the next concept. If you get this concept, you will get the next step right. Now what is the net profit at this scenario?
500.
Let me again change it. Going back to the same original number, guys. Sales is 2000, net profit is 500. I start off with net profit 500, add back provision 100, you found 600 cash, my cash is 600. Now you realized that out of this 2000, 300 is credit sales. is credit sales. Correct? So, now I should do what? If I know 300 is credit sales, from 600 cash in hand, I will reduce how much? 300. Which is my debtors. Correct? So, my debtors will be in balance sheet. Debtors 300, I will reduce it. It's easy if it's only this year. But my debtors would have had an opening debtors also.
Yes, sir.
Correct? So, now how much you reduce, guys?
300.
Loudly, you reduce how much?
300.
So, in balance sheet when I search, debtors were not 300. Debtors were, let's say, 700. Now, what would that means? This includes even last year debtors could be their opening debtors. So, let's say opening debtors is 400. Now, if debtors is increasing from 400 to
700.
beginning of the year, debtors 400. Now it became
700.
That means you did credit sale of
300.
is not correct. That is not correct. Meaning, look at this. Debtors opening, closing.
700.
This year I did credit sales of, let's say, 1000. But I collected, let's say, 700. Are you following? So my credit sales could be 1000. Credit sales could be 1 crore also. I don't care. Are you getting it?
Yes, sir.
But I collected 700. So remaining uncollected is 300. The opening and closing difference gives effect for all the collections.
Yes, sir.
So now the net effect of credit sale which is not collected is 300. So I will reduce 300. So next we go to changes in working capital. I think it has one formula. I don't like that formula. 4 things, increase and other panel, decrease and other panel. They give one formula. Logic. We have only 4 possible scenarios. Asset side, liabilities. Most of you already know the logic. Now we saw debtors already. 400 becoming
700.
Let's take stock, the opposite. 700 was opening, it became 500. That means what? You sold stock.
Yes, sir.
That means if stock of 700 was sold, 700 became 500 means what is the entry for this? Bank 2. Stock how much? Okay, leave stock itself, guys. I'll tell you why we are adding this. Beautiful logic. Debtors se eduthukalam. 700 opening, 500. What's the entry for debtors collection? Bank 2. Debtors. Correct? Now this entry is not reflected in P&L.
Yes, sir.
That means it's a cash inflow without getting reflected in P&L. Therefore, in working capital changes, if my debtors decrease, I will add my cash.
Yes, sir.
Are you getting it? Therefore, if any asset decreases, cash add. Idan the formula.
Yes, sir.
Look at the logic. Asset kammi adana cash erudhu. Sale of asset. Opposite. Asset is increasing. Cash will decrease. This logic I just explained. Debtors. Asset increase means you are buying asset. Asset increase means asset vaangra. Asset vaangumbodhu cash korayum. So I don't even mug up the formula, guys. Every time I think of the logic. Now go to liability side. Take loan. Loan, opening, closing. Opening loan is 700, closing loan is 300. What you did? Pay panirkeni. How loan will decrease? Loan account, debit to cash. Cash pay panna loan kamiyagum. It's an outflow of cash without getting reflected in P&L. So for net profit, if liability is going to decrease, then cash also decrease. Are you following? Opposite. Loan, opening 700, closing 900. What is the entry for this? Bank to bank loan. That means you took a loan. You took cash without affecting P&L. So if your liability is going to increase, my cash will also the equation. Are you following, guys? You don't have to mug up this. Are you understanding, guys? Clear? Why are we doing these 4 things? Because these items affect cash flow without affecting P&L. And I'm starting with net profit. And you take only current assets and current liabilities. We don't take non-current assets and non-current liabilities. Why, sir? Why? Non-current assets investing la varum. PPE adala investing la varum non-current assets. Non-current liabilities, debentures adala financing la varum. So the difference edupa. For example, let's say PPE, okay. PPE opening was 300, closing was 350. That means what? 50 purchase. That purchase will come on investing. Let's say long-term borrowings, or okay, let's take here. Let's say debentures. Debentures 700 opening, 600 closing. That means what? I paid 100. Outflow of cash. This can entry portfolio 2 cash. Debentures account 2 cash 100. This will come an outflow in financing. That is why I do change in working capital. Take only current asset, current liability. It's not that I don't take the others. I take them in my other activities. Are you following? So when you start for an indirect method, I start off with net profit given in the question. After tax or before tax? After tax or before tax? Then why will I add back provision? You have to add back provision. Correct? After tax or before tax? Either way, see, before tax, then you will add back. Why will I add back tax? See, you have earnings before tax, less. Then you have earnings. We are adding tax, provision for tax, then reducing tax paid off. That means I will take net profit after tax. Are you following? I will tell you why we are adding tax. When the sum comes, I will explain that. So you take net profit. If you take before also, it's fine, guys. Both you will get the answer if you know the logic. That's it. There is no. You take the net profit reported in schedule 3. What is reported over there? You will reduce tax only and report. So you will take this. Then you add back. In the tax adjustment, I'll explain. Most people get confused. If you remember I'm going to do sums, but if you remember operating activities, the format is somewhat like this. Net profit after tax, add back tax, then add back all non-cash, then add or less items related to financing or then I will do changes in working capital, then I will do reduce tax paid, and then you will find cash flow. Correct? So now I finished this part. First you do what is the thing we did, guys? Okay. What did I erase? Add back? Non-cash. Okay. So, sir, example, I will start off with net profit. First you look for non-cash items, add them back or reduce whatever, add or minus. Look for items related to financing or make adjustments. Look for changes in working capital. Then you find cash flow. Now are you getting logic as to why we pick these three?
Yes, sir.
What about tax? In P&L, let's say 2 provision for tax is 100. In balance sheet, I have tax provision on my liability side. Let's say opening 150, closing 170. This so questions come. Correct. Let me prepare a ledger for provision for tax. Opening is how much? Write the opening. Opening from where I am taking? Balance sheet. Closing? 170. What is the entry for the current year provision? P&L account debit 100 to provision 100. So generally the tax I debit in P&L is a provision. So I will write here in provision for tax plus current year provision 100. My closing is 170. That means what is this? To bank, how much? 250, 80. That means, can I say opening provision is 150, closing provision 170, current year provision added 100, paid is 80. So that's why I add back here 100 and reduce here 80. Add back non-cash, reduce tax paid. Are you following, guys? Clear? These are the adjustments that you get in operating activities. Are you guys following?
Yes, sir.
These are the common ones. Any doubts still here? Let's go and do sums to practically apply this. Illustration 6. Okay. Follow guys. We'll do 2 or 3 sums and then we'll decide about next standard or break whatever after that. Today is the last day guys. Unless you are not coming for law or not. Fine. I can't ask you to revise and come for law. வீட்டுக்கு போகிற டைம் ஆகும் revise பண்ணுவீங்க. We'll revise together tomorrow. At least for you guys, your law exam on 7th. Super. So tomorrow marathon, 6th study, 7th law exam. Super. Anyway, marathon, we will cover 80 to 90% of the syllabus. We will cover fully. Okay. Fine. Let's start off. Sales is 6,98,000. Cost of goods sold is given. Then you have operating expense. Schedule 3 items are given. This income tax, most confusion people will get. This 7,000 reduced. Is it tax paid or provision on 3? Do you have that confusion, guys? How do you know? If there is no other information regarding income tax paid, this is income tax paid. Now balance sheet la poi theduvén. Income tax payable, opening, closing. That means that is provision. And one more important thing, this is closing. This is opening. Correct? This is if printing mistake, it's correct. Correct? So in the chapter, he will keep an amalgam consolidation sum. Then middle he will keep this opening, closing reverse. Closing is here, opening is here. Only in the end of the sum, when it's not tallying, I will figure out. It has happened to me itself many times. I'm sure it will happen to you. So be very careful. Cash flow is that one chapter where the year mathi kuduthruvaanga guys. Adu when there are 10 sums, only 2-3 sums he will change like this. Okay, we never know when it, even like in that foreign branch I told yesterday, that reversal they will do that sometimes. Okay. The main thing is they know exactly where to place these questions in the question paper. In such a way he will place it. It will come in a flow where you will forget it. Okay. See, human psychology examiner has lot of experience. He has seen so many attempts. He knows how to frame that question paper. The first question in any subject, which is he will keep it. He will break half your confidence in that, because that's the first thing you read. Then you will go to the last question. Then last question also sometimes he will keep it difficult. So he mainly wants to break your confidence, guys. In that exam, he will try his best. If you take 6 papers or 8 papers earlier, it never used to be that all papers are hard. In a group, one paper will be challenging. They will keep one paper challenging minimum to break your confidence. And even in the most difficult papers, whichever attempt it is, whichever paper, 100 marks paper full customer irukuma. 100 marks he will keep maybe difficult paper now, or 30 marks he will keep hard. Still there's other 70. So if something is hard, you focus on the other easy ones. There will always be 50 marks which you know. It's just that in the 3 hours you are not able to figure out which 50 is that. So you should be very smart and first, at least the first 25-30 marks, write what you know very well. See, wherever you prepare, how much ever you prepared, ஒரு 25 marks in full paper உங்களுக்கு கான்ஃபிடன்ட் தெரியுமா? ஒரு 20 marks, ஒரு 10 marks you will know that இது நான் போட்டா டெஃபினட்டா கரெக்ட்டா வரும் சார். அந்த மாதிரி sums you do it first. Straight away first answer I will do consolidation sir. I will do amalgamation. I will tally alliye. Examiner will strike your answer sheet in the first 2 pages. Imagine the examiner. He is going to have so many papers. You have to play with the examiner's mentality. You have to make the work easy for him, not for striking. The first 20 marks if you do very well, take the best answers, then he is putting tick for 3 pages. Automatically he is used to, okay, this student is good, 25 marks is good. First paper you made a mistake, I strike it. Are you getting it, guys? It's a lot of human psychology involved over there, so you have to be very careful in which question you pick first. And ICA allows you to pick it random, not 1A, 3B, 6A, 5D. That is, you know what, guys, the main questions, you go ahead with that. Okay, now let's take question 6. Straight away I will start. Now remember, guys, whatever adjustments we have down, you should also keep in mind. Let me start off with net profit. How much is that? 16,000 minus tax. Okay. Go to my answer. I am not solving because of time. I will run through the solution. Is that fine, guys?
Yes, sir.
So net profit is 23. Here they are doing before tax. After tax, if some sums they will do it after tax, then you will add back tax. Impact is the same of 23,000. First I told you, look for what? Non-cash items. In this question, what are my non-cash items? Look at your trading P&L. You have only depreciation, 37,000. I will add back how much? 37,000. Next I will go and look. Now before that, when you once you read the adjustments, and you will mark which goes where. Purchased investments goes to my sold investments. Purchased plant. This also investing. Issued bonds. Financing. Repaid. Financing. Just keep in mind that related adjustments. Anga pogumbodhu you have to see. Now go back to your trading P&L. Look for not non-cash items belonging to investing or financing. Come here. Interest expense paid is financing. So operating la kami pannuma. Operating, sorry. Add back in operating because it's not a cash outflow. It should be cash inflow. And reduce where? In financing. Similarly, interest income. I will reduce here and add over there. So 23 and 6,000. If you see, interest expenses 23 added back, 6,000 is. Parallelly go and plot it where? In investing and financing. Investing plus and financing. Where is that? Minus. Are you following?
Yes, sir.
Next, come back here.
Gain on sale of investment.
Gain on sale of investment. It's a gain. I will lessen operating, add in investing. But these kind of things you don't lessen investing. I will less over here. We don't add it in investing as it is. I will come to that a little later because you need to add back gain along with the total cash flow received. Correct? Okay. Same way for loss on sale of plant. I will add back in operating. Investing la apparama paathukalam. Are you following? Clear. That's it. So we are done with the first stage of discussion. Searching for non-cash, searching for items belonging in other place. Now changes in working capital, guys. Straight away you will go to your balance sheet. This is the balance sheet, okay. We'll go one by one. Inventories 1,44,000 became 1,10,000. Is that correct? No. This is opening. This is closing. Now it will be, I told. Now it will be forgot. Correct. So 1,10,000. Just know how many of you forgot order. I do have the question itself. So imagine exam. After how many days? Okay. 1,10,000 becomes 1,44,000. So 34,000. Simple. I don't put the formula, guys. Asset increased. That means I purchased asset. That means cash decreased. So 34,000 I will go and minus here. Are you following? Like this you have to do for trade receivables. Cash is the final thing. Prepaid expense. Share capital, this and all will come in later. Trade payables. Let's do trade payables. 50 and 43. 43 became. That means I purchased more goods on credit of. That means what? I didn't purchase with cash. I purchased with credit. So it's like, see, if it's a loan, if loan increases, I'm getting cash. So if trade payables increase, I will get cash. What is the logic, sir? Simple example. If 43 became 50, my purchase increased by how much? 7,000. So my net profit drops by 7,000, but it's not a drop in cash. Net profit dropped, but it's not a drop in cash. You are starting with net profit, therefore add back 7,000 cash. Are you getting the logic for trade payables? Each liability will have a different logic, but end goal is same. So I will make all those working capital changes. Last time we will do income tax payable. How do we do in this sum? Prepare a ledger. Opening is, closing is, current year provision 7,000. 12 minus 3, 9,000 is tax paid. So I will reduce 9,000. Net cash flow from operating 47,000. Are you guys following?
Yes, sir.
Next, come to investing. Adjustment by adjustment. Okay. Now here is where should I prepare investment account? If you prepare a ledger, you will get more control. Okay. So we can do this sum ledger illamale panniralam, but what if there is something hidden? Whenever there is a non-current asset like investment with multiple items, we prepare a ledger. Let's say I take investment. Opening is 1,27,000, closing is 1,15,000. Now let me go and place the adjustments. Purchased investment for purchase enga varum? I think I wrote opposite. What were you guys doing that time? 1,27,000, 1,15,000, blindly following. Okay, debit, credit. You purchased investment how much, guys? Plus 78,000. Just trying to show common mistakes you will do in exam. Okay. Add how much? 78,000. The minute you add in ledger, go to your investing activities. Anyway, purchase I will reduce here 78,000. And I am also placing in my ledger. Ledger is just to check in the sum, because I know the solution. Ledger podamliye you can get the answer, because there is no balancing figure in this sum, but some other sum it may be there. So for that safety we will do it. Next, sold investments for 1,02,000, costing investment account la cost mattu varuma, profit varuma? What is the entry for this? Bank account debit 1,02,000 to investment 90,000 to P&L 12. Upon 2 investment allow panna ni 90 up. So I will write here 90,000. But I got how much? 1,02,000. Go to my investing and I will write as sale of investment plus 1,00,000. Sir, if you want to write 90,000 here, then earlier you should have written the profit of. But I don't want to say suggested approach. You will get confused. When investments are sold, how much I got? 1,02,000. Write the full 1,02,000. Are you guys following? Yes, super. Go to next adjustment. Purchase plant for 1,20,000. Plant we have to open again plant account, correct? Let's do that. Plant. Go to the question. What is the opening and closing? Depreciation irke. So either you write with or you write without depreciation. Here we will take it without depreciation. Opening is 4,37,000, 6,12,000. Sorry, yeah. I was just checking if you guys will tell or not. No, really. Fine. No, and sale adjustment, do we have depreciation here? With accumulated. Okay, we will take the 5,05,000 and 7,15,000. 5,05,000, 7,15,000. Fine. Following guys, notice panna review. Panna notice. Buddha task vandirukka. Fine. Purchased plant asset 1,20,000. I will write 1,20,000 here. Outflow will be 1,20,000. Are you following, guys? Yes, sir. Ledger again not mandatory, but we do it for our safety just to check. Sold plant assets that cost 10,000 with an accumulated depreciation of 2 for 5,000. No, you should not panic over here. First, sold it for how much? What you sold is 10,000. You sold it for how much? 5,000. See, the cost is 10,000. Accumulated depreciation 2,000. So book value is 8,000. This you sold for 5,000. So I have a loss of 3,000. I don't care about loss on investing. I sold for 5,000. Go to investing plus 5. Now come to my ledger. How much of plant left me? 10,000, 10,000 left. Are you following? Or how you can write this? So this is with depreciation. I am writing with depreciation. So I am writing original cost. If you are writing this as net block, then I will write here 8,000. Are you following, guys? Clear? This entry I will come to it in some time. Issued bonds of 1 lakh of face value in exchange of plans. That means what they are doing, no cash flow. They got plans. We got another plant of 1 lakh and we issued bonds. The entry I passed was plant account debit 1 lakh to bonds 1 lakh, no cash flow. So but I will still add in my ledger as plus 1 lakh. Go to balance sheet and look at the bonds. Can you find any bond? 2 lakh 45 and so now opening bonds is 2 lakh 45, closing is 2 lakh 95. Now I issued bonds of how much? Plus 1 lakh. That means there is still a debit here, correct? How much is that? 50 is what? Repaid. This is bonds liability account, correct? Liability account. So my opening liability was 2 lakh 45. I increased my liability for another 1 lakh. My closing bonds is 2 lakh 95. That means 50 I paid up. So if I go to financing, where it went off? Yeah, financing, repayment of bonds, outflow 50. Bonds account I prepared and account also I closed off with just one adjustment. Next. Repaid 50. So they already gave it. Suppose this adjustment is not there. That's why I told this sum ledger is not needed. He gave all the adjustment illana. Then still you can find out 50 is repaid. Are you following? Here is confirming. Clear up? Yes, next. Issued shares for 50,000 into 10. That means 1 lakh 50. Come here plus 1 lakh 50. I will go and check my share capital in question just for safety. Is the difference 1 lakh 50? 4 lakh 65 minus 3 lakh 15. Is it 1 lakh 50? Yes. If it is something else, that means there is some other hidden transaction he has not disclosed below, like the bonds one. Are you following? Yes, sir. Okay, next. Paid cash dividends of 8,000. So I will write here paid 8,000. Are you following? Yes, sir. So now all the investing, all the financing is done. By just copying from question, we got the answer. Ledger but now what about the ledger? I have to close my ledger. Correct? You remember this investment ledger, guys? Yes, sir. Tally this. Is it tallying? Yes, sir. Yes, sir. See here. Opening was 1 lakh 27. Addition 78 minus 90. Closing 1 lakh 15. Tallying. Yes, sir. That means it's available. Suppose something is balancing figure. That means you purchased more or sold more. Come to plant. Opening 5 lakh 5. Purchased 1 lakh 20. Again got new plant of 1 lakh. Minus 10,000. What is that? Is 7 lakh 15 coming? Yes, that means tallied. There is nothing else missing. Are you following? Yes, this sum, because I know the answer, I said ledger not needed. But you have to prepare the ledger. If there is, let's say, inga close pannumbodhu, sir, tally ala sir. எனக்கு வந்து இங்க ஒரு 5000 rupees நிக்குது sir. What is that? Either plan sold or current year. இங்க எதுக்கு ஒரு இது cost account. இங்க depreciation வரும். இது cost account. Original cost, correct? Either it is sold or you made some mistake. Are you following? இது தப்பு பண்றீங்க. புரியல? This is cost account, no. Everything is in cost. Why will depreciation come here? Depreciation we are maintaining separate account. Yes, so it will not come here. So either it is sold, only sold, or you made some mistake. One of those two. Okay. That you will have to wait till results to find out. Okay. புரியல? வெளில வந்தா discuss பண்ணக்கூடாது. There is the next thing. After exams, do not discuss your answers. Guys, telling you from personal experience, affected party. Okay. This sum no need, no. Okay. So now look at this. Once the sum gets over, just do a quick glance to see if all the items in the balance sheet are considered over here. Now here Shreya's doubt is, sir, what is reserves and surplus? Retained earnings 8,000. This sum you will completely ignore. When do you consider this reserves and surplus? There will be some sums where they ask you to prepare cash flow without P&L. That time only you will take this difference as 1,32,000 becoming 1,48,000 as profit. Otherwise we don't take this. Are you following? That means what is this, sir? Nothing. It means out of the current year profit of 16, a part has been transferred to my reserves and surplus. Both are non-cash, not relevant for my discussion. Are you following, guys? Clear? Rahul following up? Following? Next, which sum you guys want? Bharat was satisfied, happy with cash flow, enough. புரியல அதான் லாஸ்ட்டாக எடுத்தேன். இப்போ கிளம்பிவிட பிரேக்கில் ஏஸ் 15லாம் வேணாம் உனக்கு, ஃபுல்லாக தெரியும். சூப்பர். Let's do one more sum before we go for a break, or do you want to go to next standard? One or two more adjustments I will take instead of the whole sum. Somebody has practical sum la கேட்டிருக்காங்க. Illustration 12 practical 11 See, difficult sums I can do it, but if you lose confidence, don't ask me. Practical 12 sums இருக்கா? இங்க இல்லையே, 6லயே முடியுதே. அது எங்க தேடுறது இப்போ? ஓகே. Okay, fine. New light. It's question number, practical question number 5, guys. I think the pen is not working. The board doesn't want to do this sum. The PDF wants to shift. I'll try it now. Yeah, okay, back, fine. Super, okay. It's acting like that. Scroll if I use the pen. Okay. So recording students, nothing is happening, guys. Just wait. We are not going to edit all of this. Is that new light? Yeah, now it's fine, hopefully. Fine. Let's go to new light question. Practically, I'm not doing a whole sum, key adjustments. Okay. Last question in cash flow. They have given balance sheet. Fortunately, current year and sorry, this is previous year current year. Again, they gave it reverse. Today's sums are like that, guys. But out of total sums, only few sums will be like that. Short-term provision for tax. Okay. Assets are given. Great. Come down to notes to accounts. You have relevant notes. Okay. This question only, no? Fine. Come down. Company sold one property, plant, equipment for rupees 1 lakh. The cost of which was 2 lakh and the depreciation was 80. That means what is my book value? 1,20,000 was sold for 1 lakh. You will have a loss of 20,000. இங்க P&L கொடுக்கலையா? Okay. So if P&L is not given, and they just give balance sheet, you will start off by only using balance sheet items. So over here now you will take reserves. Where is my reserves? 8 lakh 40 and 11 lakhs. So if I come to my notes, I will take which reserve? P&L or general reserve? P&L, because general reserve is the previous, like it's the current year transfer. So P&L current 3 lakh 40 has become 2 lakh 40 became. So this is previous year, this is current year. So I have a profit of 1 lakh. So I will go down, start my sum with 1 lakh, this one 3 lakh 40 minus 2 lakh 40. I can straight away write 1 lakh over here. Now in this 1 lakh, proceed further. General reserve 6 lakhs has become 7 lakh 60. That means you have transferred 1 lakh 62. That means can I say I earned a total profit of 2 lakh 60. In that 1 lakh 60 is transferred to general reserve. So I will add back the profit in transfer to general reserve also. That means my total profit is 2 lakh 60. Are you following? From reserves I will start. Next, we will look for what, guys? We will look for non-cash items, but here we don't have P&L. Everything is in balance sheet. Okay. So depreciation, do you have depreciation here? Okay, additional adjustments. Here we sorry. Okay. Company also decided to write off another item of property costing 56,000, which depreciation is 40k is provided. That means I have to prepare PPE account for this. That is best. When you have multiple adjustments, better to prepare PP. Then he has given depreciation is how much? 3 lakh 60. Straight away they have given depreciation as 3 lakh 60. I will add back. So this includes the whole depreciation for the year. All the PPE adjustments you keep in mind. This sum is challenging only for PPE, and our ledger quota sum will get over. Okay. Company sold some investments and made a profit of 40,000. So if I prepare investment account, that will be clear. Debentures and preferences redeemed at 5% premium. This is easy. Debentures redeemed at the year end. Why he gave this? I have to also compute interest for the year debentures. Go to balance sheet. I will come to PPE in the last, guys. Or ledger quota I will get over. Come back here. Debentures, if you see 2 lakh, so 4 lakh. 4 lakh became 2 lakh. That means how much paid? But I repaid a premium of 5%. Premium will not come in liability. So plus 5%. How much? 1 lakh? 26,000 is outflow of cash. Go to preference shares. Same other number. Huh? This also outflow is 1 lakh 26. So if I go to my financing, 2 negative 1 lakh 26,000. Are you guys following? These are all small easy adjustments, guys. So company decided to value inventory at cost, whereas previously the practice was to value inventory at cost less 10%. The inventory according to books on 31st March, that means opening stock was 2 lakh and now it is 3 lakhs. That means what they are saying, the inventory according to books opening stock is 2 lakh 16, now it is 3 lakhs. Okay, correctly valued at 3 lakhs. So I already made the rectification, correct? Now because of this, what will be my gross profit impact? 84,000. This would have anyway been considered in my current year profit of 2 lakh 60. Are you following, guys? Anyway it is considered. Now what we have to do, whereas previously the practice was decided to value at cost, previously the practice was to value at cost less 10%. Inventory according to books was 2 lakh 16,000 opening. The closing inventory was correctly valued. Okay, that means closing of 3 lakhs is valued correctly. Which is valued wrongly? Opening of 2 lakh 16. Are we correct? How to rectify that? This 2,16,000 is valued at 10% less. I have to add back 10%. That means 110 minus 90 is 2,16,000. How much is 110%? So 2,16,000 into 100 divided by 90. So this is 2 lakh. So if this is 2,40,000, if opening stock increases, profit will decrease. In a debit increases. That difference is how much? 24,000. That's why from this 2,60,000 I will reduce 24. That only is this 24 which is reduced. So from this 1 lakh if you reduce 24, that's when you get 76,000. Are you following? Don't get confused looking at plus 24. There's a bracket outside. This addition is inside bracket. Are you following, guys? Clear? These are all important adjustments. Clear? This is done. So rest of the sum is easy. All your, what to say, change in current liabilities, change in current assets you will do, except my PPE, which I am going to discuss now. Okay. Investment account is simple, guys. They gave in the question, investment was sold at profit of 40. What was the opening investment given in question? 4 lakhs. Look at the question. Closing is 3 lakh 20. So if profit is 40,000, balance will be the investment which is sold. Are you following, guys? Clear? Have they given how much investment is sold? No. Okay. That is my balancing figure. Now only coming to property, plant and equipment, for which we will write all the, I will just prepare this ledger. PPE account. If I take the question, last sum in this topic, guys, little advanced sum in among all the sums in cash flow, but not that advanced if you study depreciation and foundation. In the question, so opening is 32, closing is 38. We can do depreciation separately or we can do it together. Either works. Here they have done it in which way? I think separately is what they would have done. This is for the asset which is sold. Okay. So they have taken opening 32, closing 38. We will also do the same one. I will explain one by one transaction. 38 lakhs. Now look at the adjustments. We have only 2 adjustments, which is adjustment number 1 and 2. 1, 2. Depreciation for the year is 3,60,000. Okay. Company sold one PPE for 1 lakh. For how much? Cost was 2 lakhs. Depreciation is 80,000. Let us journalize this. Bank account. Debit how much? 1 lakh. 2. PPE. What is the cost? Cost minus depreciation. 1 lakh 20, which is 2 lakh minus 80. 2 lakh minus 80,000. And then we have a loss of loss on sale 20,000. This is one way of writing the journal. This journal I can write if my PPE is taken at a net value. The other way to rewrite the same journal, bank account debit 1 lakh. First loss, you know loss. Loss on sale account. Actually loss na balancing figure. But since you know I am doing it. This 1 lakh 20, let me write it in the whole terms. Because in this question we are taking it at gross up. So I will write here 2 PPE 2 lakhs. If asset is sold, asset leaves my books. At the same time its accumulated depreciation should leave up. So I will write here accumulated depreciation account. Debit how much? 80. 80,000. This is nothing but these both now 1 lakh 20. I can write it like this also. Are you following, guys? Now what they are doing, if I go to the PPE account, we have to account for this transaction. Here they are doing the second method. Because we are doing a total, I have to transfer everything. So in 2 PPE, in PPE credit side, 3 things should come. 20, 1 lakh and 80. Mottama actually pathana I should just write here. Buy sale 2 lakhs. And the 2 lakh or breakup 1 lakh 80 20,000. Are you guys following?
Yes, sir.
Easier. Now go to the next one. Second adjustment. Company also decided to write off another item of PP costing 56,000 on which depreciation of 40 is provided. So you that means loss of 16,000 I have to write off.
Yes, sir.
So if you see here, Mottama 56,000 is leaving my books, sir.
Yes, sir.
Other breakup accumulated depreciation 40, written off 60. What is the entry I will write for this? Write off P&L account debit 16,000. Accumulated depreciation is going out. Accumulated depreciation account debit 42. PP 56,000. Are you following? These are the 2 adjustments I have on credit side. Now I have opening and closing. Now my balancing figure is what? Something 8,56,000. This is the new purchase made during the year. This I will go in your investing activities. Purchase 8,56,000. You also sold for 1 lakh, which you anyway know. So sold as
1 lakh.
and proceeds from sale of investment 1,20,000 is different account. That's it. Are you following, guys?
Yes, sir.
This is that ledger. This is nothing but keeping accumulated depreciation and cost separately. How many of you guys understanding? Hello, following, guys? Done with cash flow like this. If you know a concept, take it here and there. Clear, guys? This is a good sum. 14 marks sum. That's it. Done, guys. Now before we go for a break, we'll take one small 15 minutes standard. 15 minutes standard and quickly finish it. The only standard left which I can do in 15 minutes is which one, guys? 25, 15 minutes are there. AS5. 15 minutes. Quickly I will revise AS5, not in our agenda, but just 15-20 minutes we'll revise and then we'll go for a break. After break, I will start off 2 topics. AS15, amalgamation. Then according to how much is left, we will take it forward. Following, guys. At least we covered 75% of syllabus. Hello. Okay. Now, you see CMA syllabus. Fine. AS5. Quickly, guys, we will do 1 or 2 study math sums and do the theory. AS5 basically classifies itself into, AS5 is the biggest standard. Name, period name is the AS5. Okay, biggest standard in terms of name. Okay. So what is the name of AS5, guys? Net profit or loss for the period, prior period items and change in accounting policies. So, but they also talk about change in accounting estimate. So the standard basically talks about net profit. It talks about prior period items, changes in accounting policy, changes in accounting estimates. Are you following? Now, 4 separate discussions. I will come to, and net profit is classified into 2. Net profit can be earned from ordinary activities and extraordinary activities. Within ordinary, between ordinary and extraordinary, we have a subclassification called exceptional. Actually, AS5 does not define what is exceptional. Even the schedule 3 does not define. As per standard, it's only ordinary or extraordinary. But out of practice, whatever is ordinary, but you don't feel it's extraordinary, then you put it in a subclassification with more disclosure. That's called exceptional. What is prior period item? For example, in 1994, you made a mistake, which I found out only in the year 2024. Can I make the correction now? Are you following, guys? Okay. Even if it's 30 years, 40 years, whatever mistake in accounting I'm talking about, mistake over there can be rectified over now. Are you getting it, guys? Okay. So prior period items, in simple, the standard tells any error or omission which arises in the previous period, which can be corrected in the it can be current. Definition is PP are items of income or expense which arise in the current year as a result of error or omission in the preparation of financial statements in one or more prior periods. For example, you in balance sheet, fixed assets instead of 1000 you wrote 100, loan instead of 1000 you wrote 100. So balance sheet tallied. You thought balance sheet tallied, but actually it's not tallying. Later when you repaid loan, you thought loan is repaid. Then bank told, "Unnor zero you forgot." Then I will go back and try and find out, hey, what went wrong? Fixed asset 10 I forgot. So because of this, depreciation is wrong. Everything is wrong. Sir, why it will happen, sir? Today it won't happen. System. Those days manual. When they do manually, these mistakes can happen. Okay. So any mistakes in the previous year you can correct. Is fraud allowed here? No. Sir, I did fraud last year. Income tax is coming to your house on the way. ETA 20 minutes. Now you got a call. Immediately go to system. Prior period items. Make the change. I made a mistake last year. Mistake or error only is covered. Fraud is not covered. So quickly, any error or omission in previous year. This year you should tell, out of my total net profit of this year, how much is because of prior period changes? What kind of examples? Arithmetical errors, misinterpretation of facts, mistake in applying accounting policies. Instead of doing cost model, you use revaluation, or by mistake instead of FIFO, you use weighted average. Error, theriyama pandra. So these kind of things I can rectify. Are you following, guys? Yes, this is my prior period items. Clear, guys? Next, if I go to change in accounting policy and change in accounting estimate. Let me quickly finish this. Give me examples of estimate. Provisions. Depreciation is an estimate. How's the depreciation estimate? What's the formula for depreciation? Cost minus residual value divided by useful life. At the cost, okay, we figure out using AS10. Residual value or estimate. How will I know what I will get after 10 years? And the 10 years or estimate the useful life. So depreciation itself is an estimate. Now, can I change my estimate? Can I change every week? No. Yes, you can change how much ever frequently you want. Now, if you take the balance sheet actually, tell me what all comes here. PP, including tangible and investment, inventory, cash, debtors. Okay, now look at this. How is PP valued? Cost minus accumulated depreciation. Intangible asset, cost minus amortization. Investment, cost or fair value, whichever is less. Inventory, cost or cash is same. Debtors, book value minus provision. Correct? That means in the balance sheet, depreciation, amortization, fair value, NRV, provision, ellame estimate. That means every item in balance sheet is an estimated amount. Balance sheet or estimate. Are you following, guys? Are you understanding? The values is arriving after an estimate. Clear? That means your estimate should be as accurate as possible. We are preparing an estimated balance sheet and saying balance sheet is true and fair. Are you getting it, guys? These things we can't tell foundation students. School or slowly will learn. Balance sheet or estimate now. What I estimate can come here. If I suddenly increase depreciation rate, it will change. So the standard says you have to make the estimate as close as possible to the real number to give a true and fair view. But when I can change estimate, I sold goods to Vijay Mallya, he's in India, no provision. Suddenly left to UK, I have to increase my provision. So estimate is allowed to change when there is a result of new information, new tax law came, change the tax provision. Suddenly share price fell, again compare cost or fair value. Inventory fire came, NRV changed. Result of new information or change in circumstances, estimate will change. If you change estimate, what you should do? Disclose the impact on current and future year profit. What is the impact on future year profits? Depreciation, if you change the rate this year, it will affect even future year. If I change useful life, it will affect even future year. So disclose the impact on current and future year profits. Are you following?
Yes, sir.
Example, change in useful life, WDSLM, provision for bad debts. So what is change in accounting policy? It's in AS1, but we haven't discussed AS1 fully. But in simple, everybody knows what's accounting policy. In simple, what is an accounting principle? Inventory valuation is an inventory accounting principle. To apply that principle, we use accounting policies. Let me just simply go to AS1 once. Yeah, in AS1, if you see, what is accounting policy? They refer to specific accounting principles and the method of applying these principles adopted by the enterprise in the preparation and presentation of financial statements. Again, accounting policies refer to specific accounting principles. Example, inventory valuation is an accounting principle, and the method of applying those principles. How do you apply inventory valuation? By using FIFO. So FIFO is adopted by the enterprise. Look at this, adopted by the enterprise in the preparation and presentation of. So FIFO is adopted by the enterprise for the accounting principle of inventory valuation for preparation of financial statements. Getting what is accounting policy, guys? How do you select accounting policy? FIFO, weighted average. It depends on primary and secondary criteria. Primary means give what is giving a true and fair view. Secondary criteria, you can select an accounting policy based on three important points: prudence, substance over form, and materiality. These things you have to give importance. Can you change an accounting policy just like how you change an accounting estimate? No. Accounting policy can be changed only in these two cases. If it is required by statute or for compliance with an accounting standard, or it is considered that the change would result in a better presentation of financial statements. It is a very deep discussion. I need to give you proper examples. How do you select accounting policy is very important, because in exam but in AS10 I showed you three cases. When you will use SLM, when you will use units of production. Based on case, you have to pick the right method. Once you pick the method, you can't change unless one of these two things happen: change in law or statute or AS, or for better presentation of financial statements. Why should I then? Can you keep changing until it's better presentation? No. There has to be a justification why this is for better presentation. Whenever you change accounting policy, all you have to do is check if it is material or not material. If it's not material, just still you make the change. But if it is material, amount is ascertainable, disclose the amount. Amount is not ascertainable, disclose the fact. And AS1 also tells what are the fundamental accounting assumptions, going concern, consistency and approval. In school foundation, these things you don't have to disclose. You should disclose if you don't follow this. Are you following? Do you come to class and tell, sir, I brushed my teeth today? Only if you don't brush, others will find out. So normally you will follow this. Follow pannana is solno. Okay. Clear? This is AS1. In this gap we finished off AS1, at least points I finished off. Okay. But this discussion, most of the time in AS1 I spend in this primary true and fair. What is prudence, substance over form and materiality? Prudence is applied in cost or NRV, whichever is lower. That's an example of prudence. Materiality. My company's turnover is 50 lakhs, but I had a 20,000 rupees cash theft. Amount wise it's not material, but a theft happened is material. I will disclose that. Qualitative also matters, not just quantitative. Substance over form. Classic example, AS19, lease. Even though I am not the true owner, you provide for depreciation in a finance lease. Are you guys following? Okay. So come back to AS5. AS5, in this we have one thing called what? Change in accounting policy. This standard in AS5 itself tells, go and read AS1. That's why we read and we came back. If there is a change, AS1 tells when I can change. When you can change accounting policy? Change in statute or change in accounting standard of a better presentation of financial statements. If you change, what to do? AS5 tells. If you change, disclose the impact on current year and disclose the impact on future profits. Are you guys following? Examples: FIFO to weighted average, revaluation model to cost model. These are some examples. Are you guys following?
Yes, sir.
Then, so we finished all of this except ordinary and extraordinary items. Now in book they would have given few examples of what is exceptional. Remember guys, ordinary activities, extraordinary activities, and then in middle we have exceptional activities. Extraordinary is defined as something which is not an ordinary activity, and very important, Non-recurring, it's more like once in lifetime things. Attach, standard gives 3 points. It's a huge discussion, but I'm again going to be very exam oriented over here. What are the 3 things to remember for extraordinary which is given in the book? One is earthquake, if you are in India, not in Japan. So for India, earthquake is extraordinary. Then refund of government grant as per AS 12 is an extraordinary activity, and attachment of property. I have given the examples here. Attachment of property, earthquake plus AS 12 grant refund. These are only extraordinary activity, non-recurring in nature. Logic, I am only focusing exam over here guys. I am not getting into the logic as to why. Then we have to spend a lot more time. Exam ko thavilla for now. Very close to exam. Following guys. Now if Elon Musk fired employees, is it ordinary activity? 50% employees are fired pandam. Ordinary activity. Hello? Okay, let's say my main business is selling food. But every day, whatever leftover food is there, I am giving it to nearby orphanages, collecting very minimal amount. 100 rupees per kg of food, like that, nominal to cover cost. Is this ordinary activity? Or let's say I'm into a furniture shop. I have some leftover scrap. That scrap I will sell. Is this ordinary activity? Yes. So even firing employees, let's say selling my, let's say here are 6 ACs here, 4 ACs are sold. Let's say, is it ordinary activity? I am having a business. Money is not there. So I sold half my assets. Is it ordinary activities? It is ordinary activity. Look at the definition of ordinary activity. They are activities that are carried on by the enterprise as part of its business, and all related activities which are in furtherance or incidental or arising from business, which is in furtherance of business. Now, to ensure business is a going concern, I have to do this. Business continue, I can continue business. Incidental, I'll come to it. Incidental. Now, incidental activities means what? This giving food to orphanage, all of that. Arising, scrap is arising from business. These things I have to disclose if their size and nature is different or it's material. Are you following? But everything like profit on sale of inventory, firing of employees, loss of sale of unsold inventories, now ordinary pota, then people will get confused. So those ordinary activities whose size and nature is different, disclose it separately, and sometimes we call them as what? Exceptional items. So ellame ordinary da, but within ordinary, if the size and nature is material, then we subclassify it as exceptional. Now look at the examples of exceptional given in the book. For example, all these are exceptional. Litigation, settlement, disposal of long-term investment, fixed assets, selling those ACs. Ordinary for furtherance of business, but exceptional. Writing down of inventory to NRV and reversal. Cost is 100, NRV 80, making 100 as 80. Restructuring activities like merger, all of that. Legislative changes having retrospective application. What is this? Sometimes government will tell, law is changed from the past, pay extra tax. GST rate is changed to 12%, not from today, from 6 months before. Palaya tax will pay. They don't do it, but if they do, income tax famous Vodafone case is a retrospective change. Online gaming, Dream 11 got a notice of 6,000, I think 50,000 crores they got notice. Generally Indian cricket team sponsor, it's difficult. Who are the Indian cricket team sponsor? First Sahara, then recently Baidu's, now Dream 11. Sahara company scam, arrested, the founder died last year only. Okay, he was in jail, yes, he died 20 years, he was in jail, 15 years. Sahara company got into scam. Baidu's, we all know very well, latest scam going on. Yesterday only they announced value became 0. Company values announced officially 0 each. Okay. Now Dream 11 recently got a notice from the department that you have to pay GST of 50,000 crores or something, or some 5,000 crores of GST they have to pay. Notice came. We have to wait and see what happens to Dream 11. Recording, no problem. Okay. Facts only, no. But again, these are only examples, my opinion, guys. It's not the real facts. I am giving my I'm giving a disclaimer of opinion. Okay, it's only disclaimer opinion, it's my personal opinion. Okay, fine. Then these examples you'll be aware what are all exceptional items. Quickly let's go to one or two sums in AS5 and then we'll close this standard. Where is AS5? Yeah, 56. Fine. These are AS5 questions. Just 2 to 3 questions let's do, guys, and then we'll go on a break. Follow. For the past 5 financial years, an old outstanding balance of 50k was appearing as a sundry creditor in the current year balance sheet of People Limited. The company is certain that this amount is not payable due to one or more reasons. Therefore, it decided to write off the said amount in its current year books of accounts and recognize it as an income. The company treated the amount of 50k as prior period item and made the adjustment accordingly. Is it a prior period item? No. Is it an error or mistake in previous year? No. What is that? It's no more payable. So last year it's not error or omission. Therefore, it is not treated as a prior period item. Are you following, guys? Clear? Next. Question 2. Fuel surcharge is billed by the State Electricity Board on provisional rates. Final bill for the fuel surcharge of rupees 5 lakhs for the period October 2021 to September 2027 has been received and paid only in Feb 2028. So if I put the timeline, until September 2027 from October 2021 has been received and paid only in Feb 2028. This belongs to which financial year? 27, 28. But the same was accounted only in the year 28, 29. Comment whether accounting treatment is right. Now, accounting should have happened in which year? 27. Is that a prior period item? If I accounted in 27, 28? No. You know, all these days I was getting billed only on a provisional basis, so I put some provisions, but I got the final bill in Feb 28, then I should have accounted in this month, this year. Yes, but I did not account in Feb 28, I am accounting in next financial year 28, 29. That means accounting in 28, 29 for previous year becomes a prior period item. Are you following, guys? Are you getting it? Yes, sir. Everybody understanding? Hello? Yes, sure. Next. I'll just do few questions. During the year, a medium-sized manufacturing company wrote down its inventory to net realizable value by 5 lakhs. What is it? Ordinary, but within ordinary it's an exceptional item. Writing of cost to NRV. Is there a separate disclosure needed? Yes, if it is material. I can't tell yes. If the size and nature is material, then you will give a separate disclosure. That will be the answer for first one. Or of such size, nature and incidence, their disclosure is relevant to explain the performance of the enterprise. It will be treated separately. And AS5 also, AS5 provisional solla. Institute says writing down of inventories can be exceptional items. We saw in the bar text, guys. Okay. Next. A company signed agreement with employees on 1st September for revision of wages retrospectively from 30th September. So this is September 2022, correct? Retrospective from September. So this year I am changing your salary to 2 lakhs, but not from now, from last year. So you are making employees happy, which generally doesn't happen except in question. This would cost the company additional liability of 5 lakhs per annum. Is this disclosure necessary for the amount paid in 22-23? Yes, we can put as exceptional, but its size and nature is material. Additional liability took place. It will be part of, it's not prior period item. It's not previous year wages paid now. Now only I am changing previous year wages. So I will include it here. Are you following it? It should be disclosed separately. If you look at the answers, they don't mention exceptional item anywhere. Because standard doesn't use the word exceptional. Only in study matter, what is exceptional? These are not defined. Look at this. These are not defined. certain items of income expense within P&L, ordinary, are of such size, nature, incidents that their disclosure is எதுக்கெல்லாம் separate disclosure you give, that becomes exceptional. Are you following, guys? Next, company finds that the inventory sheets of 31st March did not include 2 pages containing details of inventory worth 14.5 lakhs. How will you deal with the following for the year ended 31st March? Prior period item. Omitted to include inventory sheets in previous year. Now I will include. Therefore, it's a prior period item. Are you guys following? Next. Explain whether the following constitutes a change in accounting policy or not. Introduction of a formal retirement gratuity scheme by an employer in place of an ad hoc scheme. Before I used to give employees random gratuity payments. Now I am giving them based on a scheme. Is this change in accounting policy? No, it's only introduction of a scheme. Management decided to pay pension to those employees who retire after completing 5 years of service. Such employees will get pension of 20k. Earlier there was no such scheme. Is this in accounting policy? No. Are you following, guys? This only is there in study mat. I am teaching you in reverse way, telling you what is the answer. Now if you go read, study mat has this point. What is not a change in accounting policy? The adoption of a new accounting policy for events or transactions which did not occur previously or that were immaterial. Ad hoc payment, now I am giving some payment based on scheme. The adoption of an accounting policy for events or transactions that differ in substance from previous. Oh, this one is ad hoc. Before ad hoc payment, now I am bringing a scheme here which did not. One second. So this one is the new scheme which is introduced. Are you guys following? Clear? So this point is already there, but even if you don't read this, basically they are trying to say bringing something which is not a big change. It's not a change in accounting policy. Only if you change the principle or the FIFO, what is there in standards, if you change, that is my change in accounting policy. Next. We'll just do one more question. In the current year, there is a change in depreciation from SLM to WDV. This is change in accounting. Estimate. When recomputed depreciation retrospectively as per new method, deficiency arose in depreciation respect of past year. Therefore, reduce the carrying amount of the asset by the amount of deficiency, and change in carrying amount has been divided to P&L as an extraordinary expense. Is it extraordinary? No. Whether a change in carrying amount of asset due to change in depreciation method should be extraordinary item? No. It's what? Change in accounting estimate, which is very normal. It happens. Read the full text later. Then you have practical questions. One question. Let's do that and we'll close this. Z Limited is engaged in the business of providing consultancy service. A few days back, it received notice from GST to pay 5 lakhs. On the consultancy service of 5 lakhs. It paid the demand. The payment is recorded as extraordinary. Is it extraordinary item, guys? No. Exceptional? No. It's just normal, ordinary activities. If size is different, you will name. It is contrary. It's not an extraordinary item. Extraordinary means it should not recur frequently. Are you following, guys? With this, we are done with AS1. So what all we finished in this? Perfect. AS3, AS17, AS18, AS1 nu panita. Hello, the gap we finished. These standards are done. Fine, that's it. See you in the next session, the end one. Okay, thank you. Okay, so in this session, the last 2 to 2.5 hours of our marathon, we will cover AS15. Towards the end, last will be amalgamation, at least few core concepts over here. Some of them asked me at least to give a teaser of AS11. So we will spend 15-20 minutes first to start off and do AS11 now, 15-20 minutes, and then go to 15 amalgamation, and that's it. No more new standard requests taken. Okay. Nothing is left. We almost finished, guys. Okay. Okay. Fine. Okay, let's start off AS11. AS11, follow guys. It talks about foreign exchange. How do you account in our schedule 3? This standard basically has 3 parts. The whole standard. Foreign currency transactions, how do I account? Foreign operations only we saw little bit in branch, integral and non-integral, and then we have foreign exchange contracts. Foreign operations, since we discussed in branch at least one sum conversion, I am not discussing that here. Anyway, that's part of branch. We will discuss this A, foreign currency transaction, and B, foreign exchange contracts. We will do one sum in each and then proceed. You actually know the answer for this. You just have to connect it with the subject. Okay, let's say on 15th Feb, Bharatwaj purchased the laptop from US in dollars. Let's say he paid $1,000 when $1 rate was 80. What entry will Bharatwaj pass? Laptop account debit to cash or bank. How much? 80,000. This will be my entry. If it's cash or if it's cash transaction, the standard doesn't care. On the date of payment, whatever is the dollar rate, record that. On the date of receipt, whatever is the dollar rate, record that, because that is the money I will get. Now Bharatwaj, small change in example. Instead of cash, it has become a credit transaction where he purchased on credit, so his crediting is creditor. Date also will change from 15th to 14th Feb. Okay, 14th Feb he purchased the laptop. Sale was going on, so he purchased laptop. Okay, that too on credit he purchased. Now he decided, they told 1 month credit, so he repaid roughly around 14th of March of the same year. Will the dollar rate be same? No. Let's say dollar rate went to 82, 2 rupees increase. What will be his entry for payment? Creditor account debit to bank. First, how much he has to pay? 1,000 into 82. Can he tell, my liability in books is 80, I will pay 80? No, he will pay 82,000. But I created liability only for 80, so I can debit only 80. So what about my other debit? Foreign exchange loss. That's it. Are you guys following? Are you understanding, guys? This is basic. Now let's say the same example. Instead of paying on 14th of March, he is paying, let's say, on 14th of April. On 14th March he did not pay. So let me eliminate this entire transaction. Are you guys following? On 14th March or April when he paid, the dollar rate, let's say, was 85. Okay. But in between these two dates, you have a date called 31st March, which is my year ending. And balance sheet is called balance sheet as on or as at a particular date. Now as on this day, the liability in books creditor is standing at 80,000 up. But the dollar rate on 31st, let's say, is 82. That means your balance sheet liability value is not correct. Are you following? Okay. It's not correct. So in this case, he has to restate his liability on 31st March. What is his new liability? If dollar rate is 82,000. So he has to increase his liability. On 31st March, Bharatwaj will pass one more entry to creditor 2,000. 82,000 pass pannunga, you will pay double money. Already 80 is there. So you will create additional liability only for 2,000. Debit what? Can I debit laptop? Can I debit laptop? No. When I bought the laptop value 80k now. This extra is not an appreciation in asset, it's a loss because of dollar exchange. So I will write foreign exchange loss account debit how much? Now on 14th April he will make the payment. What is the entry on payment? To bank, which is 1,000 into, again it increased. So he will pay 85,000. This time he can debit, creditor account debit 82,000. Still he has a loss of 3,000. foreign exchange loss which get debited to my. So that means what is the overall loss in this transaction? 5,000. But I am just splitting my loss. Now in the entry a pass panlana 2,000. The payment entry loss would have become 5,000. So if on the payment date if my loss is 5,000, it's not true and fair view because this 5,000, 2,000 belongs to my previous year. So basically what I am doing by restating on 31st March, I am debiting loss of 2,000 for previous year, that year loss, and 3,000 for the next year. Are you guys following up? Clear? Understood till here? Sir, this is okay if the dollar rate is only increasing. Correct? What if the dollar rate on 14th of April becomes 81? Decreases. Possibility is there? See, the increases more now, more loss I will debit. So basically loss I am just splitting it. Now it becomes 81. How much I will pay? To bank 81,000. In what I pay will not change. But creditor irukirde in books la how much? Creditor account debit is 82. So what's my gain? 1,000. So this gain I will credit as foreign exchange gain. Credit my P&L 1,000. Sir, how can I debit P&L and credit? It's different financial year. Last year I thought losses 2k, but my loss is only 1,000. So 1,000 is credited back to my P&L. Now however the numbers move, positive, negative, it will keep going. So all you have to do is on the date of transaction, record the transaction on the dollar or whatever foreign exchange rate is there on the date of transaction. On the date of payment, record the transaction or using the date of payment. This payment date is called settlement date as per AS 11. In middle we have something called 31st March, which is my year ending. 31st March, which is my year ending. So in year ending alone, I will do restatement of my liability or asset. This example is he purchased. What if he sold? Everything will reverse. So instead of laptop to creditor, it will be debtor to sales. He sold. Debtor to laptop, debtor to sales. Clear? Whatever it is, debtor to sales. So instead of restating creditor, you will restate your debtor, positive or negative, both are allowed. Don't tell prudence you can't recognize gain. I am recognizing unrealized gain because that is the gain on that day. It's unrealized gain, it's not anticipated gain. There's a difference between unrealized gain and anticipated gain. Iniki na 31st March na settle panna in the gain varum. Are you following guys? Clear? This is how you account for foreign exchange transaction, foreign currency transactions. If you look at this, recognition, when will I record? Recognize on the date of transaction. Measurement, what value will I record the foreign exchange transaction? Measure using exchange rate on date of transaction, or first 14th Feb. That is called initial recognition. Later on balance sheet date, measure using closing rate. I will use my closing rate for restatement. And on settlement date, measure using exchange rate on date of settlement. Are you following guys? Monetary items ke subsequent recognition, exchange difference arising on subsequent recognition, charge to P&L. Just now we did in the loss of 1 or 2 whatever gain is charged to my P&L account. Are you following guys? This is first part of the standard. Quickly let's just do one sum. Which module it's here? Yes. No, 1,000 gain will be adjusted only with this year thing. Last year loss will be 2,000. This year gain will be 1,000. 2 separate financial years. Okay. It's not a prior period item. It's not an error in accounting. It's proper correct accounting. So if I just take a simple AS 11 question. AS 11, look at this. Goods purchased on 1st Jan, 15,000 into 75. So I will record my liability at 75. On 31st March it became 74. So gain or loss? Gain. How much gain? 15,000 rupees. 1 rupee only change, no. So my gain is 15,000. I will create a gain of 15,000 and record in my books on 31st March. Again on actual payment it became, I have another gain of another 15,000. So my total gain is, I recognize that 75, paid 73, total gain is 30,000, split between 2 years. Are you guys following? Yes, sir. So total gain will be profit of 15,000 and profit of one more 15 for 2 different years. Are you following, guys? Yes, sir. Next, I already told you in one of the previous classes what is monetary and non-monetary item. That only is defined here. Some key terms. What is exchange rate, home currency, foreign currency, all of that you know. Closing rate, average. Monetary and non-monetary also we discussed that day by giving balance sheet example. Typically non-monetary items only have accounting standards. So monetary, amount held or assets, liabilities to be received or paid in fixed amount like trade receivables, trade payables, all of that. In that we have a question. They are asking you to classify what is monetary and inventory is what, guys? Don't mug up. Inventory vitta. Can I tell exact book value or ma? No. So non-monetary. Trade receivables, yes, monetary. Investment in equity shares, PPE. Typically pata whatever is non-monetary as accounting standard. Always don't apply that rule, guys. Okay. Generally I am saying. Okay. So 1, 2 is done. Now we have one more concept within this where whatever, if you look at this case, we did on 31st March exchange loss account debit to creditor, we wrote 2000 because he purchased laptop. Now what happened in early around the 2008 financial crisis time, the price of dollar suddenly went up, demand went up. So what happened, suddenly a 30 rupees dollar let's say became 60. So many people who purchased asset or took a loan around that time, they recognized loan let's say at 10 lakhs, but because of exchange loss alone, the loss itself became 10 lakhs around that time. Are you getting it? So now what I have to pay is 20 lakhs, but loan will be repaid after 10 years up. Or let's say I purchase asset will be, I will pay now, but it's a big loss. If I debit fully to P&L for 31st March, my P&L will have a huge debit. So that time everybody requested I say, full loss is coming. So it's correct, full loss. So what ICA told, okay, in certain cases alone, this loss that we have here, no, instead of debiting P&L fully, I will allow you to debit. That time someone told wrong answer, that is the correct answer. Debit laptop. I will debit the loss to my asset and increase the value of asset. So your laptop which was 80,000 will now become 82,000. Sir, how am I accounting loss? No. On this depreciation, on this asset you will provide. That means on this additional 2,000 you will provide depreciation. So instead of me accounting the full 2,000 in the same year as loss, I am deferring that loss over the life of the asset in proportion to depreciation. Are you following? Yes, sir. Not for all companies. For certain companies, this is not, option is not available now. Munadi or scheme was there. And the scheme edutana, you can still use it now. But questions will tell, they have chose that scheme. Okay, what is that scheme? Whenever there is a long-term foreign currency, I borrowed for purchasing depreciable asset. I borrowed 20 crores for buying an asset. I purchased asset, but dollar value went up. So my loan liability will go up. That loss, instead of debiting P&L, that loss either can be charged to P&L, like our example 2K, or adjust with the, by adding to cost of, that's it. Nothing else will change in some. Instead of debiting P&L, debit the asset. This is a question. Sir, what if I didn't? Then other people asked, sir, na asset vaangirken, but it's not a depreciable asset. I bought a land. Then they said, okay, instead of debiting asset, debit some account called X account. From this X account, you keep debiting P&L like a deferred method, that deferred revenue method. This is deferred expense method, where you debit 100 now, every year you keep transferring 10 to P&L. So my entry will be now X account debit to liability. Later this X will be transferred to P&L, P&L to X over the next 5 years or 10 years, because there is no depreciation. That X account is called foreign currency monetary item translation difference account, FCMITD account. Are you following? I will debit this account. When can I use this scheme? You can use this only if the question specifically gives you a clue that okay, you can use that. That we have it one or two questions are there in the book. I will just show you how do you pick that clue. Here. See, A Limited has borrowed $10,000. Interest is so much. Acquired a depreciable asset. The dollar rate increased from 48 to 51 on loan. So there is going to be a loss of, when I borrowed it is 10,000 into 48. When you are repaying it will be 10,000 into 51. Extra is 30,000. This loss you can debit to what, guys? The particular asset or FCMA that account. When I will know that, question la kuduthruva. That is the option under paragraph 46A is not availed. Debit. Option under 46A availed. Debit the particular asset or FCMA account. That's it. Are you following, guys? General da maru. Are you following, guys? Clear. Third case, loan was taken not to procure depreciable asset. So in first case I will debit P&L. Second case I will debit asset. Third case only I will debit FCMITD account. Are you following, guys? Because it's not a depreciable asset. If you can see the difference, see. First case they debited finance cost P&L. Second case they would have debited finance cost and transferred that to asset. Can you see, guys? Transferred to asset. In third case, FCMITD account. So first debit this and transfer. That's entries, guys. Are you following? Clear? This is the next concept. With this, the first part of the standard, which is foreign currency transactions, is done. Coming to last one, forward exchange contract. Fairly easy, guys. What is forward exchange contract? We have two types of forward contract. One is used for speculation, one is used for hedging. I'll quickly explain what this is. We'll just spend 5 minutes, do one sum in each and then proceed. Very easy, guys. Let's say, for example, we'll take, whom will take? Okay, we'll take, from girls side we'll take someone whom we have not taken so far. Yes, your name. Yourself. Sneha. Okay. So Sneha is the CFO of, let's say, Hyundai. Okay. So she purchased plant and machinery for Hyundai factory in India by paying $1 lakh or let's say $10 lakh, guys. When the dollar rate is 80. Now suddenly if dollar rate becomes 81, how much extra she has to pay? Extra 10 lakhs. Extra 1 lakh. Extra 10 lakh dollars at 80. If it increases by 1 rupee, she has to pay extra 10 lakhs. If dollar rate becomes 90, then she has to pay extra 1 crore extra pay pannu. Dollar movement. Correct? Now, Sneha will be under immense stress as a CFO. Every day she will wake up. First she will check the dollar rate. Let's say she purchased asset, she has to repay after 3 months. So every day 3 months she is not getting proper sleep, waking up by your dollar rate, now you're 90 or 95, I have to pay 2 crores extra, what to do? For this only, now she has lot of, why she is getting the stress? Because of the increase of dollar rate. So the bank is saying, don't worry, I will take away your stress, but you have to pay me. So bank is saying, whatever happens to the dollar rate, so let's say she purchased now 10 lakh at 80, she has to repay after 3 months. The bank is telling her, hey, whatever happens, after 3 months, when you are paying, let us fix the dollar rate at 85. Let it be any rate. You pay 85. That means she has to pay extra how much? 50 lakhs. She anyway, if she's not, so they're trying to enter into a contract. Bank is saying, let's make a deal. You don't have any stress. You pay 85 in the future. That means your additional payment will be 50. If the actual dollar rate is 92, you pay only 85. Even if the actual dollar rate is 75, you will pay only 85. Are you okay with this, Neha? Yes, what else she can do? No stress. She can focus on other things. Anyway, she knows dollar rate will go up. Bank is fixing a dollar rate. So she is happy about this. So she will go and enter into a contract. Forward contract she is entering when? Today. A contract entered today with the bank fixing of dollar rate in the future is called forward contract. What was the dollar rate today when she entered into contract? 80. That 80 is called spot rate. On the spot, what is the rate? What is the rate she fixed? 85. That is called forward rate. What is the additional liability or expense for her because of this? 5. That 5 into 10 lakhs is how much? 50 lakhs. This 50 lakhs is her expense, which she will debit to the P&L account on a proportionate basis over these 3 months. Are you following, guys? So the equation is forward rate minus spot rate. Are you getting it? Any doubt in this? Next, Sneha is not the CFO of Hyundai. She simply purchased this contract with the bank. She was free in the house. Okay, she went to the bank and she purchased for 85. How many dollars? $10 lakh. Now she is trying to do a little bit of gambling, because if it crosses 85, let's say it goes to 95, 100, she is going to earn a lot, because now she can buy dollars at and sell it for 95. She can buy dollars at 85, sell it for. But if it becomes 70, she has to buy dollars at and sell it for. This loss who will bear? Profit also who will bear? So she will get profit or loss. This type of forward contract is called speculation. Forward contract ade spot rate, ade forward rate. But your intention changes. First the intention was to protect me from risk, so it's called hedging. Second intention is to just do gambling, speculating, so it's called speculation. Speculation, how should she account? Let's say she purchased the forward contract at 85. So she purchased $1 lakh or $10 lakh at. That means she has the right to buy dollars after 3 months for 85, irrespective of what happens. Now 3 months she will keep waiting. Market will keep changing, rate will keep changing. In the contract, this right to buy dollars at, and the right I will sell. I will sell the contract. Are you getting it?
Yes, sir.
I am not selling dollars. I will sell the right to buy the dollars at 85. Now imagine tomorrow dollar rate is coming close to 82. Now this contract will get value, because once it crosses 85, there will be more demand. Let's say it becomes 87. Everybody will want this. Let's say it goes to 83. Bank will make this 85, 90 now for new people. But she still has it 85. So she will tell in the market, I have a contract where it gives me right to buy $10 lakh at 85. Somebody else will want to do speculation again like her. They will buy it at 88. So she will sell it to them at 88. Forget the actual rate, we don't care. She bought a contract at, she will sell for, her profit is $3 into, her profit is, she will account for this profit. So what is this? 88 is what? Is it forward rate?
No.
Forward rate is 85. 88 is the selling price. So basically what is profit on goods? Profit is equal to selling price minus, her selling price 88, cost is. So profit on forward contract used for the purpose of speculation is selling price of contract minus purchase price of contract. Are you following, guys? Here I don't care about forward and spot rate. Let's say your price is crashing now. Dollar price went up to 75. It's crashing more. She's going to sell at loss. She purchased at 85. She's going to sell only at 78. What's her loss? $7. She will book the loss. Are you following? So ade forward contract, it depends for what purpose you buy this contract, whether it's for hedging or speculation, and we account it accordingly. Are you guys following?
Yes,
clear? Okay. Now with this logic, let's do the last two sums in the book. These are all branch questions, guys. AS11 will have a branch question also, but unique questions are only these. Illustration 5, illustration 4. Last two questions, then I'll move on to AS15. Follow, guys. Rao Limited purchased the plant for 1 lakh on 1st Feb, payable after 3 months. Company entered into a forward contract for at 49.15 per dollar. Exchange rate on 1st Feb was 48.85. How will you recognize profit loss on forward contract? First, is this a forward contract for speculation or hedging? Kudukamata, you have to find with the example I gave. She purchased plant. To protect her risk, she entered into forward contract. It's a hedging. Hedging now, what is it? What is the spot rate today? Irrespective of what happens, she got a deal of 49.15. So profit in case of forward contract for hedging is forward rate minus spot rate. How much is that? 0.3. 0.3 into how many dollars? Her losses 30,000. This loss she will account from when she entered on 1st Feb. When is the contract entering? Feb, March, April. So it ends on 30th April. So for this period losses 30k. 31st March ends here. So for this period it is 20. This period it is 10,000. I will split the loss in the ratio of 2:1. That's it. 2 financial years. Clear?
Yes, sir.
Next. Question 5. Mr. A bought a forward contract for 3 months for $1 lakh when $1 was 47.10. This is my spot rate. Correct? What was the dollar rate? Now. No, sorry. On December 1st for 47 when the exchange rate was 47.02. So change. A bought forward contract for 3 months on 1st December at 47. This is my forward rate when the rate was 47.02. So when today's rate is 47.02, I bought a contract for 47.10. On 31st December, when he closed his books, year ending, dollar rate was 47. On 31st Jan, he decided to sell the contract at 47.18. Show how the profits will be recognized in the books. This is hedging or speculation. Asset even today you can buy a forward contract. Download Upstock app or Zerodha. Go to F&O segment. Forward contracts, currency trading. It's a huge ocean. You can buy and you can simply predict and lose money. Okay. Fine. Now, so here he decided to sell the contract at 47 point. Simple. What is the profit? Selling price minus cost price. I sold the contract at 47 point. Cost I purchased at 47 point. What is the answer? Point into 1 lakh. How much? 8,000 is my profit. I will book it. Here I will not. Now, are you getting it, guys? This is the profit I will book. Sir, by mistake, if you treat this as hedging and you do forward rate minus spot rate. Forward rate is 47.10. Spot rate 47. Answer is same, 8,000, but no marks. So question is framed like that. Are you following, guys? Clear? Nee and hedging arthalu speculation arthalu ore answer in this question. Clear? Year end closing we are going to come there. So forward contract intended for the purpose of speculation and hedging. Not for speculation means hedging. Premium or discount, this is not profit loss. Hedging now it's not loss, it's premium or discount. At the inception of the forward contract should be amortized as income or expense over the contract. Are you following, guys? Premium or discount arising on the contract is ignored. That means on the forward rate minus spot rate is ignored. At each balance sheet date, the contract is marked to market and the loss or gain is recognized in P&L. Also, profit or loss arising between the selling price and purchase price of the contract is recognized. So, going back to this question, on 31st March, what is the value? 47.15. If I sell today, what is the profit or loss? So, that also I will recognize in the books marking to market. So, since for speculation, the difference between spot rate and contract rate will not be recorded in the books, forward and spot. Only when the contract is sold, the difference will be actually accounted. Mark to market is a different concept, guys. We don't have to bother about it. Here you just focus on selling price minus cost price and we'll account. Are you following, guys? Okay. That's it. With this, we are done with AS 11. Are you following? Clear? Okay. What we didn't discuss here is in the foreign operations related sums, branch head office, we didn't do any branch per se, that will get covered. Following, guys. Now we will go to the AS 15, everyone's favorite standard. Sorry? Mark to market is there, but it's a much detailed concept. We don't have sums in that. Mark to market is basically, how will I do mark to market? What is the forward rate? What is the rate on balance sheet date? That difference I will account. Don't take spot rate. What is the rate on 31st March? What is the forward rate, and difference you will account profit or loss for that period. But that what happens in mark to market, I have again reversed that next year because just for recognizing in balance sheet. Okay. AS 15 enga irukku? 1, 2, 3, 4. Okay. AS 15. How many of you studied this already? How many of you thinking of skipping? Skipping hands are more. But Dhaneshwar, class AS 15 full 5 hours at the class. Rather than 5 hours. 5 hours at the AS 18. 15. Pavitra studying or skipping? Studying. Okay. Now, let's say Kritish Rahul. Everybody should know Kritish Rahul is an Instagram influencer, guys. Follow his account later. He's going to be a future influencer. Okay. Pinali last row later after class you take his account, guys. You know influencer, yaar? Skip panna porom. Okay. Fine. Follow, guys. Now. Guys, let's proceed. Now, what I'm going to do is see AS 15 is a huge standard. One of the most difficult standard even in CA final. If I take it conceptually, I will need 5-6 hours. It's one in-depth, crazy standard, guys. Okay. What I'm going to do in our marathon, we don't have 5 hours. 1 hour is what I have in mind. Our agenda is, sir, exam la vanda I need 5 marks vanda, I need to pocket those 5 marks. So what I'm going to do, we are going to do a reverse learning. First I'll give you introduction for the standard. Why this, that introduction is very important. And then I will teach you in a reverse way. What are the sums in study matter? How do you solve that? Okay, we are going to learn that way. If you want detailed AS 15, the class is available, guys. Marathon students. Okay. But anyway, I put it openly on YouTube. It's available. But you can go take the full 5 hours. If you still have the time, 5 hours I will invest on AS 15. Now 5 or 6 hours, I don't know. 5 hours, whatever. Okay, now we'll go to the questions. Where is AS 15? Yeah, found it. Okay. First year now. AS 15. Let's go to the question straight away. I'll give you an introduction, of course. How many illustrations are there, guys? How many sums are there? Around some 10 sums. Okay, 12 sums. I will try to do as many as possible in that. What could be individual 1-2 marks or 4 marks? Let's go to the concept, guys. AS 15 says anything related to my employee cost in schedule 3 P&L or employee cost irukuma. Whatever comes there is covered in AS 15. I will also tell you what part of the standard is difficult. Let me give you an overview. Okay. This standard basically has 4 types of employee benefits. I'm going very exam oriented over here. First, what are the 4 types of employee benefits? One is short-term benefits. That means any benefit that is payable to my employees within the next 12 months. Accounting is fairly easy. Give me examples. Salary, bonus, T expense, petty cash, all of that. Normal accounting, debit in the year where the expenses incurred. Only one thing, one tricky part over there is compensated leaves. We will discuss that in some time. Otherwise, within the next 12 months, I will straight away create a normal provision. P&L account debit to bank or P&L to provision. Post-employee benefits. What is employment benefits basically? After you finish your employment, you will still get some money from the company like PF, gratuity, all of that. Leave salary also maybe, but this is the main one, most important or complicated part in AS 15. Next you have something called termination benefit. What is termination benefit? VRS, golden handshake payments. Golden handshake, I want to fire this employee, but if I fire him, his career may be affected. So நீயே வேலை விட்டு போயிடு. So we will do a golden handshake, win-win for both of us. I am also happy you are not here. Sorry? புரியல. Golden handshake, all of that. What are you saying? No. Fine. Termination benefits. How to account termination benefits? Same as post-employment benefits. So you should learn post-employment benefits. Long-term benefits, these are payable after but before retirement. Sir, what is this? Sometimes somebody completed 10 years or somebody completed 12 years. We'll do celebration, golden jubilee, silver jubilee celebration. Anmay, are you following? So I know that he's going to complete 5 years, 10 years, those kind of benefits which I'm going to give you during employment but other than short term benefits. This is miscellaneous category. This accounting also is simple. I'll come to that. This you will again recognize just like short term liabilities. You will create a PN, debit PN and create provision, but we will use discounting rate. In this we don't have sums in study matter. There are literally zero sums, but you will create a provision, that's it, but ensure the provision is a discounted provision because it's a benefit liability of future. I am discounting now, so we only have theory. I will come to the theory towards the end. Okay, this is the 4 types of benefits. So sums, if you see, predominantly for us in institute, short term benefits and post employee benefits. Only in these 2 we have sums. That means full standard is not included in syllabus. Only a crux of the standard is included in the syllabus, so that you don't panic a lot. In terms of they created panic. Okay, now follow. Let me give background as to how the accounting will happen in the standard. This is the overall concept, then we'll go to sums. Let's say Infosys opened a new office in, let's say, Madurai. Okay, Madurai, Tamil Nadu, for those who don't know, online students. Okay, now let's say they opened new Infosys office in Madurai with 5,000 employees. Now if an employee works in a company for more than 5 years, company will pay something called gratuity. Why they are paying? Because it's not because I am gratitude towards you, you worked 5 years. Our act irukku, payment of gratuity act. Leave the year guys, enake theriyadhu. Okay, now how much is the gratuity payable? As per that act is last drawn salary into number of years of completed service into 15 by 26. Let's say for example, we'll take, whom will take? Ambrish. He came to first row also. Okay, Ambrish worked in Infosys for 5 years. Let's say after 5 years his salary is 2 lakhs per month. He worked for 5 years into 15 by, how much he will get? 5 lakh 76,000. 9, this 920 will be given to Ambrish after completing 5 years. 5 years he will get extra apart from salary. So just no increment from 1 lakh became 2 lakhs. You will still get this. Are you following guys? Now, this is one employee. This is only for Ambrish. Now, have you seen our parents or grandparents work in a company for 20 years, 25 years? Only we keep jumping. That's true. Our generation is like that. So we can't blame any particular person in the generation. But that time 20 years they work in a company. So let's take Madurai, this Infosys itself. How many employees they have? 5,000 employees. Now if assuming these 5,000 employees worked 5 years, 5,000 employees into 5 years, what's the average salary of an employee after 5 years if you work in Infosys? Up and down, let me keep it average 50,000 for simplicity purpose into 15 by, what is 15 by 26? Logic is number of working days in a month effectively. They are making it half of the number of working days in a month. 26 days is the working days in a month excluding 4 Sundays. So in that half. Okay. How much is coming now? 5,000 into 5 into 50k into 15 by 26. 70? Enough. Approximate guys. So 72 crores is what Infosys have to pay after 5 years for these people. Correct? Now how will I know how many people will stay after 5 years? Correct? This depends on what is the industry company is in, what is the number of employees, gender of the employees, age of the employees, location of the company and multiple other factors. So it's all about probability. I can't estimate. But every year I have to create a provision of. So that can I tell 5 years push to pathakalam 72 crores. I'll start saving now so by creating provision. I have to start saving now by creating a provision. This provision should be estimate, should be accurate. I can't randomly tell, okay, 5,000, 3,000 will stay. No. For that only we call an expert to help me do that estimate. He's called an actuary. It's another course, leave CA. That's more dangerous course. In India, there are less than 1,000 qualified actuaries as of today. If you like maths, that's a course for you. Probability 100 marks paper, probability statistics 100 mark paper, 3 levels, maths oriented course. So as a CA you don't have to do this computation. How much provision to create, we will call an he will put the computation and give me an estimate. But enna pandrom theriyuma. So you are actually learning actuarial syllabus in AS 15 so that at least you know what they are doing, you can compare when I do accounting. Are you following, guys? This is the background. Now how does the accounting work here? Follow? Okay. So you get it after, so let's come back to one employee. Let's forget 5,000. We're focusing on Ambrish, who will get 5,76,920 after 5 years. One of my friend who was working in Bangalore, he worked for 4 years and 9 months in a company. You know, 3 months murchanda gratuity. His salary was roughly, I think, 1 lakh or something. So he got a nice amount, around 3-4 lakhs. Around that time he had a heartbreak. He said, I will not work in the company. He's coming back to Chennai. He said, 3 months if you work. He's not a CA, I didn't know. If you work for 3 more months and quit, you will get one bulk amount. Then he said, no. My heartbreak is in the office only. I can't go to the office. I said, sorry, 3 years if you push yourself and go. He said, no. 3 months he has to go. He said, no, my peace is more important. He quit the job and he came back. Okay. Fine. But it's difficult, guys. 3 months or 3 days it was difficult. Okay. Now, come back. Now we'll come back to this distraction. Okay. AS 15 now distraction. Now you tell me how much should I save? Let's say I want leave 5,76,000. Let's say my estimated payable to Ambrish after 5 years is 5 lakhs. How much if I save every year? Year 1, year 2, year 3, year 4, year 5. We're getting into sum. This is the background. I'm going to get into a sum. How much if I save every year? I can pay 5 lakh to Ambrish. 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh. What is the entry for this 1 lakh, guys? P&L account debit 1 lakh to provision for gratuity. In my balance sheet, liability I will write provision 1 lakh. Correct? I told you that day itself, creating depreciation is a saving of cash. So if I create provision also, it's a saving. Yes, so I will have a cash saved off 1 lakh. But the problem is 5 years. This cash can be used for something else. Yes, so how is it a saving when you don't actually save the money? I kept aside the cash. I kept aside 5k in my wallet for a purpose. But suddenly when you see the money will not be there. You will keep using it, GPay here and there, somewhere you will keep paying. So how do you actually save? And the money I go buy some share, buy some investment, safe investment where the money will not fall. So immediately the standard tells this 1 lakh also you have to invest. So the entry will be investment in some approved investments, 1 lakh to cash 1 lakh. So every year in my balance sheet I will have a liability, I will have an asset. Whenever I have to make payment to Ambrish, I will sell this asset, get the money and pay the liability. This is the next part of accounting. We will come to that later. I just gave you introduction. Come back over here. If you save 1 lakh each year, will you get 5 lakhs at the end of 5 years? You forgot what? Time value of money. So if I save one, that means 5 lakh in end of 5 years is not equal to 5 lakhs today. That means you need to find how much I should save in each of these 5 years. So I will get 5 lakhs at the end of 5 years. Correct? So with this logic, you tell me year 1, year 2, year 3, year 4, year 5. How much if you save in first year, it will become, that means the present value of all my this is cash flow. This is discounting rate. So how much if I invest every year? Assume discounting rate is present value of cash flow. My answer should be 5 lakhs. Correct? So how much if I save every year at 10%? I will get 5 lakhs. Tell me first year, guys. 90,000? Okay. First year how much?
62,092.
How much, guys? That means, for example, if you are going to save 1 lakh in year 1,
So 1,4,410.
1 divided by 1.10 is 0.90. You will get 90,000. 9090. 909. So if you save 90,909 in year 1, it will become 1 lakh in next year itself. Correct? Only in year 4 if you save. In year 5 it will become. You are right, guys. You have to save 1 lakh each year. I want to save 1 lakh each year. But if I save 1 lakh in year 1, it will, how do I put this for you? Hold on.
1 lakh plus into 110 5 years.
Now, give me the answer, I'll tell you. The answer is 62,092. Now, I'll teach you the answer itself. If I invest 62,092 today, it will become 1 lakh after 5 years. How? Plus 10% interest. How much? How much, guys? 62. 60. Can you just divide 1 lakh into 1 divided by 1.10 for how many years? 4 or 5 or? 4 years. 68,301. Okay, this is 4 years if I am investing at the end of year. Beginning of first year now? 5. It will become 60. 62? 092. I'll explain, guys. Follow. With this gets over. Apde one sum is also over. Follow. Let's say I'm investing 62,092 today, guys. Okay. Now, after 1 year, you will get interest of 62. How much? 6209. It becomes 68. 290. 68,301. Again add 10%. 6830. You get 75. 131. Again add 10%. No. 7513. You get 80. 0. 644. 3 years over. Again add 10%. 90. 90. Again add 10%. 9091. Roughly 1 lakh, guys. Okay, that means, follow, guys. If I invest 62,000 approximately today, in 5 years it will become 1 lakh. Correct? Are you following, guys? How did you get 62,092? I discounted 1 lakh into 1 divided by 1.10 to the power 5 years and you get 62. That means inga eldradana inga eldanu. Year 5. Are you following, guys? So that means I will say in year 1 I will invest 62,091 or 2. Are you following, guys? That means assume year 1 starting. Okay. In year 5 this will become 1 lakh. Following? Now how much I should invest in year 2? 68,301. If I invest 68,301 and if I get interest for 4 years, year 2, year 3, year 4, year 5, year beginning of the year, then this will become 1 lakh. Then again in year 3, if you invest 75, 131, compound for 3 years, it will become 1 lakh in 5th year. Similarly, year 4, if you invest 82,644, it will become 1 lakh in year 4. Year 5, if I invest 90,909, 1 year later it will become 1 lakh. That means what you all told me invest 1 lakh is correct, but you didn't tell me the present value of 1 lakh. So if I invest this much in each of these 5 years, if my earnings is, then year 5 ending you will get 1 lakh plus 1 lakh plus 1 lakh plus 1 lakh you will get. Then I can pay Amrish 5 lakhs. Are you following, guys? Clear? How did you find this amount? This is nothing but present value of 1 lakh for 5 years. Present value of 1 lakh for? Present value of 1 lakh for? So now when I prepare my table of how much to invest, year 1 lakh how much to invest will be 1 lakh into 1 divided by 1.10 to the power 5. Year 2 what I want to invest will be 1 lakh into 1.10 to the power 4. Normally FM you will do reverse. You will do in year 1 you will take to the power 1, year 2 to the power 2, but it's coming in reverse 5, 4, 3, 2, 1. In year 1 it should be to the power 5. So in year 3 it will be to the power 3. In year 2, year 4 to the power 2. Year 5 to the power 1. Are you following, guys? Reverse discounting.
Sir, the last year one no sir.
First year?
4 sir. Next 3 2.
No, I am assuming start of the year. If it is end of the year, you are right. 4, 3, 2, 1. That's the question. Investing start or end of the year. That is not a big deal. Are you getting it, guys? We have a question. I am teaching you only those concepts which is needed for sums. So straight away we will go to, I have to find that sum. I am going to be purely exam oriented, guys. This sum. Exam la vandaduna idana. Exam la vandaduna 5 mark question. How do I get that 5 marks? Proceed to next question. That's it. That is my agenda for the next one. Are you following, guys? Like I said, in-depth concept. In the concept, now look at this sum. Beautiful sum. At least this 1 hour if you are attending. In the 5 sum if you are lucky, that will come in exam. Okay. An employee Roshan joined the company in the year 2021. Roshan is our Amrish. Annual enrollments of Roshan is at 14 lakh 90,000. Company also having a policy of giving lump sum payment of 25% of last drawn for how many years after completing? 5 years. This is not the gratuity formula we know. In the company he is having their own gratuity formula. Law allows that. As long as you pay minimum as per law. Okay. So here they are paying 25% of last drawn salary into 5. The salary of Roshan is expected to grow at 10% per annum. What is his salary today? 14 lakh 90,000 to 10. That means today he is going to get 14 lakh 90,000 to 10. How much growth? 10%. Year 1 plus 10%. Again year 2 plus 10%. Year 3 again add 10%. Year 4 again add 10%. Year 5 again add 10%. So 10% add panning na end of 5th year he will be getting annual salary of 24 lakhs. Are you following, guys? For my gratuity it's last drawn salary. So its last drawn salary is 24 lakhs per annum. Correct? Correct? Are you following? Then company has inducted Roshan in the beginning of the year. Apna you will do that 5. And it's expected that he will complete minimum of 5 years. No, they will not send him out. Or at least expectation. Thus he will get 5 years yearly increments. What to do? Somebody worked for 4 years, ayo gratuity, give him more work and torture him so he will leave. Okay. What is the amount company should charge in its P&L every year as cost of defined benefit? I will explain the term later. Also calculate current service cost and interest to be charged assuming 8%. Let me explain solution first. 24 lakhs is what he is going to take his last drawn salary. This is per month annual 24 lakhs. Okay. Clear? And they told he will be given a lump sum payment, one time lump sum payment of 25% of last drawn salary. That means he will be getting 25% of 24 lakhs into 5 years, So this is the equation we saw here, guys. So 24 lakhs la 25% is how much? 6 lakhs into 5. So what I have to pay him is 30 lakhs. I have to pay him 30 lakhs. That means I have to save each year. Just divide by 5. I need to save 6 lakhs each year. That means, can I say year 1, year 2, year 3, year 4, year 5, end of each year, I should save some amount here, so that at the end of 5th year it becomes 6 lakhs. Correct? So, if you see here what they are doing, forget this table, guys. We'll come to this table and I'll explain this table. He has to contribute how much? 6 lakhs is the cash flow each year. So end of first year, equal apportionment of defined benefit obligation. We will take this totally 5 years, correct? So salary will be paid each completed year. Yeah. So grow 10%, correct. So now 8%. I will do the same thing, but I am taking 4 years. Why? End of the year only I will give salary. After completing each year. Okay. So 6 lakhs is what I have to save in first year. Discount 1 divided by 1.08 to the power 4. If you divide to the power 4, you will get 0.735, 4 lakh 41,000. If I save 4 lakh 41,000 today in year 1 and in year 5, this will become 6. Is this clear, guys? If this is clear, sum is over. Are you understanding? Yes, so like this, in each of these years by 3, 2, 1, 0. Are you getting it? Year 5 ending you save 6 lakhs. It is nothing but 6 lakhs. No need to discount. It's the same. This assumption is year 5 end. So now the total amount I will be saving in terms of present values coming to how much? How much? 19 lakh? 87,000? Is it correct, guys? Here rounding off issue. Okay, that is okay. That is fine. 1 second. Okay. Okay, leave that part, guys. I want these numbers for adding all of these. 25 lakh? 85, 87. So, if you add all these, okay, fine. We need 30 is getting 20. Leave the round off, guys. Now, follow carefully. I will explain this table, but follow with me. Follow, guys. Year 1 lakh, opening is nothing. Interest is 0. Current service cost is 4 lakh. I will explain what is current service cost. Leave the terms. Leave the terms. First year you will save how much? We found 4 lakh. 41,000 will be saved in first year. First year end or starting? End. So, first year I am saving 4 lakh 41,000. My entry for that will be P&L account debit 4 lakh 41,000 to provision for gratuity 4 lakh 41,000. I am creating a provision for 4 lakh 41,000. This will be invested somewhere. Correct? So in first year he will invest how much? 4 lakh. First year will I earn any interest on this? No. End the interest over. So my opening investment balance is 4 lakh 41,000. Now on this I will earn how much? This is compounding to 8%. So first year I will add 8%. How much? 35 280. I am using the book just to save time. 35 280. So in after end of 2 years, the 4 lakh 41,000 plus 35 280 becomes 4 lakh 76. 4 280, rounding of 280. Are you following, guys? This is what money becomes at the end of second year. But Marugudi, second year I have to invest how much? 4 lakh 76 400. So second year I will again create one more provision. See, year 1 I created 4 lakh 41,000 plus how much it became? 30 35? This became 4 lakh 76 at the end of year 2. End. Marubudiyu year 2, I have to invest some more. How much is that? 4 lakh 400. How did I get this? Second year or discounting. So second year ending, if you discount 4 lakh 76 400, it will become 6 lakhs. Correct? So like second year I will invest 4 lakh 76 400. So now if you see, second year I am investing 4 lakh 76 400. End of year 2, the total savings or total provision you created becomes 9 lakh 52 680. 9 lakh 52 680 is nothing but 2 investments. Now interest should come for both the years. 76 214. Again third year I will invest 5 lakh 14 200. How that came here? 5 lakh 14 200. Like this each year if I keep investing, end of the fifth year, all these investments, this is the provision. The current service cost is called the charge to my P&L, the provision created each year. From where did you get this value? From this present discounted factor. So every year if you discount and invest so much, it will become 30 lakhs at the end of year 5. Are you following, guys? This is my total. This came to some how much? 25 lakh 87,000. There will be rounding of difference. Then the difference between this with 30 lakhs is the amount of interest I will get. Are you following, guys? The compounding part. Are you following? So this is the cumulative opening balance. Add interest, you get current service cost, you get the closing balance. Are you able to follow, guys? Why? You can actually stop the sum over here itself. Current service cost, if based on the question. Here they are asking you to calculate current. That means how much I will save every year is 4 lakh 41, 4 lakh 76 and so on. That is the provision I will create every year. And is asking how much is the interest cost to be charged, assuming discounting is 8%, and the interest kaga I am doing this table. Are you following? If you want to do it in a more detailed way, year 1 investment, year 2 investment, year 3, year 4 and year 5. Year 1 is how much we got? 4 lakh 41,000. This is nothing but 6 lakhs difference. This is the interest. Shortcut. How do you do it quickly in exam? Year 2 how much you are investing? 4 lakh 70 76 minus 6 lakh. This will be the interest of year 2. Correct? Year 3 4 lakh 5 lakh 14,000 minus 6 lakhs. That will be the interest. No, it's not the interest for that year. Overall, this total will match with this total. It will not match year on year. Why it won't match year on year? Why it won't match year on year? This interest is interest for year 1 end to year 5. Then you have to individually compute this into 10% for year 1. For year 2 will be this plus this, again this into 10%. Will become complicated. That's why we have this simple table. Are you following, guys? So I am investing first year 4 lakh 41. This first year's interest. Second year you invested how much again? 4 lakh 76. So my cumulative investment is 9 lakh 52. In 9 lakh 52, interest for year 2 is 76 214. It is year 1's investment plus year 2's investment with the year 1 compounded interest. Are you following? Investment is not the right word, it's the provision created. Are you getting it? This is again opposite to AS 19 lease table. AS 19 you will start with the fifth, this again reverse. Are you following, guys? If you are strong in AS 19, AS 15 also will be strong. That is weakness, this also will be weak. Anybody likes AS 19? 15? No. Okay, it's basically same discounting, guys. Don't worry, CA final is fully about discounting now. India is yella standard discounting, financial instrument discounting, revenue also they will do discounting. Because there they are saying time value of money is important. So every entry we pass will be discounted entry only. Are you following, guys? So this is this sum. Are you following? Clear? Let me go to the next sum. I'm coming in reverse. Yeah. Let me do two more core sums which can come for 5 marks. Okay, let me come back to material, guys. Follow. So now in this post-employee benefits, guys, post-employee benefits, how many of you honestly understood the previous sum to an extent at least? Exam you will be able to manage. That's it. Number mark you should be able to manage, guys. Okay. We are trying to do the best in 1 hour. Now, coming to post-employment benefits, there are 2 types of plans. What we did now is defined benefit plan, or it's also called DBO. We have one more thing called defined contribution obligation or defined contribution plan. What are the differences? Simple. Every year company has to invest up. So for gratuity or PF, if company is paying every year in PF and that's it, what you get is not my headache. Meaning, let's say Tata is contributing every year to India's PF fund. Ambrish will claim it from this fund and not from Tata. That means my work is only to contribute and not to do anything else. I don't have to worry about the claim later. That is called defined contribution plan. Here do I have a risk of future liability? No. So accounting is very simple. You just have to create liability. The actual risk of liability is not there, is not borne by the employer. Accounting, record expense contribution as and when the obligation arises to contribute, yearly contribution. Clear? Only in this gratuity defined benefit plan where this contribution payable to Ambrish after 5 years is given by the company, then you have an liability in the future. For future liability now you have to account that only what you saw in this sum, how you found the current service cost. It's a method called PUCM method, projected unit credit method. Projected unit credit means I am projecting the salary in the future and I am crediting each year now by finding the present value of the cost of that. Are you following? It's much more detailed. I am only teaching you on the sum cannot have you I am teaching. Are you following? Okay. Next, we will come back to this method in a moment. Let me finish off the other part in this standard. Come back to short-term benefits accounting. Normal salary and wages, just like what you know. P&L account debit to salary to bank or salary to salary outstanding. Bonus and profit sharing. We have different types of bonus. Statutory bonus, retention bonus, profit sharing. What is statutory bonus? As per payment of Bonus Act. Retention bonus. Employee wants to leave. To retain him I will pay some bonus. Profit sharing plans. If we earn more profit you will get. All this is given in the same year. Account whenever the same is given. Whenever I give bonus, what is the entry? P&L to cash or P&L to bonus payable to cash. Simple, easy accounting. Are you following? Yes, only compensated leaves has little bit of accounting to do. Let me give you examples and do the sum in the book. When it comes to leaves, there are 2 types of leaves. One leaves which is accumulating and one is, that means let's say every year employee can take 30 days of leave. This year I worked every day, sir. Leave edukla sir now. Bayangarama work pannirken. Next year can I get the leave? No. This year if you want you take. Next year on the leave can kaas varuma? Varadu. That is called non-accumulating leaves. Employee worked for 12 months. I paid him salary for 12 months. He had the option to take 1 month leave. He didn't take the leave. It will not be carried forward to next year. Should I pass any entry? No. So no entry to pass. Are you following? Yes, so no provision should be made for unutilized leave if it's a non-accumulating leave. For example, we have something called maternity leave. Woman gets 6 months of or 1 year maternity leave. But some companies, they will be like, I will still work, I don't want the leave. They will work from home in laptop, they will want to keep themselves occupied. Now, if you don't claim your maternity leave, can you claim next year? No. Are you? That's it. Leave lapses. Are you following, guys? You can claim it only when it's available. Bharat was not leave. Okay, following. Clear, guys? This is the example. So paid, but if let's say you have 6 months leave, most companies have a minimum 6 months of maternity leave. If you take leave for 6 months also, you will get full pay for those 6 months. Some companies have 1 year maternity leave. If you don't work for the whole year, you will get the full 1 year leave. You will get the full 1 year pay, and you're supposed to get that, because the whole idea is the maternity break should not affect your work growth. So you will come back to work after 1 year or 6 months, whatever time, and you will continue working in the same position. Clear? Every company in India, every good company has this. It is that. Clear? This is non-accumulating leaves. Are you following, guys? Coming to accumulated leaves, that means 30 days. If you don't take leave next year also you will get 30. That means you can take 60 days next year. Are you following? In this there are two types. One, you can take only one, that leave can be converted to cash. You can take cash instead of leave and the leave cash kodutru. So here we call it as accumulated non-vested leaves and accumulated vested leaves. What is accumulated non-vested leaves? That leaves, these paid leaves can be encashed when they leave the entity. That means, let's say year 1 you have 30 days leave, year 2 you have, year 3 you have 30 days leave. I never took any leave, I worked fully. Now year 3 when you leave the job, you have how many days leave? You have equal cash compute panni, I will pay you that cash. So whether you use the leave or not, you will get that cash. Sir, how I will get cash? Very simple. Let's say your salary is 1 lakh per month. So you will get 12 lakhs per year for 12 months. Now even if you work for 11 months, you will still get salary of, because 1 month leave is allowed. Now if I work for 12 months, I didn't take 30 days leave. That worth is how much?
1 lakh.
That 1 lakh you can take as cash when you are leaving. Are you following? Clear, guys? This is called accumulated vested leaves. Leaves that you can encash into cash. That means is liability doubtful or certain? That means I have to create a provision. Accounting always create provision for unutilized leaves which can be encashed. Vested leaves. Are you following, guys? These two are actually easy. The tricky part is the accumulated non-vested leaves. This alone, let me explain, where they are saying you cannot encash these leaves. You can't encash these leaves. So year 1, 12 months, you have 1 month leave, guys. Okay. Year 2 also, 12 months, you have 1 month leave. Okay. Let's say year 1, you worked fully for year 1. What is the entry I will create? 12 lakhs provision. I will debit my P&L for 12 lakhs. Year 2 also you worked only for 10 months. Year 2 you worked only for 10 months. What will be the salary I will debit? P&L I will debit 12 lakhs. Because 10 months plus previous 1 month plus this year's 1 month, I will get how much? You will get 12 months will be compensated. But first year, can you get 13 lakhs? No. You will never get paid for that. But ni leave edutha, you will get paid. That is the concept. Are you following? Now, let's say in second year, also you worked full 12 months. You will get how much? Carry forward is? 2 months is carried forward. Clear? Now in year 3, let's say you worked for 11 months. 9 months now you will get full salary, guys. 9 plus 2 plus 1, 3 you will get fully. Let's say you worked for 11 months in year 2. And the 11 months salary vandruma? How much?
11 lakhs.
Plus 1 month salary I have to account as 1 lakh, and you still have leftover 2 months I can carry forward. Are you getting the concept, guys? Clear? Easy, yeah? That's it. Now this, the paid leaves which can be carried forward to the subsequent years but cannot be encashed. You will not get the encashing accounting provision to be made for unutilized leaves which are expected to be utilized. That means what he is saying, this year I will create for 12 lakh salary and I will create a provision for 1 lakh. So look at this carefully. Year 1, this fellow worked for full 12 months. So I will debit 12 lakhs plus 1 lakh in year 1 because unutilized leave is going to use in next year. Now year 2, he worked, assume only for 11 months. Assume he worked only for, I will debit 12 lakhs I will debit for that full year, but let's first go, I will debit the full 12 lakhs, but here and I will reverse this provision of 1 lakh, so total is 12 plus 12. Are you following?
Yes, sir.
Are you getting the accounting, guys?
Yes, sir.
Basically, if there is any unutilized leave, how much is unutilized here now? Still I have 1 month unutilized. Again I will create provision for 1 lakh. Clear? So 1 lakh is reversed. Again provision for 1 lakh. So my provision will still have a closing balance of 1 lakh. And my whatever is unutilized in the year ending, I will keep creating provision. Year 2 la? No, year 2 why I am reversing? Basically it's not reversal. This 12 lakhs has 11 plus 1. In the year, other than the 12 lakhs, 1 year. So see, so his.
Previous year எடுக்கிறோம் current year ஓட 1 month leave எடுத்த மாதிரி எடுக்கலாமா?
Okay, he is asking 1 second. So you are saying I work for 11 months this year. So if I work for 11 months this year, first let me debit 11 lakhs I will debit, but he will get paid of how much? 12 lakhs, which is my current year's 1 year. Okay, so then I will take it as 12 lakhs is debit. You still have how much carried forward? 1 month. So no, see, this is this year's, but still he has 1 month left. Okay, net effect is the same. So he is saying if you don't reverse, what will happen? Still 1 lakh will be left up. What I am doing, I will reverse and again recreate. So inge debit 1 lakh, inge 1 lakh, net effect same. See, if I reverse 1 lakh, why I am reversing? I will wait for the year. I will reverse in the beginning of the year. Year ending I will check, he still has 1 month. So I will debit for, in the 1 lakh cancel. So net debit is how much? 12 lakhs. You are right, both are correct. In both answers, end of the year provision, how much is left? 1 lakh is left. But what is happening? In first method, I am reversing 1 lakh and again creating. In second method, I won't reverse, I won't create. Irukra provision update I will create. Are you understanding? It's like branch stock reserve. Reverse the branch stock reserve, again recreate in the end of the year, or without reversing, make adjustment in the year ending. Are you following, guys? Clear? Are you getting the both methods? This is what we do for accumulated non-vested leaves. Are you guys following? Okay. So let's look at illustration 3. Are you genuinely understanding, guys? Look at the question. Entity XY is required to pay a salary of 2 crores in the year 21-22. It actually paid salary of only 1.9 crore up to the year ending. Balance in April. Will they debit to P&L 1.9 crores or 2 crores? 2 crores. Are you following? Now that's it. Answer is done. Now let me take when this accumulated leaves will come. Going back to the same example, using an illustration in the study matter. Okay. First year he worked full 12 lakhs and I created provision of. Second year also he worked full 12 lakhs. I will create provision of. So he has total usability is. In third year also he worked full 12 lakhs, but this is lapsing. They are saying you can carry forward only for 2 years. So this first 1 lakh is lapsing. That I will reverse here 1 lakh. Are you following, guys? Are you getting it? Use panna the leave, if it lapses I will reverse. Are you getting this, guys? That also will come. But we don't have illustration for that, so I am not going into much detail. Okay, next. Whether enterprise is required to provide employee benefits for informal practices like Diwali. Should I create provision? Yes or no? Yes, sir. See, you have to create the, I'll tell you why, because the standard tells AS 15 covers all employee benefits, legal and constructive. Constructive means legally you don't have to pay it, but like festival bonus, all of that, except share based payments. Are you following, guys? So any kind of employee benefits, even if it is, what to say, informal practice, I'm paying, employee cost vanda standard is covered. Are you following, guys? Next, what are the kind of employee benefits covered? Those 4 types of employee benefits. Whether a formal employee-employee relationship is necessary, agreement, no need. It can even be oral relationship. Fine. I'll go to the next last possible question you can have in the standard. Whether all these are covered? Yes, these are everything for employees are covered. Now this is the next type of sum. Illustration 7. There are 2 sums in the study mat. The 2 possible sums that requires computation. One is this, which we saw, and then the next one is illustration 7. Like this, there are 2 sums. One illustration 7. One is additional question, 1 question. That is the last concept. If I teach that, at least the sums part is done. Follow, guys. All this while I was teaching you in that Ambrish example what I do on the liability side. Correct? What you do on the liability side. That is what you create provision here. That's 6 lakhs, find the present value. This money has to be invested. This investment will have an investment account. Investment account. What happens in this account is what is the next type of sum. Okay. For example, let's say you invested 1 lakh this year. Will the investment remain as it is? It will increase. What is that? Return. That is called some return I get. Let's say you got 10,000 rupees return. Are you following, guys? Then sometimes you will also have some, this money will be used. This 10,000, 1 lakh could be used, guys. Let's say in this 1 lakh I used 20,000. Again I invested 30,000 in the year ending, and closing you have how much? Closing investment 1 lakh 20,000. Correct? This is an investment account. This is what they will give you. They will give you all these values except one, and they will ask you to find that. They will tell opening investment 1 lakh, closing investment 1 lakh 20, interest earned this year is 10,000, additional investment made is 30,000. What is the amount used? 20,000. Are you following? For this we have some terms. What are the terms over here? This account, we have to focus only on this investment is called plan assets. That investment you make is called what, guys? Plan assets. I am just connecting that with technical terms in the standard. There is a logic for these terms, but I am not getting into the detail. Okay. Now, will you always get the same 10,000 that you expect? No. This is 10,000 is called actual return. Sometimes they will tell mutual fund is going to give 12,000, 12%. So, there are 2 returns here, actual return and expected return. When you invest somewhere, you expect to get 20% return, but you might get only 10%. So, expected is what you expect, actual is what you really get. So, now imagine that investment account, guys. Opening fair value of asset is the opening investment. That opening 1 lakh that we took, correct? Interest earned is the expected return. I will create starting itself what could be my possible return. Are you following? I told in this example, in this 20k was used. Why it's used? Maybe some other employee returned. Some other employee retired. So or he left. I took his. I sold this and paid him the money for gratuity. Correct? That is called benefits paid. Asset with I am paying benefits. Every year I have to add new investment, new contribution. That's called add contributions made. Are you following, guys? Clear? Closing value is what? Closing investment. Now, if I just tell you, look at this. If I tell you 1,50,000 is the opening investment. This year you added another 50,000. I expected to get a return of 20,000. I used 30,000, and year ending my closing balance is given. Closing investment is given at 1 lakh. Let's say 1,20,000. What is the balancing figure?
70,000.
Which side? Credit side. Okay, let's not keep 1,20,000, then let's keep 1,07,000. Okay, 1,40,000, guys. Assume closing is 1,40,000. Closing, this will be,
50,000.
what is this 50? This is the, what is this, sir? This is again some income which I withdrew. So this is called, this difference is called changes in return. Maybe it's the fair value change of investment. Maybe it's that or any other. That's called actual return. That actual return only you are withdrawing for yourself. This is not the actual core logic, guys. Logic itself I need 1 hour. I am just trying to create a structure for you so that we can do the sum easily. Are you following? I am only focusing exam over here. Are you following? This is not the way you learn the standard if you are going to do fully. But example is enough. Are you understanding? So be aware of this dabba. Opening fair value is opening value of asset. Interest earned is the what I could accrual concept. What I expect. Benefits paid is what is going out of this fund planned asset. Contribution is the what is the additional contribution. Changes in return is the difference. If there is a closing fair value of asset. In all of this, they will give everything in question. One will not be given. You have to find the missing value. That's it. Are you following, guys? With this background, let's go and do the sum. Let's do the sum. When you do the sum, you will get more clarity, guys. Look at this. On 1st April, the fair value of the planned asset is opening value. At least some purida. Opening is 1 lakh. In respect of a pension plan of some company, on 30th September, the plan paid out benefits of 19,000 and received inward contribution of, that means I had 1 lakh, I paid 19,000, I received, that's it. Easier. Putting into that format, guys. Next, on 31st March, the fair value of asset is 1,50,000 and the present value of defined benefit obligation was 1,49,920. What is fair value of asset? Closing balance. So if I prepare a ledger, opening is use the add 49,000, closing is 1,50,000. Are you for? So then what is this 1,47,920? This is the liability side provision. Liability side, the provision I made is 1,47,920. Although the corresponding assets today value is 1,50,000. Are you getting it, guys? Okay. Now, actuarial losses of the obligations for the year was 600. We will come to that later. It's a loss, we will leave it. On 1st April, company made the following estimate. What they thought would be the return using the prevailing market price, and they thought they will get 10.25% as return on the value that they have. Correct? So, this say I will write my expected return. Come down here. What is the expected return now? No, how much did they have? This compounding I will come to it later. Okay, we will prepare ledger itself, guys. What was the opening? 1 lakh. What was the contribution made? 40. Benefit 19,000. 1 lakh 50 is the. So now if I can write what comes here, that is my expected return. You will find the actual return. Now follow. Expected return is given how much, guys? 10.25%. When was this paid out benefits and contribution made? On 30th of September. Correct? That means that is after how many months? 6 months. That means for the first 6 months you had. After 6 months it is 1 lakh plus 49,000 minus 19,000. How much? 1 lakh 30,000. So my return will change. So on that computation, they use compounding. What is a compounding which is not actually required. If you look at this, first 6 months straightforward. 1 lakh into. We need battery. Okay. Is there battery there? Yeah, get that battery. I can scream guys, but naalik law marathon cancel edu. இந்த மாதிரி சரி அது கொடுங்க, அது ஒர்க்காக தான் பார்க்கலாம். No problem, no problem. So this way. Hello, audible guys? Yeah, perfect. So now, first 6 months is 1 lakh into 10.25% into 6 by 12. Are you getting 10,250? Into they are using 12 months compounded rate. I will come to that later. Alternatively, above could be solved without giving compounded effect. Actually, this is not right because question has not told you to compound. So you cannot compound. So I will only take straightforward 6 months, but they are using compound rate. Okay. So you get how much? 10,250 if you compound every 6 months. This is for the whole year. You did 12 by 12, correct? Additionally, you invested how much? 30,000. So 30,000 into 6 by 12 into. They are again, it's basically they are doing into 10.25%. Again, compounded every 6 months. You will get not 1.5. You will get some amount lesser. 1.537. Our compounded now you are getting different. So your expected return is how much? 11,750. So if I come here and write 11,750, now what is the balancing figure here? So return with this add opening. Return 10,250, compound every 6 months 1.5. Expected return on plan assets 11,750. How much are you getting, guys? 8250. Why is it coming like that? Okay, this return part have you understood, guys? 11,000. What you can do in exam is without using compound effect means you will straight away do 10.25%. You will get a slightly different answer. Now fair value of assets, what let's say they're doing 31st March is 1,50,000. Opening is 1,49,000. Addition this side, correct? Benefits paid is 19,000. Expected return is 11,750 will come here. So you get how much, guys? 8250. Got it. So you got 8250. But you expected how much? 11,250. So you expected 11,750. You got an additional return of 8250. So what is the total return you got? 11,750 plus 8250 is how much? 20,000. Are you following up? I expected 11,750. You got only 8250. So the total return, what is the actual return I got totally is 11,750 plus 8250. You get 20,000. Are you following now, guys? Clear up? Easy. Leave the statement format. Statement he's added both. Are you getting it? This is what I am expecting, but actually I got 8250 more. So I will add both. Are you understanding, guys? Clear? Now, if you do compounding, this amount will slightly change. Everyone knows how to compute compound interest. You have a formula. This is simple interest. 10.25 into 1 plus 1 equation is there, guys. We will not get into it. 1 plus 1 plus I to the power n by minus 1. 1 plus I power n. So normal minus 1. Okay, normal minus 1. But I will personally prefer, unless in the question they ask you to use compounding, you don't do compounding. Question like compounding, then how can you take compounding? If they say compounding, you find compound, otherwise alternatively solve without giving compounding rate. Are you following? Now let's do one more sum in the same thing for you to get more confidence in this. Practically we have the same question. Look at this question. It's much more easier. Look at this. Look at the ledger. Opening is how much, guys? 8 lakhs. Exam, how do I get marks? Opening 8 lakhs. Closing 11 lakh 40,000. Employer contribution 2 lakh. Benefits paid is, what is the difference? 2 lakh 60 is coming here up. This is my actual return. That's it, answer. Are you following? Are you getting this, guys? Exam in MCQ, you can solve 2 lakh 60. Are you following? Remember this template where opening comes this side, closing this side, contribution here, benefit here, and then difference. That's it. I expected actual. That is enough. Logic is much more immense, guys. You have to spend 2-3 hours. I am focusing only on exam and how do you get that 4-5 marks? Clear? Next, one more sum is there. Adhe question. Can you see? They have changed the numbers. Now quickly if I do it. Fair value of asset in respect of employees opening is 2 lakhs. Benefits is 25,000. Contribution is 55,000. Fair value of assets closing is 3 lakhs. I will apply this percentage. Again 6 months. Correct? They would have done again compounding equal to compounded every 6 months. He would have got interest as 22,000. So if I put 20, just to match the study mat answer, if I put 22 here, what do you get here? Quickly. 2 lakhs plus 55 plus 22 minus 25 minus 3 lakhs. 48,000. This is the additional return. What you expected is 22. 22 plus 48 is how much? 70,000. Answer is 70,000. That's it. Are you following, guys? Clear? That's all. Exam purpose perspective I am doing. This fellow again used compounded, guys. Engeya question la kuduthirukanga compounding. No. So if you use simple interest, just give a note. Otherwise, you learn this part of compounding. This compounding has nothing to do with AS15. Foundation, compounding principle, all of that. You convert the simple interest rate to compounded rate. Are you following, guys? That's it. These are at least 2 possible sums that can come. Remaining sums over here are theory based. Are you following, guys? Clear? Understanding the standard, at least the study mat, the 2 main sums. This is the asset. What we did earlier was the liability part, guys. Amount debited to P&L and the current service cost. What is past service cost? Change in actual assumption. Gain on curtailment I am not explaining. We don't have sums over that. I will explain only in the detailed class. Here I am focusing. Study mat sums, do you know the answer? Are you following, guys? Clear? Are you understanding? Yes, everybody clearing? Those 2 sums at least to study and go. That Ambrish should have. The 24 lakh, 30 lakhs and this expected, and I think initially they will ask these sums only. Are you following? Clear? With this we are done with AS15. It's only an exam oriented discussion. Perfect. How many of you decided to skip AS15? At least these sums you will learn now. Understood these sums? These 2 sums you got it? That's it. If that comes in exam 5 marks, you will send me a thank you in WhatsApp. Okay. Fine. Fine. Last half an hour we have. We will just run through amalgamation in 30 minutes. I have never tried, but let's try it. Okay. Fine. At least few important mistakes that you can avoid. Those things I'll explain, or common mistakes that happen in amalgamation. Just a disclaimer, this 30 minutes, those who know amalgamation, you watch recording. If you don't know amalgamation, you could have watched AS15, you don't know AS15, you could have seen AS15, you would have understood. How many of you didn't even study AS15 till now? Now only you are learning AS15 in last 1 hour. You understood those sums, what to do? At least with base logic, guys. Super. That means the purpose of this 1 hour of AS15 is done. Okay. Clear? Yeah, yes. See, everybody who has to leave because it's getting late or because you are getting bored, you can happily walk out. After half an hour, we will have the last survivors. Okay. Day 1, we started off with 300 students from 3rd floor and ground floor. Now last day, we have only ground floor with half room, but it's always expected, guys. Okay. Expected loss or not loss, but you are the survivors. How many of you? 50 of you here or 60 of you, whatever. Okay. Amalgamation. There are 3 types of sums you can expect. In any sum or any exam, first there will be a sum. Computation of purchase consideration. At least that part I can do. Next is accounting in books of selling company, accounting in books of buying company. This company is known as transfer, this is known as transferee company. Follow. 30 minutes only, guys. We will just finish few concepts, few key areas where you can do mistakes, and purchase consideration computation part. Okay. Yeah. Follow. Accounting in books of buying company, you have 2 methods that you follow. One is called merger, or also we use the method called pooling of interest method. Other one is called purchase method. If you get a 14 mark sum where they ask you to do all the 3, compute PC, selling company and buying company, it all depends on PC. If PC is wrong, full sum is gone. Okay. For purchase computation, you have 2 methods. What are the 2 methods? Net payments method. That's it. This is the scope of amalgamation. AS14. AS14 is applicable in accounting of whose books? AS4 is applicable only for accounting in books of buying company. AS14 is not applicable for accounting in books of selling company or transferor company. Why? Accounting standards are applicable when entity has assumption of going concern. In accounting selling company books, going concern is not there. So you can account in any manner in such a way that the balance sheet becomes 0 and the shareholders are settled. I'll come to PC in a moment. In selling company, we'll quickly finish, guys. What are the steps I have to do in selling company books? Step 1. I will transfer all assets and liabilities. Balance sheet la irukra all assets and liabilities will be transferred to an account called realization account. At what value? At book value. Whatever happens, common mistake they do, number 1, people transfer at agreed value. The intention of this step is to make the assets and liabilities 0, make the balance sheet 0. So my balance sheet has share capital, reserves and surplus, liabilities, assets. Now I have transferred all assets. What is the entry for transferring assets, sir? Assets should be no markup. Assets should become 0. Yes, so I have to credit assets, sir. Yes, So debit what? So I will write here 2 assets. That's it. Are you following? Liability should become 0. So entry is liability will be debited up. So liability account debit. So I will credit to realization. Which side? Debit side. By 1 second. By liabilities. Correct only no guys. Yes. That's it. I don't mug up entries. This is the logic I use. So you will not get confused in exam. At this point what happens? Your assets will become 0. Liabilities becomes 0. Super. Now still balance sheet is not yet 0. I have share capital and reserves and surplus. So share capital and reserves and surplus should become 0. Means this also I should transfer. So now I will transfer share capital and as given in balance sheet as it is to another account called shareholders account. Equity na equity, preference na preference, separate account. Preference shareholders account, equity. Reserves will come to whom? Equity. So here I will write down how to close this. This should become 0. So equity share capital account debit, reserves and surplus account debit to equity shareholders account. No mugging up. By equity share capital, by reserves and surplus, XXX whatever. So now at the end of the stage 2, step 2, balance sheet total becomes 0. Are you following? Now I have realization account, assets, liabilities. Let's say asset comes to 700. Let's say liabilities are 400. Let's say equity share capital is 200, reserves is. Appo tally agum. Balance sheet. Correct off. I can't randomly write some numbers. Okay. So prepare balance sheet guys. Assets 700, liability 400, share capital 200, reserves 100. For you to get confidence. Balance sheet tally. Now I have to settle my shareholders. Now look at the logic. My step 3 is basically receipt of purchase consideration. Now before this step, okay, receipt of purchase consideration. Let's say I am receiving purchase consideration of 500. Now I am receiving purchase consideration. So I am receiving an asset from whom? From the transferee company or selling buying company. So for me receivable is whom? Buying company. See, I am in selling company books. So for me receivable is from buying company. So entry will be buying company account debit. So I will open one more ledger. Buying company account, whatever account, I will put, let's say 100. Oh, there, what is the consideration we say? 500. They will pay me 500 rupees to realization account. What is the logic here? For the assets and liabilities that he is taking over, he is giving me 500. That means if I sold the assets, I would have got 700 and I settled the liability, I would have paid 400. I would have been left only with, but I am getting 500. So I am getting more than what I expected because PC is higher for some reason. So I will write buying company, how much guys? 500. That means after he takes over all the assets and liabilities and I get 500, I am left with how much profit? 500 plus 400, 900 minus 700. 200 is the excess I got more than what I thought. See, if you got exactly 300, asset would have been enough to pay my liabilities, whatever. So here I am getting 500. So you got extra 200. This extra 200 profit belongs to whom? So I will transfer it to my equity shareholders. I will write plus 200. Correct? So now my shareholders should already get 200 plus 100. How much? 300 plus another 200. So totally, now I have to pay him this 500. That 500 I will write it over here. They are settled and the sum gets over. Are you guys following? Clear? This is what happens in selling company books. Sir, what if there are some other transactions? Whatever transactions are there extra, whatever profit or loss that we get extra, who has to bear that loss? Selling company. So let's say for example, selling company had some expense on settlement, expense of realization. What is the normal entry for expense? Expense account debit to cash or bank. But in the expense account I transfer everything to realization. So I will write to bank. Sometimes I will not transfer only bank. So bank will be kept in a separate account, bank account. So I don't have expense realization to bank. Here I will write down to expense, to bank, to bank. In bracket I will write down expense for me to know. Let's say the expense is 50. That means my profit now is 150. So if I have 150 here, I will get only 150. Are you following, guys? In that case, what will happen? I will give them only 450. How sir I am getting PC 500? I used in that 50 for expense. Like this, whatever adjustment comes, profit or loss on any transaction gets accounted in my realization account. All the profit loss gets accounted. That particular profit loss goes here. Balance is settled. It will come in such a way that realization account will close. Shareholder account will absolutely tally with the buying company whatever they are paying. Are you following, guys? That difference only is my profit or loss. Even if your sum is wrong, it should tally in a wrong way. Because every debit and credit should have an impact of. If you pass a new adjustment, there should be debit credit. This is accounting in books of selling company. I am just giving you brief, at least for to revise the steps at least. Okay. Purchase consideration, PC. PC, if you see, we have this. I will do at least one sum in each if possible. Net asset and payments. Basically, net asset is you have to compute assets taken over. Not all assets. Assets taken over at agreed value, because he told I will pay you only so much for this assets, minus liabilities at agreed value. Let's say he is paying me. I don't care what the balance sheet. The biggest confusion is students will take, Yenga sir book value, I am confused. In PC, the asset should be whatever is the taken over value. Don't worry about balance sheet value. If no takeover value is given, if they say all assets are taken over, then I will take balance sheet value. Whatever 750. Liabilities, whichever liabilities taken over, there will be adjustment. Liabilities are paid 20% more. I am taking only half the liabilities. Like net assets, how you compute, let's say 300. Then the difference 450 is the purchase consideration that will be paid. Sometimes payments method will be used. Sometimes combination of both will be used. Payments method they will tell, for every one share of yours I will give you 2 shares of so much. We multiply and we find out. Sometimes this they will tell this 450 will be paid in combination of shares and this part you have to be very careful, because if this is wrong, full sum is wrong, gone. Are you following, guys? Clear? In this computation stuff, sometimes they will give you super profits method, this method, that method. Let me take one. Some super profit method. Do we have that question ready here? No. Okay, leave it. Fine. Where is amalgamation? Module 3. Okay, fine. I'm just seeing if there's any sum for PC. Practical last is PC, yeah? Super profit is there. No, then we'll leave it. I'll just seeing if there's any sum. Yes, Riya. Yeah, PC, yeah. Illustration. Just to do one sum, then we'll go to buying company. Yeah, fine. Let's take illustration 4, guys. Just to get PC one sum, and then I'll go to buying company and give you some brief points where we make mistakes. One of the most common mistake, rank number 1 in the highest number of mistakes is coming in buying company. Everybody will be aware of that mistake also. I will come to that. 2-letter word. What is it? Buying company. Okay, leave that. So Neil and Gagan amalgamated to form a new company. So Neil and Gagan both are selling company. Both should be closed. New company is Neil plus Gagan. They are given the assets and liabilities. The following is the additional information. Neil and Gagan are to be revalued as follows. They are given the new revalued agreed value. Purchase consideration is discharged as follows. By issuing 24,000 equity shares of 25 each in proportion of their profitability in the last 2 years. Profitability கொடுத்துட்டான். So whatever is the PC that I am going to compute will be given to Neil and Gagan in the ratio of 4,75,000 is to 5,25,000. And they are also saying issue 12% preference shares of 10 each at par to provide income of 8% return of net assets in the business after revaluation of assets. Good sum for PC. The whole sum is about computation of purchase consideration. Super. Now we have to do computation of net assets first. They are taking over which all assets, sir? Plant and machinery and building alone they are taking over. Liabilities, do I have anything? Current liabilities is there and current assets. Are all assets taken over? Yes. All assets and liabilities. So when I compute my net assets first, I will take plant and machinery and building at the new agreed value which is there in the question, add current assets minus current liabilities. This is my net assets. Correct?
Yes, sir.
Now this is the net assets. The total is 8,40,000 and 9,24,000. Come back on top. Purchase consideration. Profit is given. Okay, where is the total PC? Yeah. So they are saying the purchase consideration discharge as follows. Give equity shares of so much, and then for the balance, issue 12% preference shares of 10 paid up to provide income, 8% return of net assets after revaluation of assets. Okay. So what is my net assets here? 8,40,000 into 8% is how much? 67,200. 9,24,000 into 8%. 73,920. This should be the return that they should get. 67,200 and 73,920. For this they are going to give 12%. So if I divide this by 12%, you will get how much, guys? 5,60,000 and 6,16,000. So what is this? 5,60,000 into 12% gives me 67,200. That should be the income they get. So how much I am going to give them? 8,40,000 plus preference has to be issued as 5,60,000 and 6,16,000. So preference shares is 5,60,000 and 6,16,000. Is this clear, guys?
Yes, sir.
How do I compute equity shares, sir? Yeah, so now equity shares, if you see, the amount of equity shares I am giving should compensate how much? No. What is the total net assets, sir? 8,45,000. One second. Equity shares? Separate condition. What is equity shares? 24,000 equity shares of 25 each. So 24,000 in the ratio of 475 and 5,25,000. That you will get how much, guys? Where is that? Yeah. So this amount 11,400 and 12,600. They are issued at what price? 25 each. So I will just multiply with 25 each. You will get 2,85,000 and 3,15,000. So that net assets here is computed not for PC. It's only for the purpose of computing preference shares given, and then equity shares straightforward adjustment. You add these two, you will get 8,45,000, 9,31,000. This is my total PC. This can be a separate 6-mark question or maybe even 5-mark question if it's compulsory for PC computation. Like this, there are some 3-4 sums for PC that you will be aware of. Are you following, guys?
Yes,
much more detailed over here. So PC to an extent we just did one sum. Coming to last, accounting in the books of, we have to find out if it's merger or purchase. There are 5 conditions, guys. What are the 5 conditions? 5 conditions should be taken over. assets and liabilities. What is it? All assets and liabilities should be. Guys, accounts has 10 marks theory. Sometimes they will ask even theory, guys. The most common theory question in amalgamation is what are the 5 conditions for merger? All assets and liabilities taken over, and assets and liabilities taken over at book value. Then 2, shareholders. At least 90% of shareholders of selling company will become shareholders of buying company. One more is the consideration payable to shareholders should be only in the form of shares. No, should in the form of equity shares. For fractional shares, exception you can give what, guys? Cash. And next condition, the business should be carried on. Same line of selling company business should be carried on. How many conditions over? 5 I finished. 3 points. For assets and liabilities, we have 2 conditions related to assets and liabilities. One is all assets and liabilities are taken over. They are taken over at book value. At least 90% of shareholders continue to be shareholders here, and they are given consideration only in the form of equity shares, and the business should only if all the 5 are met. You follow a method called, it's like 2 families coming together. There is no new business. Same the business pandra mai. Only in family, if you see, you will call all the relatives. 90% will come. Then the same business they will continue. Okay, all assets and liabilities are taken over means what? They continue together. Are you following, guys? If it's a marriage that you don't like, then all disturbances will come. All relatives will not come. 90% will not come. All of that, just for you to remember the fun of the 5 points. Now, yes. Which one here? Huh? Fractional shares. Fractional shares mattu, when I do swap ratio, sometimes it will come 0.2. That mattu I am allowed to give cash. Now, if the condition is not met, you are lucky if they give follow purchase method or follow merger. If I follow purchase method, only 3 journals, guys. In the journals, if you understand, you can do accounting. First journal, I am buying the company. What is the entry for buying the company? I don't like the entry mug-up, guys. What is the entry normally when you buy an asset? Purchase account debit. 2 creditors. Correct? Normal entry for purchasing is what? Purchase to? What I purchased here? So entry is business purchase account. Who is my creditor here? Selling company. So I am not going to pay selling company. I will pay the liquidator of selling company. So to liquidator of selling company. That's how the entry itself is made. Normal purchase. When you settle the creditor, what is the entry you pass? Creditor to bank. So entry will be liquidator of selling company account debit to cash or bank. Correct? But here, this is where we make the most common mistake. Now this, what you settle them depends on what you pay. Sometimes you can pay them. Sometimes you will pay. Sometimes you will pay. Sometimes you will pay. This is not the common mistake. The common mistake is sometimes they will tell equity shares are issued at premium at 125. Then they will tell computation is 12,000 shares into 125. Then what mistake we do most common here is we forget to credit what? Securities premium. Examiner releases something called, ICA releases something called examiner comments before they used to release. What are the common mistakes? In the top common mistake in the exam in amalgamation chapter, number 1 record for 10 years is forgetting securities premium by most number of students, guys. I'm not joking. This is one place how in consolidation you add holding and subsidiary in the exam you will forget it. This is much more severe. This, if you do that mistake, balance sheet won't tally, you can find out. This balance sheet will tally, you will think it's correct. It is one of the most common mistakes. When this will come, remember, only when shares are issued at a premium. Why you get confused? When you go to selling company books accounting, this will not come. That time the entry is, I will write buying company account debit to realization. Then I will write whatever I am receiving, equity share capital account debit, preference share account debit to buying company. So this premium is not accounted in books of selling company. When a full sum comes, first you will do PC, then you will remember, okay, premium will come. Next you will do selling company accounting, you will forget about premium. Then in the flow when you come here, you forget to credit securities premium. Remember, it comes only when shares are issued at a premium. These are the two entries, first and third. Second entry is what assets I am taking over. And the PC computation will come. Whatever assets you are taking over, assets account debit, you will take only taken over assets at agreed value. Two liabilities same, taken over at agreed value. Then the difference, then I will write two. That is settlement. The business is purchased by taking assets and liabilities. Two, I will write two business purchase, which is usually my purchase consideration. Any difference that comes here, difference on debit side is goodwill. That means you paid more for assets. Difference on credit side is my capital reserve. Are you guys able to follow, guys? When I come to merger method, my entry 1 will be same. Entry 3 also will be same. What will change is entry 2. Correct? Entry 2 only will change. What's my entry 2? Assets will be debited at book value. Because in merger, one of the conditions says assets and liabilities should be taken over at book value. So I will debit book value. Liabilities also I will credit only at book value. Are you following? Then I will write two business purchase, write the purchase consideration amount. Can you visualize, guys? Debit assets at book value, credit liabilities at book value, credit business purchase. Now difference is not goodwill or capital reserve. Whatever difference you get here will be adjusted in my reserves of the selling company, because here you take over even reserves of selling company. You take over the whole business as it is. For example, let's say assets is 70, two liabilities 30, two business purchase, let's say 20. What is the difference?
20.
This 20 will be reserves of selling company. If this is 90, then the difference is 50. Not goodwill. Goodwill ever. I will debit. That means reserves of selling company is not there. I will debit reserves of. Basically it's a loss, but it's not a loss. We both are coming together. Your loss I will bear. I will reduce with my reserves. Are you following? The third unique case is, let's say business purchase is 10. Is 10, guys. What is my reserves? 30. Correct? But what if in selling company's balance sheet, irkura reserve say 20? How can I take 30? Are you following, guys? Look at the scenarios. First asset 70, 30, whatever business purchase, whatever comes on credit side to reserves of selling company 20. If it's on debit side, reserves of buying company. I'm not getting into logic. Reserves of buying company. But if the credit is coming on the credit side, where the amount over here is more than the reserves of selling company, then I can write only selling company 20. I still have a difference of, it's a more gain than what is already there in reserve. So that excess will be capital reserve alone will come if the credit side balance is much more than the reserves of selling company's reserves. That excess alone will come as capital reserve. Are you following, guys? This is one. Sometimes they will give in the question something called statutory reserves. If they give statutory reserves, that means because of some statutory norm, these reserves have to be maintained. Whether it is merger or these reserves should be taken over. So as it is, which is in selling company, just like how you take over liability and assets, these should also be taken over. So here I will write down 2. Whatever value is there in the balance sheet, I will take over. Then the difference after this will go to reserves of buying company or reserves of selling company or capital reserve. Are you following? As it is, I will take. For that, they will give an entry also called amalgamation adjustment account to statutory reserve. This statutory reserve will be taken over in both methods. Even in purchase method or merger method, reserve will be taken over as it is and it will continue. Are you following, guys? Clear? These are the most common things which come in these three entries. Of course, there are more adjustments, expenses, these adjustments and all. But this gives the overview of amalgamation. At least are you able to visualize how the sum will flow? Now look at this. In buying company books, how many entries we are passing? Main 3 entries. Minimum will be 3. All these 3 entries has debit and credit.
Yes, sir.
Now, existing buying company will already have a balance sheet of.
Yes, sir.
Now I am adding just 3 more entries or 4 more entries or 5 more entries impact. Everything has a debit and credit.
Yes,
then the new amalgamated balance sheet should tally. Even if your entries are wrong.
Yes, sir.
Balance sheet not tallying should not be a question. Wrong total paravala. But at least it should tally because existing balance sheet, whether in consolidation or amalgamation, existing balance sheet has a tallied. The new entries has equal debit, equal credit, then balance sheet cannot be without tallying. That is the basic art. Are you following, guys? Okay. So with this we are done with what? Amalgamation revision also. Okay. Fine. I know we didn't do any sum. We just did 30 minutes of revising the brief points. Was it of any use?
Yes,
Fine. Apart from this, other topics like AS 15, 23, 27 or consolidation is available on available on YouTube, guys. You can go check if you have the time. I don't think you'll have the time for now and all. So whatever you know, though if you're some YouTube fellow who's watching the marathon till now, till the end you are still lasting, like the survivors over here. I think how many of you here, 80 or 85 students are here, surveyed from 300 came to about 75 to 80. For the last how many days left for exam, whenever you are watching this, 20 days, 15 days, 10 days, one simple trick, now don't learn anything new. Padichada revise பண்ணுங்க. Sir, நான் எதுமே படிக்கல sir. Then I can't do anything. Whatever you studied in the remaining days, minimum 75% of your time should be for revision. And if you want to learn new things, that should be only for 25% of the time. Maximum possible, padichada you revise and you become strong. And ensure everybody, if you are watching this video, minimum. Sir, what is the one advice I should take home from you? One thing I should follow. Only one I will tell you. You have to write wherever you want, guys. There are so many people providing mock test. At least 100 marks mock test is mandatory before exam. Otherwise, your exam will become the mock test. I can't do it. That is, remember 12th standard board exams. Before that, how many tests you wrote? Test. Now, how many of you so far till now didn't write even 100 mark test? So, can you do that, guys? Is it fair? You're writing CA inter, which is important. CA inter exam or 12th board? CA inter. 12th board you wrote so many mock tests. That means it's practicing. CA inter that means exam becomes your mock test. That means you will write only next attempt. I don't mean to say that, but even if you are not prepared fully, allocate time. Go write the mock test. House, somewhere you write. That is the only advice I give. That is what I got when I was a student. That is what worked for me. That test will reveal a lot of things for you. It's okay. Even if you get 25 in the test and fail, it doesn't matter. School half year itself you fail, nobody cares. This test nobody has to know, guys. It's just for you to, okay, when 3 hours exam atmosphere to create. That's one thing if you have time. Sir, I'm watching the mock test 2 days, this marathon, 2 days before exam. No. If you have, let's say, last 30 days, 20 days left, then you have to do it, guys. That's it. With this, we close our 20 hours of marathon. Thank you, everybody, for staying till here. Fine. Yeah. I'll sign off. Yeah. Thank you. Bye-bye.